Hey traders, and welcome everyone to our Wednesday live stream. How are you guys doing today? Welcome, welcome, welcome. Let me know in the chat how's your trading week treating you. In the meantime, I'm trying to log in into my platform. It's been giving me some issues since the morning to trade. And there we go. I think we are good to go. How was a Black Friday treating Black Friday week treating every single one of you? Let me know in the chat. Let me guys know in the chat. There we go. Fantastic. Everything is should be working right now. Great. Great, great. Well, welcome. Week is good. Got only one trade. I mean, this is good. This is good. Some one good trade a week, one good trade a day. Depending on your trading system is exactly what you need to stay profitable. Good morning. Hey from Austria. Good morning. Hey Infinity. Good to see you. Good to see every single one of you. Can you let me know if the sound is good? Because we have something very special for you and today. And because of this, I am on my second laptop and the sound can be a little bit different than usual. So let me know, please, if everything is working fine. Please let me know if everything is working fine. Good evening from India. Welcome, welcome, hello. Good morning. Sound is good. Fantastic, fantastic. Thank you so much for confirming. We have a really amazing packed day today. We are going to have several strategy reveals. So guys, please stay on because I have very something special for you very soon. So please make sure that you're alive. We are still waiting for more people to join. And just in about 30 minutes, you're gonna get a huge surprise. So I'm really looking forward for that. So please make sure that you stay on because you definitely don't want to miss it out. We do have the live trading sessions coming and also account giveaways due to the Black Friday. So please make sure that you registered for the giveaways. If you haven't done it yet, the link is in the comments, the link is in the chat. You go to the chat, you click on the link on the gleam.io, you register for the giveaway to make sure that you can win the free accounts with the fibers. Besides, we have the huge promotion going, guys. We have an amazing promotions where every single one of you can purchase new accounts based with the discounts for the Black Friday, right? It's your favorite week of the year, and you know that the fibers never do discounts because, and this, in my personal opinion, this shows the state of the company, right? Because there are some companies, we're not going to call out names, but they constantly do discount, this, that's, very cheap accounts. It means that the blow, like the amount of people that blow their accounts and need to repurchase is massive. With the fivers, people get funded, and the whole idea of the fivers and the goal of the fivers is to make sure that you guys are profitable. This is why we are also here 4 days a week, streaming, live trading, explaining the strategy, answering your questions so you can actually get profitable with the fivers and stay profitable. Because getting profitable and staying profitable are the two different things. So make sure that you register for the giveaway and your discounts are also on. The Black Friday promotions are also live. So amazing. Good evening. Good evening. Fantastic. So what are you guys trading on today? Let me know in the chat. What are you trading on? What are your eyes on today? What are your eyes on? Let me know in the chat. Fantastic. I'm really happy that our audio is working, which means we're going to have some fun today. Just about 30 minutes from now. That's fantastic. So what are you guys trading? After actually checking my performance for the past months, I realized that 75% of my total profits come from only several assets. And that's gold, that's Ethereum, EUR, and pound. So I realistically have only 4 assets that bring me 75% of my total profit for the past months. And because of this, after checking this, I cut my focus for this last month of the year in December to only 4 assets. So EUR, pound, gold, and Ethereum. That's what we're gonna be focusing on today. Looking at the longs on silver. Good morning, Louis. Good to see you. Good to see you. Euro short, Euro USD, GBP, JPY, EU. Lots of you are looking at the Euro USD. I was also looking at the shorts on the Euro USD. Give me just one moment and we're gonna have a look at this together as well. So I was looking at the shorts on Euro already here. If we look at the 4 hour time frame, the reasons I was looking for shorts is if we look at the 4 hour time frame and we place the volume profile over the whole move to the downside, what you will be able to see is that we have the huge high volume node right here, and that's the only out of two high volume nodes across this whole downwards movement. So we have the high volume node here, apologies, right here, and we have the high volume node right here, right? So we have two of those. And the price has accumulated this one, reached the other one, and right now dropping from this zone of volume. Now, I was looking for the shorts, but I was thinking already that the price might go a little bit further. So I'm not gonna pretend I did not take the short. I wasn't 100% confident in that short. I was, however, in the longs right here after the price broke to the upside, retested, and the price went back high. So I did not take the short. Perhaps if the price goes backwards here, I still am looking for taking short on Euro USD or even a little bit further. So I have these two scenarios for today. So our volume zone starts from approximately 15 to 230 to 1600 on Euro USD quotes on Rwanda. And if we go closer for the 30-minute time frame, we'll see the point of control of the day. So the maximum volume for the whole day today so far, the beginning of Asian and also London session is at 15,850 right here. So that's our maximum volume level. And if the price would give me the retest of this, I might still take short, because what we can see is that technically our uptrend wasn't yet broken. The price keeps going up because although we had the drop, we keep seeing that the price creates the higher lows and the higher highs. So we are technically moving in a certain channel back to the upside still. So my opinion is that the shorts are still on. I mean, still can be taken. Let's say like this, when the price gives us another retest of the same zone as previously. So let me just, there we go. Like this. So I'm looking at this, at least the retest of 15,850 to perhaps even 600. So let me just adjust it to make it a little bit more clear as well. And then on the 4 hours, we're gonna have the perfect alignment also with this high volume node from the higher time frame. So either here and then the drop towards 15,360, 15,400, or all the way 1600 and then the drop. And then if I would be taken short, depending on the confirmations, but if I would be taken short, my target would be from 15,400 level to 15,250, this zone here. The reason is of this high volume node. The price already accumulated volume before. We do have a big zone of consolidation here. So if I'm going to place my volume profile over this consolidation, we should get the value area, 370 approximately. So maybe slightly lower, just like this. And then seeing how the volume was distributed up until now, yeah, that's about right. So that's something that I consider for Euro USD for today. So are you guys looking for the longs or shorts? Euro USD, Victor is saying Euro USD 15,110. So you are looking for the price to return all the way at the bottom. Possible? On the 4-hour time frame, I'm not really expecting the price necessarily to go all the way down. If the price goes all the way down, then I'm still looking for it to reach the previous lows here. So I was actually looking for Euro USD to go even lower when we were here and testing the previous lows. So I was expecting that if the price wouldn't go further down up, I was thinking about something like this before. So after we tested this weekly point of control, the continuation to the downside, but afterwards it started just going sideways, and then we finally did go to the upside. But this zone here is something that I had my eyes on already from the beginning of November, actually, the mid of November. Right. How to join the giveaway? The giveaway link is in the chat. So you go to the chat and you click on the link which was shared just right here. Let me just pop it up. You go by this link, you register to the giveaway, you fill in the details, and you will have a chance of winning free accounts with the Fivers based on the Black Friday week promotion. Gold, gold. Okay, we first had lots of requests for euro, and now of course everyone is looking into gold. So let's have a look at this one. On this laptop, I don't have their trading view up installed. Just doing it through the browser. For gold, I was looking for these longs already since basically the 20th of November. So I was looking for this continuation to the upside already since then. What we can see right now is that gold reached my zone for shorts. I was looking into these shorts yesterday, so I had the consideration for the price to reach this level here and then go back down, which it had an attempt to doing so. So the price tried going back and then ended up consolidating. We are now going back higher and we broke the previous highs here. We are staying above this high volume node. We are staying above all of these zones of volume. So if I'm going to place the volume profile over this whole move to the upside, we're going to see that we are still above the majority of the volume. So let me just adjust it quickly here, right? So the new volume was accumulated yesterday. This is a new volume area which we are now holding above. So we are technically just above this volume. And I do see the possibility that the price might still hang here for a little bit or try to get the rejection down, which it already did from this spike of volume here and from the spike of volume at 41.81 and then 4200. But realistically, I am looking for the upwards continuation for gold. So in my opinion, gold is long for today. I am not looking for any shorts until we reach approximately 4190 to 4200 area. So if we reach 4190 to 4200, that's from where I'm going to be looking for shorts, because this is also my goal zone from the 20th of November. We broke it down with you already on the 20th that I was looking for this upwards movement. If we reach this area, I'm going to be potentially looking for some pullback before maybe even continuation to the upside, depending on the situation. But normally from 4200, I'm still expecting some kind of pullback back to the downside eventually. Or perhaps it leads a reaction in the similar situation as yesterday, where we reach the zone, but we end up ranging instead of actually rejecting it lower. So that's my opinion on gold. Let me know in the chat, guys, what are you looking for gold for today? Are you buying? Are you selling? Are you long? Are you short? Or are you just sitting sideways and waiting? Let me see the chat. Yeah, so the other reason I'm looking for long on gold is actually silver. And someone was asking about the silver in the chat as well. Can't find it now. But the reason I'm looking for longs on gold is also silver. For those of you who are here for a while already with us, you know that I use both of those for the confirmations or excluding some ideas that I have. So what we see here is if we look at the volume distribution, we see that the price broke above the value area of this whole upwards movement. Breaking above the value area usually means that the market is accepting a higher price of the asset. So we are trading above the average field price. Hey, LJ. Ah, you're
Sure.
still in the background. Yeah, sure. So looking for the price to reject this high of this value area high of this whole movement to the upside. And although we are on the same highs as before, I'm still expecting the continuation to the upside for silver until approximately 52,940. Let me just check it quickly. Second moment. So at least 52,580 right here, and eventually 52,950. So this whole area here is another zone of where I'm expecting the rejection of the price of silver. So there we still have there's some space for the silver to grow. And as I'm expecting silver to grow, I'm also expecting gold to go up. And what I was checking is I was checking the silver futures quotes. So for the silver futures quotes, we clearly can see that we had the weekly point of control here yesterday as well. We have the daily point of control below the current price, and we have a whole bunch of space for the price to go up. So I'm definitely looking for continuation for longs for silver today. And as much as I'm looking for the silver continuation for longs, I'm also looking for gold longs. Approximately, yeah, here. So we have some space for the metals to rise still. Let me see if you guys are. I'm looking for the retracement. Cameron is saying if gold retraces to 4,100 or 4,130, then I will be looking for a buy. 4,100 or 4,130. I'd say 4,130 is realistic. 4,100. I think if the price goes to 4,100 for me, it's going to be a short actually, not long. Silver, yeah, there we go. Just broke it down. Let me know in the chat, guys, if you're looking for longs or shorts on gold and silver. I'm considering maybe I can take the long on silver as well because I'm in a long for gold. I'm thinking about taking the other one on silver too, possibly. Possibly, possibly. So, what else have you guys trading today? What else have you trading? The contract is changed automatically if you are trading on the futures. Hey, you.
Hello,
Heard
I'm
there is
back. I'm back. Yeah.
another natural disaster in Australia?
Yeah. Oh, dude, it's been Monday was chaos. That was ferocious. That was absolutely nuts. We had some more last night, not quite as bad as Monday at all. Monday was just bonkers. So right now it is disgustingly hot as well because the humidity is like 80%, and it's I don't
Wow.
know 32 whatever degrees. Tomorrow's meant to be 37.
Wow, that's
So I'm sure we're going to get another ripper of a storm coming through as well. You just stand outside and you're sweating instantly. It's terrible right now.
incredible.
So, but yeah, sorry, I was a bit late. Bit late getting back in the Uber. So
So the
Had to
Uber
go to my
was
friend's and help clean up her place after the storm. She couldn't get her power back on as well. She called me just before. I was like, oh no.
yeah.
She's too scared to use the switch box. So, I mean, she's 95. Fair enough. But yeah, all kicking off. How are you?
Yeah, I'm okay. I'm okay. How are you? How's the last trading week of November for you?
Yeah, not too bad. It feels really weird that we're coming to the end of the year.
Yeah, this.
I feel like it's just crept up out of nowhere, right? Um, and then I guess tomorrow's Thanksgiving, right? So holiday in America, and then typically Friday is quite slow after Thanksgiving. It's normally one of the lowest volume, lowest liquidity days in the year. So yeah, this week's been all right though. It's been good. Gold trade's been really nice, and Euro coming up the other day. That was really good.
Yeah,
Um,
yeah, yeah.
Yesterday, that was actually yeah. So yeah, it's going well. I don't know how December's going to be because it's all a big mess with the data and the Fed, and then we get non-farm payroll after that. So yeah,
And
I don't
the
know. Hopefully, there's a couple more
interest
weeks.
rate decision as well after that. So
Yeah,
from the
and
Fed.
the UK stuff today too. So yeah,
Yeah, well, it's gonna be an interesting month. I'm gonna just pop off for a second. I'm gonna get a coffee because I've
yeah,
been
absolutely. Yeah,
having
go
it
for it.
this morning as well, and I'll be
Yeah,
back. Miss you
yeah,
just in a second.
go for it. Go for it. Alrighty. Hello, guys. How we doing? How are we doing? So let me hide some of this stuff for now, just to make this a little bit cleaner. Um, whilst Anastasia's gone, I'm going to throw on a little bit of music as well in the background. Was this a That's an old one. Loved it. How are we all? Hope you're all well. Hope you're all well. This was the gold trade from yesterday, so I guess I'll start there. That started panning out nicely. So I did originally. So this was the topside target for me, about where this is basically the wider trend line from some of the other tops that comes in through here. And then that guy also goes down, if you guys recall, from the wick of the initial fall after we hit all-time highs. Oh god, that gotta get rid of that. Need to set it to just daily or something. So let's hide this stuff. So basically, it comes to the wick of that initial fall, right after we hit the all-time highs in gold, had that aggressive fall, the climb back up, and then fully dumped the following period. So that's just a touch higher from where we are now, about that 41.80. I did end up taking profit earlier in the day during Asia. So I ended up jumping out over here. So I had a bunch of other stuff to do today. Held that overnight. Nice bit of profit there. Took it through there. So right now I am looking for further upside in gold for this to actually complete the move and possibly get the breakthrough there. I think Jonathan's been talking about that the other night. I'm not sure what Anastasiia thinks of gold. I'll ask her when she gets back. But yeah, at some kind of reload, either break of these tops or another small dip if we get it. It looks as though we probably had that dip just now. But yeah, once that momentum shows again, I'll definitely jump in. How we doing? How we doing? Infinity, SK, MGN. How we going? Good to see you guys. Sorry, I'm a bit rushed today. Been running around all over the place, so I literally walked in the door. I was wearing a singlet, so I just chucked on this, so it's a bit more presentable, and then jumped on stream. So, Van asking, what do you think about Dixie, either technical and fundamental? So, can jump up to Dixie. Right now, let's go zoom out. We got a 4 hour. So this old purple band, we can sort of hide that a bit. Let's just decrease the opacity or whatever. No. Let's go to daily. Actually, we'll start there. So this big higher box was basically the higher sort of trading range that we've had over the past period, going back to 2023. So since then, this year, having Trump, if we go and hide this all again, we've come down to the bottom of that trading range, and now we've been sitting underneath it, right? With the whole sell dollar trade going on this year since Trump came in. We haven't fully capitulated, fallen right down. If you consider this the lower trading range, we've made it partway in, but we've definitely found support a few times. Now, that obviously comes down to the China Trump sort of trade talks going back and forth. All the Trump stuff going on with, whether he can do the tariffs, can't do the tariffs at 100%, 200%, 20%, back and forth. We've had the Fed, we've had the jobs numbers. This past period that we've seen the dollar rally obviously largely comes down to the government shutdown, right? So government shutdown means that none of the US workers are getting paid. They're not paying out the coupons on the bonds from the Treasury, and a bunch of the other just general outgoings from the US government in terms of US dollar terms, US dollar liquidity going into the market, basically just stalled out. So that means you're going to get a supply and demand issue with that. You've still got the demand for the dollar, but you're not getting that same supply going into the market that you would typically see, right? So with that, we've seen that squeeze in the dollar coming up, as well as being absent the US dollar data for some time. And we've also then seen dollar yen having an absolute flyer, right? So this has then been on the back of part of the Japanese related components, the Bank of Japan, Ministry of Finance, and people trying to gauge when or if they even can start to increase rates. We have seen the bond market starting to go up, but as far as the official rate, etc., they're not quite there. So that's helped to lift the overall dollar complex. Alongside that, we've gone back and forth with rate cut or no rate cut. So we were priced in at about 90% for the December cut. We came right down to 60, then down to 20. Now we're back up to like 80% again. And there's a very split decision in the Fed. So that's the full fundamental picture. Now, with government reopening again, we get a bunch of this data coming back. You will see that liquidity start to come into the market. We've also seen the Fed stopping the quantitative tightening. So it means they're basically keeping the current base of liquidity. They're not expanding it, but they're no longer reducing it as they were, letting the balance sheet roll off. The next portions are, there's been talk from Waller about injecting some liquidity and some capital into the banking system to help with the overnight repos. We've got the money that was tied up from the shutdown coming back into the market. The TGA, so the Treasury General Account, has also been stocked up for quite some time. So there's a lot of liquidity, US dollar liquidity, ready to be fired out into the market. So what that means overall is that you should see the dollar coming back lower as we get more of that liquidity coming back in. On top of that, we've got the Fed looking to continue to cut rates. Now, as far as Jerome Powell, I think they will do it in December. It seems as though the market is now pushing them to get there. I would have put it at about 60%. So like I was talking about yesterday, the Fed members are very split between cut, neutral, and no cut, right? So it's very 4-4-4, very even across the board. So typically when you have that, the chairman will tend to sway the vote. Now, Jerome Powell, obviously, hence why people have been looking at that, and he likes the data. They like to go off the data, and we haven't got that. But there has, some of the bits we are getting fed through now have been a bit weaker. There is a bit of a dance to be had with the December data, like I just mentioned before when jumped on. The a lot of the key pieces, particularly the December payroll, won't be coming out until after the Fed in December. So this year is a bit abnormal. We've got the Fed on the 10th. Typically it would be, I think, otherwise the 17th. And typically we have, NFP is always the first Friday of the month. December payroll, we're getting it on Tuesday in like the third week of December, right? So very abnormal. So they won't get that data. So they'll just have to make their best guess. At the moment, it looks like the market is pushing them there. And we're also getting further talk on who the next Fed chair will be, right? And we've had these sort of echoes and rumors for a month or two now that Trump is sort of possibly looking to decide that by Christmas, by the end of the year. Whether he does it exactly then or sort of indicates that and sort of confirms it into January. Right now, it very much looks like, yes, they are going ahead with a very Trump-aligned member. So it's just a question of, is this someone that the market likes who is Trump-aligned, or is this like a very abstract, out of the, in the wild kind of pick that the market doesn't like? Now, either way with that, that's going to be negative for rates. So basically rates coming down. So every single forward-looking piece right now says dollar down, ultimately. So there's your full fundamental breakdown. As far as the technicals, we've come back up to the top of this cluster. We're basically sitting around that 100 mark on the Dixie right now. And you can see this is the 200-day moving average coming through here that we managed to dip a little bit through, just meet this double top here, and in line with those prior wicks. This is where we found resistance before. We've fallen off from there and pulled back into the 200. So I would be looking for a further decline back into, obviously, these wicks here, right where the 50 is, run through that. These start to roll over again, and ultimately we're eventually starting to make new lows going into next year for the dollar. That's my general trajectory. So into year end, I do think we'll have further dollar pressure. I don't think we're going to run out the gate anywhere anytime soon, but maybe another 100 points lower, which would give an implied move of euro dollar sort of kicking around where we are with a slight uptick. So you can see this on the daily as well. You got the 50 and 100 moving average just above on the euro dollar as well, up about 116.40. So about, what's that, 70 points above where we are. And then you come into where these highs are here as well. So we could get a further push beyond that to about 117. But this is kind of the zone I would expect that we sit in into year end. So overall, dollar downside for now going into year end, and then further deeper downdraft once we've got some confirmation around the Fed chair, updated trajectory on rates, and possibly some of the data getting back to normality going into next year. There you go. That was hopefully in depth enough, but still simplified. Easy to understand is what I mean. Easy to follow. But yeah, so that's your large picture for the dollar index. The other portion of that is dollar yen that we had talked about over the past couple of weeks. And I was looking about this 157.80 level to find resistance, and it was going to be somewhere between 157.80 and this high branch at 158.5 would be sort of the peak tops. Now, it did turn out that we stopped roughly at that 157.80. It was 89 or whatever, and then we've come back since. That's been helped by those rate cuts coming back up, as well as some of the kick that we got with the, wobbles in the stock market last week. When we had some of those big downdraft days, obviously dollar yen is going to get pulled down on those risk off days as well. So we've come down from 157.89 from the tops and reached a low point yesterday at 155.56. So it's a good 230 odd points. Couple of days. Fair to say we get a bit of just a general rebound, more of like a dead cat bounce type thing. just a retrace after good downdraft. And again, we're coming back into this topside resistance. So across the board, I'm seeing dollar yen selling, euro dollar buying, and similar deal even with the pound. Now for the pound, I don't really want to touch right now for today, given we've got the UK budget stuff yet to come through. But you can see even last night, that was also spurred by the other dollar selling moves and some of the bits and pieces of data that we got out around the new potential Fed chair and such. But you can see we definitely had some of that recovery already starting to come through. So the pound is very hard to call, whether it be buy the rumor, sell the fact type thing. If we've had all of the sort of negative news priced in, we started falling a long time ago, right? And then so once we actually get things released, it's been quite well telegraphed now. There'll be some tweaks around the edges, but this may be a point to actually go back on that trade, basically cash out. Because if it's not that horrendous, people go, okay, relief rally for the pound as well. So yeah, that's my piece across the board, across the majors there. Do I think gold will reach 4,200 today? Now, I wouldn't be surprised if we get to 4,200 today. Basically, what I'm looking for is for us to crack these tops up here. This is where I took profit during Asia. I'm looking for an interim target about 41.85 to 80 as the first tackle point. So if we can rally up into there, obviously you got these heads just up here around that 4,200. So I think seeing as we stalled there, if we get another drive up through here, I think it will just sort of run and push. And I wouldn't be surprised if we get 4,200 at all. Whether we get it today, I would say definitely possible. We seem to be coiling up to do so. It will just be that matter of, do we, after this strong run, the past couple of days, right? We've come, pretty much one-way train from 4,040. If the next couple of days to get towards there sort of takes today, tomorrow, the next day, especially ahead of Thanksgiving tomorrow. So you could end up seeing something where we kind of push up partway to about that 41.85, stall out there, maybe come back a bit, and 4,200 might be into the end of the week. But yeah, it'll depend on the momentum, and there'll be a lot of eyes on the pound stuff going on today too. But yeah, I'm definitely looking for that trade today, put it that way. If not, I'll just hold it overnight. Let me scroll through, guys. NASDAQ, definitely do NASDAQ. All right, cool. So NAS, here we are. NASDAQ, similar deal to gold this past couple of days. Like obviously last Friday we had the massive downdraft. It was like 2.5% that Friday, and we definitely had the days before that pretty consistent downside pressure. A lot of that relating to AI, NVIDIA, the whole AI trade, the chips thing, all the mess of everyone talking about, is it overpriced? Are they spending too much? Is it overinvesting? These circular financing between the companies being a bit odd. A lot of debates going on, whether it doesn't matter because they're legitimate businesses with a legitimate revenue. This is not their only thing, like they're absolute cash cows, they can afford it, that kind of stuff. Not going to get into yes or no of it right now, but because that'll take too long. But overall, we had that downdraft. People sort of got over it. We started to rally a bit through here. And then we had the pickup in particular coming through when the rates pricing came back up, right? So we saw the odds for a Fed rate cut running back up towards that 80%. Rate cuts obviously good for stocks. Chance of no rate cut in December, obviously bad. So that's why that prior period, the rate cut bets have been coming off, and we got this large downdraft through here. Now they're back on the table, rallied up. We also further had the Fed chair potential front runner Fed chair announcement as well, and you can see if you go look at the charts from last night, gold responded positively, stocks positively, and dollar down. So the reason for that again is future forward pricing of increase of rate cuts, both in pace and size, as more likely. So hence we saw the 10-year go up and the 10-year yield come down, right? And then that shifted all these guys around. So rates going down is good for gold because it's a non-interest-bearing asset, so it makes it cheaper to hold gold. And then for stocks, obviously, it's cheaper for companies both to borrow and to finance and feed current debt obligations. So all around good. Where we are now, as far as the NASDAQ, we're tackling these highs. It's going to be interesting if we do get this Santa rally. I think we still could get a bit of a further rally. I don't know if we'll entirely get new all-time highs. If we go out beyond the 15, we'll go to like the 4-hour. So I think we could see a march towards the all-time highs into the end of the year, assuming we do get the rate cut on that final, burst of exuberance, and then possibly in January, first month, we might actually see another downtick from there. People seem to be generally getting over the sort of AI-related concerns or fears or wobbles or just this, big question marks everywhere, and kind of just looking to the forward trajectory of rates to carry things through. We do have, a lot of people waking up to the whole batch of liquidity that'll be coming in that I was also talking about just before. So I think we do have that upside to take. Now, Christmas rally beyond that, I don't think we'll get that this year. I think people are pretty wary of the kind of gains we've already had despite everything that's gone on this year. And so there'll probably be, and particularly with some of these wobbles, there'll probably be a bit of a temptation to just sort of either sit on your hands or take some chips off the table, reassess into next year. I don't think anyone wants to sell because they don't want to miss out at the same time as well, but people are definitely becoming more cautious in pushing the throttle further and further at the moment. So I'd say take it by the by. Where we've come to now, we're probably at a near-term local resistance. I'd say look for some small pullback, basically for a dip, retest, and then run higher. You've got your next interim tops there, and then the all-time highs after that. Hello, welcome back.
Thank you. Cheers. Much better.
Yeah, cheers. No, I'm finally cooling down as well. As soon as I walked in, I turned the aircon on just straight to lowest setting it can do, full fan, and put the dehumidifier on, and it's getting better. So
storm.
I hate the heat. I can't stand it.
I wasn't really expecting you to have the storm with the heat. I was more expecting the cold storm, the normal storm. But that's kind of stuff.
That's the thing. Like in Australia here, it's really hot, but it's not just the heat. It's wet heat, right? It's humid. It's the humidity that just destroys you. So.
Yeah, that's the worst. When I was living in Mexico a couple of years ago, the moment it doesn't matter, this all doesn't matter because you go out and in 30 seconds you look like you were just dipped in the water. Not like this. It's 30 seconds and you're out of hammam, not even that dry sauna. Yeah.
Exactly. Yeah, the number of people that the number of black shirts being worn when it comes to summer and these hot days just goes right up because people just are sweating and no one wants to. Yeah, God, it's funny to see.
We have something very special normally for them today.
What was that?
I was saying that we have something very special for them today. from my side,
Oh
but
yes, yes.
I was waiting for Jonathan, and I don't know if we should just get it rolling. What do you think?
Uh, is is he announcing anything else in particular, or
I'm not
just
sure. I don't think so.
okay? Well, in that case, we can probably get it rolling.
So
I'll
yeah,
just answer this final one then.
yeah.
Hey LJ, can you put some light on that one trade per day is good? One, if I'm unable to accept losses and start over trading, so I'm thinking that just go for one trade per day. Yeah, absolutely, man. There's not always going to be brilliant trades every day, and it can be tempting to want to get in there, be participating in some form, and if you're not, it feels like you're either slacking off or not working, or you could be doing more, or wondering, the market's going, people are trading, why am I not trading? But you don't have to trade. That's one of the biggest benefits that you do have. You're not forced to. So you're definitely better to sit on your hands, sit back, and just take that one good trade when you see it. Especially if you are having difficulty with over trading, particularly if you start out your trading day, you sort of dip your toes into the market, come up with a couple losses, and then you spend the rest of the day trying to chase back the losses that you had. That you often can dig yourself deeper and deeper. So yeah, it's often better to do the one trade a day, and if you then after that feel like you do have a good read on the market, then lean into it, because then that can often be positive and have a positive effect, because that it's sort of telling you that yes, your read is correct. But if you jump in, your read is completely wrong. Often, your read for the market for the rest of the day is also going to be wrong, because you've kind of got possibly some kind of sticking bias, or there's some other news or something that you're not aware of, or that's affecting things. Yeah, so one trade a day, definitely good. And then you can just gradually move it up to like two, or one and then two the next day, then one, then two, and then figure out which days suit you best. So some people find Mondays really good. Other people hate Mondays. Some people refuse to trade on Friday. Other people love Fridays going to the end of the week. So it depends on those sort of things as well. Over to you, Anastasia. You have the floor.
Perfect. Just 1 second. I'm sending the information that is gonna be live, and we can get started, guys. We are rolling with a Black Friday week promotions. We have the huge giveaways going on, so make sure that you register for the giveaway. The registration link for the giveaway is in the chat already, so if you go scroll back to the chat, you will be able to find the link. Beside this, you do have the promotion, which is 15% for all the account sizes and a 5% for 60 and 100K accounts, which is huge, right? Because if you're waiting for the promotion, this is exactly your timing, guys. Normally, there are no discounts, so it's a pure gold right now to use it and make sure that you can close the year strong, right? I still can't believe that we are in it 2025. But as we are, make sure that you can close the year as you can be proud of it. So make sure that you go to the link, register to the giveaway, use the fact that you can win accounts, purchase accounts with the discounts, and also using the affiliate links actually gives you an extra discount. So you can go in the link and follow up on the step by step process. And also, because it's a Black Friday week, we have something special going on, as you saw in the previous days already, the previous days streaming. Every single host is breaking down their trading system for you step by step. And I believe it was a while since I broke down mine. So Jonatan reached out to me last week asking if I can do that. And I think we're going to get something very special going on today. I said, yes, let's go. Let's bring some
Here we
fire.
go.
Let's bring
Yes.
some fire. So, guys, I'm really excited. If you guys are excited, if you guys are ready, let me know in the chat. I was especially connecting all of this. I normally stream from a separate thing to make sure that I can break this down, because, as you know, I do not work on the trading view. I work on the other type of trading platform as well. So if you guys are ready, if you guys want to learn how to use volume and order flow together for the trading system, let us know in the chat. Let us say I am ready, and we're gonna get it rolling.
Punch it, guys, punch it. You guys are in for a treat with this. This is going to be some good stuff. So this is, a lot of this stuff people don't know, or it's far less common than the what's out there.
Yeah, for sure.
So,
I think so. Yeah. It
you
becomes
guys
more
will love it.
popular now as well, but I just think it's been a while since I did it live. I think it was summer, a couple of words or something, but normally it's been a long time. Ready? Yes. Let's go. Fantastic. Amazing. So I have the file in front of you, a special file that is basically an information on how do I build my trading system, how is it built, the decision-making process that I use every single day when I trade the markets, when I look for my opportunities in the market. And I do use multi-time frame analysis. No, I normally come from the naked trading. So 7 years ago, what I was trading was a price action, was Fibonacci, right, and the pure candlestick patterns on indices, so only NAS 100 and S&P 500. Now, since I come from the Elliott waves theory and naked price action, now when I use a volume profile and when I use order flows trading system, I combine it still with my knowledge from the past. I got rid from all the other indicators and all of the other things, but of course the way I think about the market structure stayed with me and sticked with me throughout the years, right? So when I now make my analysis based on order flow and volume, I also do take into account the previous things that I've learned, including the price action and waves theory in the market structure. And I work on the multi-time frame analysis. So the way my system is built, the system for decision making, is that I go from the broader picture to the smaller time frames. Now, we'll talk about the trading system. Normally, trading system has different aspects to it. It has different aspects, like, for example, your favorable days to trade, like LJ was saying before. Some of you do trade on Mondays, some of you hate Mondays, and so on. Your favorable times during the day to trade, when you're the most profitable on average, the trade duration, the assets that you trade. Some of you are going to be most profitable with currencies, some of you are going to be profitable with indices, some of you with metals, and so on, right? The average size of stop loss and take profit for your trade, all of these kind of things are combined in a trading system together with the behavior of you as a trader. But if we are talking about the technical part, this table, like this PDF file in front of you, is basically how I work. So what you can see here is that, especially for this example, right, I broke it into these 3 different time frames. So the high time frame, the mid time frame, and the smaller time frame. Now, it's not all the things that I use, but it's majority of them. Right, so we have the high time frame, which in my case is daily and 4-hour time frame that I use, and then I have the mid time frame, which in my case is 30 minutes, and I have a smaller time frame, which is 5 minutes, 30 seconds, or range XAU charts, a different type of charts, which I'm gonna show today as well. So I work from the left to the right side of this file. And just before we're gonna jump on the charts and I'm gonna show it in practice, you need to know one thing, that my decision-making process only comes into execution when all of these 3 things come together. It doesn't mean that I need all the confirmations from the left side, mid side, and right side at the same time. That's not how it works, and it's never a case. It's not like it's almost never a case, it's never a case, right? It's more like a set of different trading methods and confirmations that I consider when making my decision. Either I either enter position or I don't have position. So they can be combined in many different ways, right? I can combine them, let's say, in like a way that this one is going to be connected with this one and this one, or this one with this one and this one, but they eventually do come together in the full scale system. However, if one of them is not present, I'm not going to take the position. So if my like high time frame and mid time frame combine together, but I don't have the confirmation from the smaller time frame, I'm not gonna take a trade. If my mid time frame and smaller time frame come together, but the higher time frame perspective is not giving me the good zone from which I can trade, I'm also not gonna take a position. If I would do this, this would automatically lower down the rate of my trade, which is possible, but then it needs to be adjusted to the risk as well, right? So it needs to be risk adjusted basically on the gradation of the quality of the trade. And if all three things come into place, then it's a type of setup, and I can definitely confidently take it. So on this, let's just zoom in quickly. So what do I look at this bigger time frame before we're gonna jump to the charts? I'm gonna quickly go over it. Is first of all the price action. So what I work with the Elliott waves theory, and either the trend continuation or the trend break and reversal or the range, right? So I determine in which part of the trading cycle are we right now for this specific asset on the higher time frame. And based on this, I determine the zones which are going to be interesting, most interesting or less interesting for me to trade. Now, the next one, the things that I'm looking for is the points of control and the high volume nodes, rejection, the break and retest, and so on. So an accumulation of the volume. So it can be the point of control in the big volume areas from the monthly time frame, from the contract, which is a quarter or a month, depending on the futures contract. It can be the weekly. It can be at the maximum level for half a year, for example, or so on. So I'm looking at where is the price compared to these big volume areas, and how is it reacting to them? Is it rejecting it? Is it breaking through this? Is it like accumulating the volume there to break it, or so on? So I'm looking at this price behavior towards the big volume areas. And essentially my volume, like my zone of interest on the high time frames, are built on very simple things. It's volumes, so the value area high, value area low, high volume nodes, point of control, and the basic price action and this market cycles. Now, when I determine my big zones of volume and my zones of interest, essentially I'm going to show it, but it's just literally the zones. I wait for the price to come into the zone. When the price comes into the zones of volume from the higher time frame, I go on the mid time frame. For me, it's 30-minute time frame, which I work with, and I look for one of the confirmations from the list. So again, I determine the zone from the high time frame. I wait for the price to reach it. When the price is there, I look for the 30-minute time frame to see the reaction that I'm looking for. So I'm looking for the price, for example, to reject it or to break through it or to pause there, which can give me the information that my zone of interest is actually being respected. So then what I do is that on the 30-minute time frame, I work with daily or weekly points of controls, rejections, or break and retest of it. So the points of control again on the high volume node, the value area high, value area low. I work with the indicator of delta by the candle which I'm going to show. So either that trend setup and confirmation of delta divergence, which I'm going to show as well in a second. I look for the spikes of volume on the normal volume indicators, or either the rejection of the spikes or breaks through the spikes, or the price exiting the flat, for example, and coming into the trend. So I work with indicators of delta and volume, and eventually I can work also with VWAP. And there are other things like dynamic levels, but they all come under the points of control, the big volume areas. So again, the logic behind all of this is I determine the zone, I wait for the price to reach it, I go on the 30-minute time frame, and I look for some kind of sign that the price is respecting it. Like, for example, if the price reached my resistance zone, I want to see that the buyers are getting out of the market or being exhausted or being absorbed, and the sellers are stepping in. I want to see the big selling volume coming into the market. I want to see the price rejecting it. I want to see the drop on the volume when the price is rising and increasing the volume when the price is falling. When the price starts going down. So I want to see any sign of confirmation of interest into the direction that I want to work towards. Or the other way around, I might see no interest, and then I will know that, my setup is not valid, it's not yet ready, and I'm gonna stop looking into this position until I get some kind of confirmation again. So, and then when I do get any confirmation from this list, I work with the smaller time frames for the timing. So we can eventually you can skip the last step, but what the last step is doing is that it's giving me timing. It's giving me the information. Yes, it is already the time to enter this trade because the market is moving, because the buyers and sellers are active, because I see the momentum into my side, because I see the absorption or anything else. So it gives me the proper timing and confirmation that yes, right now you can enter the position, and most likely the price is going to move immediately in my direction. So this is this element. And also what I work with within this huge list, because as you can see, the list is quite big, but also it's not everything. I have more things basically in the smaller time frames that I work with. Like it's another one A4 like this. But what they do, they give me the timing for the entry. They give me the trade management, right? So I manage my trades based on the same confirmations because I can enter more positions, so I can add to my profitable position based on the same confirmations. If I see, for example, I'm in a long and more buyers are stepping in, I can use the same levels to add to my position. I can use more volume, new volume levels to move my stop loss, for example, into profit. I can also use these confirmations to partially close the position, to fix my profit partials, because I can see that the price is not moving the same way in my direction anymore. I can see the trend temporarily is coming to the end. The reversal is happening, for example, and the interest to reversal is increasing. So I can close my trade earlier and not lose a profit that I would lose eventually. So I manage my trades based on the last table, part of the table as well on the right side. So it's entry, management, and closure of the position is happening based on the right side. So it's very, very logical. We go from the left to the right side of this table. And I work with a heat map. So that's a limit orders, the depth of market, basically, for those of you who know it. I work with cumulative delta, different kind of setups between the divergence of price and delta. I work with volumes, footprint, and different kinds of footprints. And I work with like imbalances within the candle. So not the imbalances that I use normally in smart money, but imbalances like within a candle on bid or ask side of the distribution. So those are the kind of things that I use, and also with delta. So let me just show you a couple of examples. I'm gonna, LJ, in 1 second, I'm gonna switch to the screen and share my screen for a moment. And by the way, if anyone has any questions in the meantime, you can just post them in the chat, and I'm gonna be very happy to answer those as well. I think it's working. Yeah, imbalances, exactly. Imbalances, I'm gonna show you an example of this imbalances on the footprint just in a second. So basically, I especially close the rest to make sure that everything is working properly and nothing is hanging. But this is in front of you is a 4-hour time frame chart of gold. So there's gold futures, just normal gold, a little bit different prices for those of you who trade it. So what the first things that I'm looking for is I'm looking just basically purely naked chart, nothing else. So what I want to see is I want to see eventually which trend are we in right now, right? And what I can, like for example, right now the reason I was looking into the price was very simply because of the wave theory. So for me, the upwards trend is continuing until the price is creating the higher lows, and the downtrend is continuing until the price is creating the lower highs. So for the uptrend, I'm looking into the buying zones to be held, and for the selling, I'm looking for the seller zone. For the downtrend, I'm looking for the seller zones to be held. When the price is breaking down, so at this point, right, I was already looking into the continuation eventually to the upside again because of the structure of the market. Now, if I determine that, all right, right now I am in some kind of trend, and right now I'm in an uptrend, what I want to see is I want to see the answer to my question: where were the buyers entering the market? So where was the biggest interest of the market participants within this trend? So for this, I use the volume profile, and what volume profile is showing us, the volume profile shows us where was the majority of trading happening. So where was the majority of the money invested into the market within this trend, for example. So what I want to see is I want to see, as an example of this up, like of this, where did we stop here? Is how was the volume distributed from the lowest point to the highest point of this whole upwards movement. And what I work with the majority of the volume with this big volume area here, which as we can see, the price exactly came towards, rejected, and went back higher, right? So now what I want to see is I want to see how was the volume distributed here. So if we go back, I want to see how was the volume distributed on this whole movement, right? So I will know that majority of my volume is here. So those are the levels of my interest. And also I want to see how was the volume distributed on the last recent upwards movement. So from the recent swing low to the swing high. So the reason I'm looking, for example, for a buy today is because we are above this majority of the volume right here. We are above this volume, so the price on breaking the highs got more volume kicked in the market. And we are above what is called the value area high, so the highest point of the majority, 70% of the volume of this whole upwards movement. This, for me, by default, is already the bullish sign. So if the price exits the biggest volume to the upside and closes above the value area high, for me, it's a bullish sign. I'm going to be looking for a buys. If the price would, on the other hand, go lower and close below the value area low, for example, even if the value area low would be somewhere here, it doesn't need to be on the bottom, I'm gonna be looking for sells. So now as we are holding above the value area high, as long as we are above 41.65, I'm looking for buys on gold on eventual continuation. The only things that I don't particularly like is the fact that we are rejecting this volume. But as long as if we break this zone here to the upside, I'm gonna be looking for the more continuation as I'm already in a buy. So I'm gonna be adding to my running position. So this is the reason I'm looking for buys. Now, what I also want to see is how was the volume distributed here on the bottom, on the move to the downside, because I want to determine the areas of my interest here. So what if the price goes higher? Where am I going to be expecting the price to stop eventually? Well, to answer this question, I'm also going to look into the volume distribution from the highs to the lows, highs to the lows, and also just to make sure, I'm also gonna take this low, this highs here. So eventually what I'm getting is I'm getting this area here of the volume between the value area high and one of the points of control. And I'm getting the previous highs almost, right? Which is 43.66 for gold. So 42.70, 42.79 on the gold quartz or the futures quote, and 42.64. So this is the zones of my interest. If the price continues higher, those are the zones that I'm going to be waiting for the rejection. So just like this, I built eventually my scenarios on and my zones of interest from which zone to which zone I'm going to be looking to trade, right? So I currently am looking for trade from this level here to those levels here, and currently getting pushed down by this level here. So what I do, I make sure that I can see all these zones on all time frames, including the mid time frame, because now I'm gonna finish my work on the smaller on the high time frame, and gonna go to the middle time frame, the next one, to get other confirmations. So make sure that I can see all of those. Okay, we have a couple of questions, but high time frame has less noise. Yes, it does, but it also depends highly on the personality of a trader. So for some traders, you're gonna be more comfortable, for example, with more scalping approach because I do trade intraday slash like intra week. So if you are more comfortable with the scalping approach, you can do exactly the same thing but changing the time frame. So you can do, for example, 1 hour, 15 minutes, and 5 minutes, or 1 hour, 15 minutes, and like 3 minutes, or something like this. It doesn't have to be daily on 4 hours. It's something that I'm comfortable with, I'm working with, also because previously I was swing trading, for example, based on this price action and Elliott wave theory. So, it comes from there. I became like a little bit shorter term trader, but it's still from that years when I was trading on this approach. So you can do exactly the same thing, but adjusting the time frames. It's not going to change anything because it's a market auction theory. So the only thing that is going to change is the duration of your trade and how far the price can go eventually. So once I determine my zones based on the volume, based on the market structure, I go into the smaller time frame, middle time frame, and I work with the zone. So now we are literally into the zone of my interest. I want to see the level 41.92 broken or the rejection of 41.64 for the continuation of longs. Or if it breaks it, I can eventually, with a higher risk, but if it breaks it, I can take this short eventually for my other zones of interest, which is right here, right? Which is this zone, majority of the zone right here, majority of the volume. So I go onto my 30-minute time frame, and on the 30-minute time frame, I already look for the price reaction towards these zones. So what I'm now looking for, like the question that I'm asking myself is, okay, is the price ready to break through this level 41.94, 41.95 or not? So let's have a look at this. First of all, what I can see is we are rejecting the point of control of the week, which comes from the week of 13th, 14th of November. So this is this point of control. This is a line that the price is rejected. So it's not necessarily even this one, it's a little bit higher, the line that is holding the price currently. On the other hand, I do have the point of control of the week by delta, so the balance between bid and ask was happening here. So it's now also holding the price. So I have this whole zone technically for buying. Anywhere I get the confirmation for buying here or after the break and retest is going to be good for me. So technically I can do this anywhere here, or I can wait until the price closes higher, get some confirmation here, and then go and buy it again until the next zones. Right? So this is something that I'm going to be working with. Now the question is the price ready or not? So a couple of things that I can work with is one of the indicators is called the delta indicator. So delta is basically the difference between ask and bid, and it's reflected the same way as the volume on the bottom of your screen. The difference is that volume calculates the total amount of lots or contracts traded within a specific time, and delta calculates the difference between asks and bids for the specific time. So aggressive buyers minus aggressive sellers, if the delta is positive, which for me is white, then we had more aggressive buyers. If the delta is negative, we get more aggressive sellers. So let's have a look at this. So now, like that's a little too close. So now what I want to see is is, first of all, like I don't necessarily have any confirmation here right now from delta because I want to see either the delta spike. So I would want to see either the increase in the price and a spike in positive delta, which would also obviously show me that the more buyers are stepping in and their effort actually equals the result. So the buyers stepped in, they were able to push the price higher. Great. If this happens, this is my confirmation for entry. The other things that I can wait is actually the divergence. I can see the negative delta, but the positive price. So if I have the negative bar on delta, but the positive price, it is happening a little bit here, but it's not good enough. It needs to be a little bit bigger, obviously, because the candle and the delta are really slow. But if I can have the negative delta and the positive candle, this is going to show me that sellers are stepping in, but their effort doesn't equal the result. So although sellers stepped in, they were not able to push the price lower, which means that aggressive selling has been observed by the buy limit orders by buyers, which is also the bullish sign for me. So positive delta spike plus price, negative delta plus positive price, anything can work as my confirmation. The other things that can also work is just a normal volume indicator. So if I go to indicators and I add my volume indicator, one second, delete it. So on the volume, I'm also gonna look for exactly the same thing. I want to see the spike on the volume. So I want to see the interest towards preferably buyer side, of course. But if I get the interest over the selling side, that's also going to be the information for me, just not going to be the information I want. And it's going to be the information that I should close my buys because right now the interest is on the selling side. So if I look for the volume indicator instead of delta, what I also want to see is a spike like this, for example, right? I want to see the volume which is out of the average for this specific asset. At least a spike like this, but preferably like a big one, right? But any spike of volume bigger than the average spike is going to be my confirmation towards the interest of the buyer. So if I have a positive candle and this positive candle has also the spike of volume, I'm going to be looking for the price to close above the value area of this specific candle. So the majority of the volume traded within this candle, and then the continuation from there. Okay, like this. So for now, I don't really have any interest for this specific asset, so it's also not my time to trade yet or to add to my position because the market isn't showing me any interest towards the buying side. So I want to see the spike of volume, the spike on the price, preferably to the upside. But if I get the negative candle and the spike of volume, it's also going to be the information for me that I close my close my longs, and wait longer because I'm not gonna take short here, but I need to wait for the next opportunity to come to enter eventually longs. So it's also the information, even if the information is not what I want, it's also the information that I need. So the other things that I'm looking for is again how the volume was distributed across the last movement here. So what I can see is also not getting me confirmation for a buying yet for gold, although it is bullish, right? It's because we had the volume here, but we also had the value area high and the point of control above the price. So once again, I want the price to either break to the upside with a spike on volume, with a spike on delta, go lower and a buy, or go lower, test this, get confirmations, and then buy. So for now, my scenarios stay exactly the same for gold. And then after I get this, if I get the confirmation on this time frame, I also can use VWAP and so on. After I get the confirmation on this time frame, what else I can work with is I working on the smaller time frame, like for example, 5-minute footprint. So this is a 5-minute time frame on gold, and one of the things that I look at is the volume footprint. So the footprint shows eventually how the buys and sells are distributed within one candle, or how the volume is distributed within one candle. So whatever you want to see, right, you can adjust it. Like right now, for example, I have the distribution of the volume within one candle, but I can also go to the left side and I can turn on the bid and ask distribution, which is going to be showing me the bids on the left, the buys on the up, on the right, and show me how the activity of buyers and sellers has been distributed within the candle. So this is also something I can work with, and I can work with a 5-minute time frame, exactly the same confirmations as the delta and volume on 30-minute time frame. So I want to see that either we have the divergence between the price and the delta. So I want to see either negative delta and positive price, or positive delta increase and positive price. What else I want to see is I want to see the volume The volume increasing during the upwards movement and decreasing during the correction, which is also not something that is not right now happening. So we can see the spikes on the volume here, which is not particularly positive for me. But here, what we saw yesterday was an example of how could you, one of the things that you could look for when you are confirming the trend is that after the prolonged period of consolidation, you can see that the price is dropping and the volume is dropping. So the interest toward this specific asset is also dropping. Traders are exiting the market. There is no like interest. There people are pulling out money of the market, and then the price starts going up, and the volume starts going up. So for the whole period from the beginning of the uptrend towards the end of the uptrend, we had the higher volume, which is for me the confirmation that the upward momentum is continuing and I can enter buys on this move. Now, on the other hand, when the price stopped, and I had this area for stopping anyway, and there is a volume moved here too, I see the price consolidating and the volume is stuck as well. And the price starts consolidating, the volume starts consolidating as well. So for me, it's a sign that I shouldn't be entering the market now because if there is no volume, there is no interest, there is no money, then I shouldn't be I shouldn't be entering the market as well. Right? It's as simple as that. So if the volume is increasing in my direction, that's also the sign for me to enter the trade. If the volume isn't increasing in my direction and is increasing in the opposite, then I should stay away from it. Right now, for example, there is majority of the volume is the same, but I had the volume spike here, which was the negative candle, the bearish candle. So for me now, until we are like in the zone here, I'm not going to be entering definitely longs again because it's a bearish zone. So we had more sellers coming into the market, right? Again, so this again once again the sign that I shouldn't be entering the trade. So what I was saying is the right side of the table doesn't only help me to enter the trades, it also helps me to stay away from the trades when they are not good enough. It also helps me to manage my trades, to know when its timing is good, when its timing is not good, when to add, when to not add into the position, when to eventually cut the risks, and so on. So the other things that I'm looking at is the confirmation on the volume footprint too, right? So if I go into the volume here, that's a volume footprint. So eventually the simple words is how is the volume distributed within the candle. So you take one candle, where was the majority of people trading? Upper, like above, in the middle, or below, or evenly. It can be also evenly distributed. What is interesting for me is I want to see when the price is going up. Let me just scroll to the yesterday's beginning of the move. When the price starts going up, I want to see the volume being on the bottom of the candle. It's more already of a scalping or like details and precision, but it's something also that I'm looking for. I'm looking when the price starts going up for the volume to be built at the bottom of the candle, majority of the volume. You can also use the volume histogram. It's a little less visible on gold, but normally on, for example, super liquid assets like S&P 500 or NASDAQ or currencies, it's super helpful because you can see exactly the volume histogram, but using the candle. So if the majority of the volume is trading below in the bottom of the candle and the price going up, so the bullish candle volume in the bottom of the candle, it was saying it's basically telling us the majority of people were buying and their buying volume was pushing the price up. So that's exactly what I want to see for my buying confirmation. When the trend gets developed, the volume is basically moving. So here at the bottom, this was a good example, at the bottom, and then the majority of the volume is going to move in the middle of the candle. Why? Because the trend is getting developed, volume is getting balanced. And when the trend is getting closer to the end or before the pullback or reversal, the volume will be on top of the candle. So here was the bottom, the middle, again the bottom, the middle, middle, evenly balanced. And then we get closer till the end and look where is the point of control out of the candle. Middle, above, 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 above. And the volumes, as they moved on the top of the candle, the price started slowing down. It means that majority of people are either closing their trades or they start selling and the price being pushed down. So the opposite is when I'm looking for sells. When I'm looking for sells, I want the price, I want the volume to be on top of the candle, not at the bottom. So if I'm looking for selling, I want the volume to be at the top of the candles, at the top of the candles. So here, for example, I see the volume was entering the candle and it was pushing the price down, pushing the price down. Here it moved to the middle, pulled back, again volume on top of the candles, again pushed down. So every time when the volume is on top of the candle, we are looking for bearish movement. If the bottom is on the bottom of the candle, we are looking for the bullish movement. If the volume is balanced and it's somewhere in the middle of the candle, I shouldn't be trading. I'm just waiting because it's either in the middle of the trend and it's not clear if they're going to be reversing or pulling back or continuing, or it's consolidating and I also shouldn't be entering the trade. So that's also my confirmation, right? I can also use, for example, the bid and ask like distribution of the volume to find the important levels of buyers and sellers, like within the footprint. But that's also it's better. It better look actually works better on currencies and liquid markets, because for gold I normally use just volumes because the distribution between ask and bid for gold is not something I'm looking at. So let me just go back. But the other things that I'm using, and I think that's going to be the last thing, and then we're going to have the questions because I believe that was quite a lot, is basically the indicator which is showing me the volume, like the specific volume amount within the candle. So it's called, on platform that I'm using, it's called the cluster search. Like it basically searches the point where we had the volume, the specific amount of contracts traded. So for example, if I place 150 contracts, it's going to show me the spikes of volume was 150 contracts or more. Let me just make it a little bit more bright. The purpose of the stream, just to make sure that you can see it. But normally my charts are super neutral. They're just black and white, and um, it allows me to just stay focused a little longer. I feel like if I would have a bright chart, I would completely lose it somewhere. So
Nothing like mine.
yeah, I don't know how you do it.
Colors everywhere.
Yeah, I don't know how you do it, honestly. My attention span, I cannot hold this. But basically, here, this is what it shows. Every single red dot on the screen, it shows me the amount of contracts of this now 100 or more contracts on one cluster. So if the price, what I want to see is I want to see the price close at above or below when this volume enters the market. So the moment the volume hits, this volume hits the market, I want to see if the price is able to close above it or below it, and then I know where will be the next move. It can also work on the higher time frames, like for example 30 minutes, and that's also something I do, but that's for a little longer moves. For the 5-minute time frame, either shorter moves, and it's like a moment of right now is not the time to enter, or right now is the time to enter or to add to my position. So for example, if I have like volume here, and then the candles closing first above it, but then breaks below it, even if I would enter buy, I would immediately close it here. And the same way, another way around, right? If like, for example, I'm in a short, I entered short, the price breaks the volume. On the break of the volume, we have more like more volume coming in. Then I know that people were entering shorts, my big players. The price was pushed down. I can add to my shorting position. Here, I can add to my shorting position, and so on. So it helps me to see how the volume was distributed. Right now, for example, we had the volume in the middle of the consolidation, so it doesn't give me any information. Like it doesn't help me really because it's in the middle of the range still. But if I would have the spike on the volume, and I have like, even if the price wouldn't exit yet this this range, so if the price wouldn't break the highs, but I would have the huge volume cluster here, I could already enter the buy before I get other confirmations. So I get a little bit better price a little earlier because I saw the spike on volume before all the other things reflected the fact that there were buyers. So it's also helping me to enter my positions earlier sometimes and get the better entry, or get the exit earlier. You know, if the price is reversing, and then I can see it earlier than I would normally do this. So, and then I work with this kind of things, like for example, the range XV charts, which is that's a different type of chart, which is based on the volume and not the time. So it shows it's basically the new candle is created only when the previous one is filled with volume. So you can consider it as a box of volume. So it's if the price, for example, the volume is not present and the price is consolidating, it's not going to create a new candle, which shows like it allows me to have less noise in the market. And because it's closer, like it's lower time frame, it creates like it moves faster. It helps me to also exit my positions earlier, for example, or enter my positions earlier. So that's another step of even more precision, especially if I'm in a trade, for example, and a New York session. That's usually something I watch. So also for the bursts of volume like this, or for the volume distribution. So if also the other things that I'm watching now on this chart is that where is the value area from the previous hour. So also work with the hourly volume profile. So you can see it's based on the same exact things, just priced from higher time frame to lower time frame. The main question is where is the volume, who is controlling the market? And that's basically the questions that order flow traders ask themselves the most. Where was the volume? Where was the interest? Who is now in the market, buyers or sellers? And when you get it like connected with what you are looking for, that's the position that you take. Okay, so that's the thing. Let me answer a couple of questions,
Wonderful.
maybe in the chart, yeah, because we had some. Um, I can't pronounce your nickname, Turquarzia. Turquarzia. Basically, how many confluences you usually look for before entering a trade? Um, Again, from this file that I was sharing before, I can look for at least one confluence on each time frame. It's as minimal as it gets, so it's at least three. But normally, with volume, you get more. So you normally get five, six confluences because if it starts moving, it starts moving, right? So you get more. But at least it needs to be three, and at least needs to be one on each time frame to make sure that we have the full picture from the bigger perspective to the lower perspective. Yeah, Akram, you were on all the webinars that I did recently, so Akram already
Yeah.
knows this in and out of all the system. Lack of volume, lack of follow through. Yeah, basically lack of volume, lack of interest to this specific asset at this time. And it's basically like if there is no volume now, even if I enter the trade based on my previous confluences, the problem with it is the new volume that will enter the market, for example, before New York, can completely change the narrative. So if there is no interest and no buyers or sellers right now, if they do enter the market recently, they can enter based on the different information and the narrative can completely change. So it's better if I don't enter and then later when the volume kicks in, I get recheck again, and then if I get confluences, I enter the trade. No, the TradingView has the footprint, but it's a highest paid version of TradingView, and I wouldn't suggest you using it. For TradingView, you can use all the volumes. They have the volume profiles, they have PVP indicator, VRVP indicator, they have mm, the F or the fixed range volume profile indicator. So they have multiple volume profiles that you can use. You can use developing point of control in the PVP indicator. This you can use, and honestly, it's already a lot. So if you just use this, let me just change it maybe to trading queue later. But if you just use this, I'm gonna show it in a minute how my trading queue is set up. It's already gonna help you a lot, even without the footprint itself. Let me just. Great question. So normally, no, I don't have it written down because it's been 6 years that I trade this. So
Yeah.
it's I had normally in the beginning, I have the file. It's a PDF file, PowerPoint, which has exactly 152 or 56 pages. I don't remember. This screenshot, yeah, it's a screenshot of every single trading method, an example of it on the chart. So in the beginning, I had it because then I know what I'm looking for. Because of course, when I was learning and previously, especially the footprint, I felt like my brain is just boiling. It's just so much information that I couldn't process it. So of course, I had the screenshot, but now it's written automatically in my head. So this file was for learning purposes only.
I put you up the top so you stop getting cut off
Thanks a
for
lot.
the questions.
Thank you. I don't even know how to do it. Alex is asking how difficult it is to switch to ARAS. Currently use Cluster Delta for footprint. Yeah, so switching to the different trading platform ARAS or anything else, it's from, for example, TradingView might be challenging, but it's, I believe, as challenging as when you start trading to learn like what is a candlestick, the trend, and all the indicators and all of the other things. So it's just, there is a saying that it's difficult until you get it done. And I think it comes down to everything like this. So of course, learning trading in the beginning is difficult. Switching to the different type, platform, it's difficult. For me, in the beginning, it was difficult, but it was totally worth it because I was always working on TradingView since the first times that I was trading. Since the first year. So of course, it was difficult, but honestly, you got to adjust. You adjust to this very quickly, just a couple of months, and good to go. The only things that I would say is when if you are switching anything in your trading system, including the software, uh, like make sure that when you use the software, you first get used technically. So I would say demo trade when you use the software or backtest until you are really, really fluent in using it, because you definitely don't want to just press the wrong button. Because it happened to me in the beginning when I was trading futures and I switched from forex to futures. On futures, sometimes you manually place your stop loss and take profit as pending orders. And there were several times when I didn't remove my stop loss to take profit when the position was already closed, and I activated them as a separate order, and
Yeah.
that was a disaster.
Yeah.
That was
I've,
a
I've done that before as well. Yeah. That's horrendous. So, yeah, you think you're out, gone to dinner or something.
yeah.
Then you come back and you look at your portfolio, you're like, oh, God,
It was
what
really
have
like,
I got here?
how is it possible? Like, what?
Yeah.
How is? Where does it come from? Yeah.
Yeah.
Today actually I didn't refresh the platform. So I left my buy from gold from yesterday, and a funny story. I'm coming in the morning. I'm like activating my laptop, so it's still on, but it wasn't like it. I think it disconnected from internet a couple of times during the night. And I look at this, and I was just looking at my phone 5 minutes ago, and it was in profit. And there is the huge, like this bearish candle on gold on 5 minute time frame, but like giant, 15 points or something. And I look
Yeah.
at it like, how is it possible? And I grab my phone because if it would happen, it would smash my stop loss, and I look at it still
Yeah.
in profit because it like drew the candle because it lost connection to the data. So I needed to, and I almost got a heart attack at that point.
Yeah. Yeah.
So
Oh, dude, that's the worst. Yeah, that or I've done it where I've left orders in from like the Friday or something,
yeah,
closed out the trades, what I've left them over the weekend. Um, didn't realize they closed out. The market like gaps or something. You get filled. Then you wake up, you come to the market, and you're like, why do I have trades in? What is going on?
yeah.
God.
Is it right? Gold 1 minute, 5 minute chart for entry for small pips, 20, 30 pips support and resistance. I mean, probably would work. You just need to test it, right? You need to test how you trade it. But it can be, yeah, it can be.
Yeah, when people say pips, because it's always confusing with gold, because people call pips, yeah, different to right? Are we talking dollars or decimals of a dollar per ounce, like for pips? But I think Remy was asking as well with that. Was that something you sort of you'd keep to yourself? I assume.
No, I can
Yeah.
actually post it somewhere. I'm gonna talk with Jonatan. Maybe we can pin it in the description. Or there normally should be my channel somewhere. I think where the link to the channel should be in the description. I'm gonna check, and if it is, I'm gonna post my PDF there. You can just download it.
Really
No, I'm not. I don't
nice.
have this. I'm thinking that okay, I'm not gonna share the way I trade because I'm afraid that people are gonna learn it and it's gonna stop working. First of all, because it's a market auction theory, and
Yeah.
eventually the problem with any strategy is that the market is so different from month to month, week to week, that it's all here. It's all in your head. I had a very difficult October. I said it multiple times, and it doesn't matter the strategy I'm using, and it's you can learn it and you can be super successful. I'm gonna be super happy about it, but majority of people are not gonna just because people cannot control themselves. They can not control their own emotions, so they can obviously not control their own mind. So it
Mm.
doesn't matter what we share. It's gonna depend on you guys in the chat. Are you gonna be successful with it? Not. So I'm not afraid to share these PDFs. I really really wished everyone to be successful, but I just know, and you know better than me, LJ, how difficult it is to be successful in trading. It's a hard work.
Yeah.
So
Yeah. There's a lot of nuance. Like you can teach people stuff, but then it's the handling it. It's yeah. It's I don't know. It's almost like being a chef or something, right? Because like I don't know. That's sort of one of the closest things as like a rough analogy that people can understand. Because a chef is kind of like following a recipe, and you would think, okay, everyone just follows the recipe, you do it in order, but there's always these slight nuances with like temperature, and now flip it because you're observing the steak, whatever it is, and
yeah,
you do something earlier or later, and there's all these little tweaks that takes you to Michelin star, Gordon Ramsay, whoever, right?
yeah,
So
yeah, yeah.
yeah,
Yeah, just
slight
different
finesse.
products. It's the same product but a different brand, and it's gonna be different results. So it's actually a great analogy. Never thought about this, but yeah.
Mm. I love it. This
Um,
is good. This is real good.
Yeah, really happy to hear this. Super happy to hear this kind of feedback always. How do you use
I
a
feel
point
like
of control? Yeah, go for it.
Oh no, I was just going to say, I feel like one of the other biggest things with this is like getting used to the charts as far as the visuals, like with all the profiles overlaid over the candles. You like have to, you know, obviously it's one of those things you get used to. It's like
Yeah,
my charts with mess all over,
for
where
sure.
someone else is like, "What's going on?" But I can see each point really
Yeah,
simply,
yeah,
right?
yeah. Yeah, for sure. The same with me. Like here, for example, it looks like a mess, probably, with all the profiles and the dynamic levels and so on. But it's just for me, wait until it's clear and then I trade. And people try to trade while it's unclear,
Yeah,
while it's all in the same. But that's the whole point of volumes. They should be either below or above the price, and they shouldn't be messing with the price in the middle. If it's like this and you feel confused, that you shouldn't be entering the trade. And that's, if you just understand this when you try to learn volume trading, that's a lot, and that's already going to help a lot. So because if someone tries to enter right now when the price is in the middle of volume, it means that the price is ranging. It's
Yeah.
consolidating with the volume, it's accumulating volume, so it's actually not the right moment to enter the trade.
Yeah. So you look at the structure and everything, how price is sort of building, but then obviously drill down into all the actual components, laid out with the volume to see that you've got confirmation that buyers are actually stepping in, and this isn't just price shifting; it's actually conviction, basically backed up by that larger volume
Yeah,
input.
basically like this. Yeah.
Yeah, in your 2 second summary, yeah, it's really good. I like your trading style for sure. So
Thanks, LJ. Dife is asking, do you use more penny or market trades? I use more market trades now. Before I was using more penny orders. Now I do use more market orders. I feel like it also depends on the market sometimes because it gives me the pullback. Then of course I still use penny orders, especially if I'm looking for the small pullbacks, for example. But before I was able to place a penny order and go to sleep and then wait until the price eventually comes there. And now it doesn't really come there, especially with like gold and silver. It's so volatile that it just goes. If it goes, it goes. And
yeah,
I use market orders when it's already. Now I don't wait for the pullback. I wait until it starts moving, what I was explaining before, and then I enter the trade when it's moving. And it's been working better, basically.
brilliant. Do you guys? I don't have any questions in particular myself. Um,
Akram is saying that you have a heat map installed in your iClip.
yeah, exactly. This guy is actually a bionic eye. It's actually scanning everything right now.
Yeah, yeah, yeah.
That's great.
Okay, guys, if you don't have any questions or anything, I will need to pop out earlier a little bit, 5 minutes. LJ, if you don't mind. I'm sorry for
Yeah,
leaving you.
sure. Yeah, of
Yeah?
course. No, it's fine. Yeah.
Okay, let me just switch to your screen. Thanks a lot. By
That's
the way,
brilliant. Thank you so much for that, Anastasia.
no, thank you, and
It's
thanks
really
for
good.
as well. All this
Yeah.
hour of my monologue. So, the Fibers are starting futures, indeed, yes, and it's going to be the platform X. So it's the best, most user-friendly platform for trading futures at the moment of the market. So, you guys, for those of you who are converting to futures, it's perfect. It's really perfect. It's super easy and simple, and every single one of you will be able to will be able to get along with that when you want to switch to futures.
There you
Okay,
go.
guys.
You guys got the perfect blueprint to start now. So, and always remember, you guys can go back and watch the rewatch the live stream as well
Yeah.
afterwards as well. If you think you needed a bit of a double take on some of that stuff to get it into your brain, just go back and do that. So,
It was a lot, yeah, and I'm gonna upload the PDF in my channel so you can go download the PDF from there in just a couple of hours from now. So I'll see you guys there. Aljay,
marvelous.
thank you so much. I'll see you tomorrow
Thank you. All right.
again.
Gotcha.
Thank you.
See you, Anastasia.
See you.
Hey, how'd you guys enjoy that? Hope you liked that. That was really good. Anastasia's Stratton stuff is very, very in depth, a lot there. But it's really good because it gives you guys really good framework to work off. You're not going in blind. Very, structured, systematic, um, some defined qualification pieces, and then you've got the varied pieces like she had on the right side of the chart panel, which kind of give those uh, secondary qualifiers, which are more nuanced and that kind of thing. So brilliant. Definitely go back, take a rewatch, and definitely go pick up the PDF once it's up there. So link to the channel. I don't know if you're there in the background. If Jonatan, if you could throw that up, possibly might be helpful. I can't remember it off the top of my head. So if you're watching, Jonatan, I'm not sure, but yeah. So we got a little bit of time left, guys, before I gotta dip out. I gotta put together my. So you guys will get my strategy stuff tomorrow. We're gonna do today, but Anastasiia and I swapped. Also have to. I'm gonna add a few more bits and pieces. The first file I put together got corrupted when I was working on it during the storm. We had power go out again, so we'll have me running through that tomorrow. I'm just trying to formulate it into a way that hopefully it'll be something that you guys can all sort of combine to even to whatever you're currently trading, whatever approach, that kind of thing. That's what I'm going to try to do. Obviously, as you guys know, I've been trading for ages now, 13 years. I got a slew of different styles and approaches for different times of the year, different months, different market regimes, whether we're focused on data, not focused on data, more political, more central bank focused. It's all dollar driven, euro driven, commodities driven, inflation driven, etc. So I'm going to try condense a few of the core pieces that sort of run through, and hopefully they'll be quite assistive particularly for intraday stuff, to help you guys, which is very suiting and very fitted to the kind of prop structure, I guess. So hopefully you guys will enjoy that tomorrow. So there we go. I already participated in giveaway a few days ago. When I tried again today, it says I've already followed and completed the task. Will still be included in today's giveaway. Yeah, I believe so. So if you've signed up, gone through it, I believe you'll already be in there anyway. And each day, basically, Jonatan's come on and announce the winners, and then the emails go out promptly after that. And so. So yeah, basically in the description, in the link, follow that stuff. If it says you're in, don't be too stressed. You'll be in there. So, what is the one problem that you have faced after learning a profitable strategy? One problem I've faced. Well, I guess everyone faces a certain problem with a profitable strategy, or at some point, often. That strategy can break down or not be quite as effective as it used to be. Sometimes that's because of a certain market regime change. Trump being a good example of that early in this year. The trading conditions definitely shifted from your typical day-to-day type trading through that period when he first came in. Initially in January, we had a bit of that January, Feb, that volatility. And then obviously going up to tariff day, right, where we had the chaos. So, some people's strategies aren't going to necessarily deal as well with that type of uncertainty. But like I was saying before, that's why I've got sort of different sets for different regimes. So I guess that's the kind of thing, probably the biggest problem most people face. And often, people are questioning, well, has a profitable strategy stopped being profitable altogether, or is this just a glitch and a dip? Now, what I would typically do with that, if it's been running and it's going well and it's still at least performing to some degree, you should have some kind of data from the past, so you can compare that to the data now. And typically that's where you go through some backtesting stuff, and basically make some tweaks, see if by making some tweaks you can improve it, or does it stay the same or get worse. But typically, I wouldn't bail on something too quick, right? It's often a good idea to start a secondary strategy or approach completely separate to the one that you've been running in, say, like some other demo account, and then start testing that, see if that works better. And if you find it does, now you can run that one as well. You can often run them in parallel, side by side, and see when one starts to perform better or break down. So. Hey, Will, how we doing?
Yo, how you doing, man?
How's it going, man?
Yeah, good.
Doing well, doing well. I'm
Awesome.
boiling hot over here, sweating. It's humid. It's gross, but
Nice.
finally cooling down in here now. I had to close everything up and put on like the dehumidifier and
Oh wow,
put
is it
the
that
air
hot?
conditioning way down to zero. Yeah,
Mate, I've had the heating on all morning. It's freezing outside. I had to go out and, for those of you who know that I live pretty much on a farm. I had to go out and sort the horses out. Everyone's away, like my family's away, my brother's away. It's just me on the land. So I had to go out and sort the horses out earlier. I got soaking wet and I was freezing. It's just,
dude, we can swap if you want. I'll happily swap.
yeah,
Right
I'd take that. I'd take that.
I don't know if you would, but it's pretty nasty.
Is it? Yeah. Is it that hot?
Yeah, it's the humidity that just like
Yeah, fair.
yeah, you know what everyone talks about, right? It's like people are like, oh, Dubai and Middle East is like hot, but it's that dry heat where yeah, it's intense when you're outside, that kind of thing. But it's warm, but not like it's not as gross, right? It's the humidity that makes it all gross and like yeah. So yeah, but yeah, I haven't had much trades today. So far, I'm sort of waiting for the next leg. I want to see gold break through here and run higher. I did close that out today during Asia. And I'm looking for, if this starts to break and run, I'll be entering on this break right here. So I've also already got a small position in on one account, which now we are breaking. So that one's running.
Awesome stuff. Yeah, I'm gold's actually breaking out.
So, there we go.
Thing is that we've got an hour. I don't think we've got anything before the hour, but in an hour we've got budget.
The UK, yeah.
And I'm not sure how that's going to affect gold.
Dude, I'm staying away from pound. That's for sure.
100%, mate. Pound, RIP sort of pound. It's just
yeah.
I don't know what it's doing. I don't care what it's doing. I'll probably leave GU alone now for the rest of the year.
Yeah, because it's so hard to call because it's hard to say whether it'll be buy the rumor, sell the fact. Like everyone knows it's kind of UK is kind of stuffed. What else is new? And then people reverse the trade because now it's kind of priced in. Or do people get further? No, we're definitely completely screwed and keep selling. I don't know. It's really hard.
I don't even know. Literally,
my recommendation to you guys out there would be stay away.
Just like stay away from the pound. Stay away from the pound, and probably best bet stay away from the UK.
Yeah. If you're there now, get out.
Yeah, mate. I mean, I would. Yeah, I would. Let's just put it this way. I've booked a one-way ticket to Hong Kong. I haven't booked returns yet. And technically, it's a 2-year lease that I've signed on. So
yeah, I was going to say, how long was it? Because
it's a 2-year lease. Yeah, it's a 2-year lease, but it's minimum period of 5 months. So I'm out there for 5 months anyway. So
okay.
Yeah, it's a one-way ticket and a 2-year lease. I mean, that's all I'm saying. We'll say
you got options.
I got options. I don't think that this is gonna be my leaving the UK story. I really don't. I think I will be back, but
yeah,
I'm just saying. The door's open. Oh man, I don't know though. I'm just looking at the news now. We've got nothing until 12:30 for the budget, and gold is looking rather nice.
Yeah, it's looking good now. Order got tapped in, so
you tapped tapping on the breakout, is it?
Yeah, so I put the order in there for the breakout, and the other on my other account I entered earlier.
Beauty. I'm waiting on the close. I am.
Because I wanted to get in this 200, but we just weren't getting in. So that one I entered there early, just in case this starts running.
There we go. I've just entered in on gold now. I wanted to wait for that close. If we get a pullback, I'll scale in as well. So I'll have a break and retest.
Yeah. I think everyone's sort of looking for gold to run at the moment. Jonatan is Anastasiia is, I think,
Oh,
like,
really? Oh, wow. Looks like we're
yeah,
all on the same side.
yeah. So either we're all correct or we're all we're all fried right now.
I mean, I've been correct with gold for the past 2 days. I just haven't held it. We've had reasons to get out early. However, though, the confluences have been there, and like had I have held it, the overall direction was there. So I was pretty happy with that.
Yeah, I'm similar. Like, yeah, we've had that momentum, but I always like because they're not marked up on here, but I had various trades up through this as well. But I always like to sort of jump in, jump out, re-get in, because gold.
Same as that.
Yeah, it's like this period where we have those like spikes up, snaps right down, then we're up, and then we're right back, and it just gotta,
Yeah, I like to sometimes I just like to secure my profits.
Yeah.
Just secure the profits and then be like, right, okay, I'm out. It is what it is. Hopefully I get a re-entry. Like I like. Some people say to me, they're like, Will, why don't you just hold it throughout the entire course of the day, like the entire course of the session? I was like, I could do, but because I'm a lower time frame trader, I trade in the 5 minute, I get plenty of opportunities to scale in or re-enter. So like if I can just like get in, get out, pull back, get in, get out, pull back, get in, get out, etc., then I mean I'm laughing then.
Yeah. Plus gold's lower commission as well, so it's much easier.
Yeah, exactly. Yeah, gold is super low in commission. I
like you'll rack up so much in commission. Sometimes.
Well, beginning of this year, so like for the first probably 2 quarters, I was racking up like $1,000 worth of commission, 1,004, and it was just the commission I was paying on the trades was just it wasn't that bad, but overall, like collecting it all, I would be break even on this account right now. However, because of the commission, I'm actually down 1.5%. I'm like, I was like, why? Why do I have to pay commission? God damn it. But having said that, though, on gold, I've made 5% since the start of September, and I've only paid $200 commission.
Yeah.
So that's 5,000. Exactly. I think it was like $5,200 or $5,300, like pre-commission, like gross profit. Net profit, I'm still over 5K. So I'm like, to be fair, like that's sick. Yeah, like I'm like, damn, I'm so glad my goal, like my strategy started working on gold. Otherwise, I'd probably be still 2-3% away due to commissions.
Yeah, due to commissions, they'd be way higher. Yeah, that's a good thing. Gold, obviously, overnight swaps, so holding it overnight is pretty expensive. Because, you're getting that negative carry, but
I wouldn't want to hold
it in and out during the days, then it's good.
Yeah, I think I wouldn't. I don't sleep at the best of times. Trying to trade gold overnight. No, dim diolch. No, thank you.
Especially in these markets with like, Trump tweeting or like all the headline stuff. You can just
literally. Could you imagine you wake up and Trump's just spoken about what he had for dinner? Like he said that he had a curry or something. Next minute, gold's just tanked, and you're like, what? Why?
Yeah, and it sucks because then you start your day off with like a negative.
Literally that. Only I could probably count on my hand how many times I've held held over the night in gold, and I could probably count on the similar amount of fingers that I've woken up with in a bad mood. I've woken up and I thought, shit, I've lost that. Or I've maybe I've blown an account, or I've gone to drawdown, or I've lost that trade, or I got slipped due to like some form of like maybe yen news or something that's affected gold, and I'm like, oh, I got slipped and I lost more than I should have, and in the end I started thinking I'm just not holding overnight.
Yeah.
I was like, my heart can't take anymore.
No, it's terrible. Hey, like running any kind of leverage overnight is
100%. I don't mind buying and holding, like if I'm not leveraging overnight, then
or you got like a lower sized.
Yeah, exactly. Yeah, if you're risking like 0.2%.
Yeah. All these lines are moving averages. Yes. So this little grey guy here, that's 10 moving average running through there. The sort of blue teal here is the 50. Red is the 100, and then that's the 200, and they're just a simple moving average, so not exponential. They're just simple moving averages. So typically use them for confirming that trend is still current, and as like pullback and retracement points on various time frames. So you can see like the 10, we've been supporting, tapping into that and bouncing off it continually, telling me basically that this is currently in play, something going on. Same deal here. After we had that run up, we came back into it, crossed right below. We basically got supported here by the 50. So that's your next point of support. Run back in, and you're sort of tangling with them until the others start to play catch up, and then you continue the move. So there you go.
Yeah, nice one. I'm just waiting for this. We got 4 minutes until we break and close. Until we close the breakout on the 15 minutes. So I'm hopefully going to be looking forward to that. Really hoping that that's going to close on the 15. On the 5, it's closed and it's really. So I've been tagged in. But if I can have some confirmation on the 15, that would be really nice.
Maybe we got other. Are these like Russia headlines? No, that was from ages ago. I don't know. Is there something else that's come out?
No, not recently. I've just checked now.
Just jump.
Oh damn! Yeah, fair.
Dollar yen. Come right off. Pound right up as well. Is this pound some kind of pound pre-budget news? Yeah, I mean, look at that thing. We're ripping now on the pound.
Oh, dude, the pound's scaring me today. Genuinely scary today. I'm not interested in the pound or the euro, to be fair. I'm gonna trade gold the minute it hits 12 o'clock. Probably 12 o'clock. I'll probably close. Like, I'm only planning on being in this trade 20 odd minutes.
Yeah, because we're not at the budget talks yet, are we?
No. We got another. What was that? 40 odd minutes. Yeah, we got like.
Yeah, we got about 40 either minutes. This is some kind of leaked news, or you got pre-positioning for it, in some form.
Yeah, I don't think it. I mean, I've got it live.
Just jumped up like half a cent.
Yeah, I have got it live on the Guardian.
Yeah.
But
there's nothing on Bloomberg either, so I don't know. Some bank.
I was gonna see if I can live stream it with you guys, but
that'd be good. Yeah.
Yeah. Maybe when we come to I don't know. Maybe when we come to 12:30, 2 minutes before, I'll see if I can get it live, and I'll share my screen. We'll live stream the budget release together. But it depends when she's going to actually release it, because I mean, it could be her speaking for half an hour, and I want to speak today's going to be about me sharing my strategy with you. So we can't make it just watching the UK budget get released. You can't watch a grown man cry on the stream either. That's just not fair. The rumors of the taxes being increased.
How much tax?
Yeah. What? No, please. Yeah.
Gonna have to sell the M4 to pay the tax bill.
Dude, you joke about it. You joke, honest to God. I don't know how much more we can raise these taxes before I actually have to consider the risk to reward ratio of owning the M4. Don't get me wrong, I'm not a multi-millionaire trader. I do well for myself with trading and with other things, but I'm not a multi-millionaire. I'm just a normal guy earning profits in the market, no different to how everyone else earns their living, with a job, with a career, with a business. I'm no different to you guys. I just do it with trading. So when people see me flashing around with the M4, they're like, "Oh, he's a multi-millionaire trader." It's like, no, I'm just doing well for myself. So when it comes to living costs and living in the UK, living in taxes and budgets and cost of living crisis and all that stuff, I'm still a human being. I've still got to take these things into consideration. And when it comes to the M4 being and I'll be honest with you, it's it's very expensive to run. And like I'm looking at it thinking, dude, like is it even worth it anymore? Like I drove it twice in November. No, sorry, me and Cece went to the shops and we took my car instead of hers. So I drove it 3 times this month. Like, and it's still expensive, and I'm still thinking, how is it such an expensive car to run? Even though I've only driven it 3 times this month. Having said that, I have saved. I think I spent over £1,000 in fuel during October.
Yeah, with the trip and everything.
Yeah. No. I spent £2,000 in September. I spent £2,000 on fuel because I drove to France and back. Yeah, in October I spent £1,000 because the missus took me away for my birthday, so I drove. I drove up to England and back and up and back and up and back and just other stuff that I was doing in the car. So, man, it's
heavy foot on that pedal, you know.
Do you know what the worst thing is? I try and drive as economically as possible. That's the worst thing. Unless there's like a really open road, then I will press like the M mode, and then like turns into like Godzilla. I'm like, yeah. Like, I don't know if anyone's watched Star Wars, but like when you go into hyperdrive, it's like it's like that. I feel like Han Solo in my Millennium Falcon.
Does that make CC chewy? She'll get mad at that.
To be fair, she hated it at first. When I first did it, I overtook a car, and she's like, ah, like screaming as they do. But like now, when it's in an open road, like I put my foot down, she's like, do it again. So in all fairness, she's gotten used to the speed now. She loves it. But yeah. Oh man, I mean, chewy.
Yeah, goddamn. All right, I'll let you take over. I gotta run to the shops once again before they close, and some stuff in case it storms yet again this evening. So,
dude, I saw those storms. You put that video up, mate.
That was
that
great.
Was savage.
Yeah.
Like that was absolutely savage.
Yeah, it just came out of nowhere as well. Then we had another one last night. It wasn't anywhere near as bad. It was sort of more heavy rain in the end and wind. But yeah, Monday was chaos. The other thing with the camera, because like the iPhone camera, you know how they always sort of see through stuff.
Yeah,
it doesn't have to pick up. Like in front of me,
it was for the rain.
Yeah, it was like a white wall. Like you couldn't see anything. But yeah,
mate, that looked insane. I mean, it looked kind of like I'm low-key a weirdo like that though. I love extreme weathers. So
I think it's super cool as well.
Yeah, 100%. Like when I go skiing, it's great to ski. I love skiing, but it ruins it if the whole holiday is like this. But if you get one day where it's blizzard, dude, I love skiing in that. Like I'll snowboard or I'll ski in a blizzard. It is so much fun. It's really dangerous, of course, but man, it's just something about it. Or like heavy blistering rain, dude. I'll just stand out in it. It's just so fun. There's something about it. Just the extreme weathers. Yeah.
Agreed. I love it. I love the rain and everything. It's just annoying with this build. It seems to get water ingress after the cyclone we had a while ago. There's some spot they can't figure out, and then it shorting out the
I was going to say, did you have like electricity problems?
Yeah, on Monday it was because the phone lines out there, got ripped down. There was a tree that came down and took them out. But on top of that, there's this water ingress thing. It keeps getting into the bloody elevators as well. So
nice.
Anyway, rambling on about nonsense. I'll let you guys get back to the markets.
Sweet.
Michael, Will can probably sort you out on dollar yen and that sort of stuff. But
shall take a look. I can indeed take a look at dollar yen.
Yeah, I'll see you guys tomorrow, and we'll run over my strategy then. I think you guys got Will running over his.
You have indeed. You have got I've got a couple of strategies for you today. I've got. Oh no! It missed my entry. Oh, how annoying is that?
But yeah, brilliant double dose for you guys. You got Anastasiia earlier, you got Will now, and then you'll have me tomorrow. So I will see you guys there. But for now, good luck, and don't do anything silly around the UK budget.
Oh God, no.
Stay safe.
No. Yeah, stay safe, guys.
Okay. See you, man.
Awesome. Cheers, LJ. Legend.
See you.
See you tomorrow. Hello, people. I saw one of you guys asking where my partner in crime is. He's got some issues with his electricity. He's had a power cut. Really annoying. Yeah. You know, it's like, I love streaming with Rich. He's a hell of a guy. He's super cool to stream with. Oh, dude, like, come on, Gold. I thought it was going to tap me in. Oh, well. I mean, hey, look, if it moves up from here, it moves up from here. It's getting a little bit close anyway. I don't want to be in this for too long when it comes to the budget coming out. But I mean, what am I up for the month? I'm pretty sure I am. Let me have a look. Let me go on my history to see if I'm actually up for the month. What I'm thinking, guys, is I'm going to have a look, do some live trading, and then once I close this out, that'll probably be me done for the day due to the budget. So I'll jump straight into my strategies that I trade. Let's have a look at November. So I got two strategies for you. I'm going to show you my intraday strategy predominantly, and then I will also have a quick look and show you and talk through my my swing trading strategy. That I'm still working on it, but you know I'm quite looking forward to showing you guys that, because I haven't really spoken to many people about my swing strategy. So I'd love to get, especially if the guys are watching in the background, I'd love to get the guys' opinion on it, especially those swing traders out there. It's a shame I couldn't do it when Griff was on. That would have been super fun. But I'm pretty sure Jonatan, LJ, and Anastasiia, I'm sure they also swing trade. So that'd be cool. So I'm $103 up for the month of November. That's super cool. It may be a case of, hopefully not, but it may be a case of 12 p.m., so noon. I may just take out as close to break even as possible. Just because, like I said, I don't want to be in too close to the budget. And usually my rules say 15 minutes to half an hour before news comes out, I want to be flat. So we will tap into that in just a bit. But let's have a bit of a catch up with you guys in chat. Let me know how you guys are getting on. Let me know what you're looking at. I'm going to do some, like I said, I'm going to do some live trading today. So if you want me checking out some charts, checking out some currency pairs, some assets, let me know. I'll be doing that until about 12:12. And then I'm going to give you the full down low on both my strategies and how I use them. And you can ask me all the questions you want. But first, make sure you smash out that like button on the video, guys. It does mean a lot. In fact, I don't actually know how many likes have we got right now. Let's have a quick look, shall we? Also, let's get some music in here. I love background music. There we go. Come on, guys. So it's going to be a bit of a solo session. So, guys, make sure you keep me company. Make sure you're asking me plenty of questions throughout this stream, and make sure you're gonna smash that like button. We got 138 likes. Let's see if we can get to 250 by the end of this stream, and I shall show you absolutely everything on my trading strategy. But for now, let's have a quick catch up with chat while we wait for gold to hopefully at bare minimum hit my break-even level. William, shift to Dubai to avoid taxes. Me and Rich were actually talking about this earlier, and you know, I said about Hong Kong being an open-ended ticket. I've not got a return, and it's a 2-year lease on the apartment. So I don't know, man. Like, I want a place with somewhere built up and somewhere with a bit of nature and a bit of culture. Dude, Dubai is nice. It's very built up. It's very money, but I feel like it's not very nature. You know, it's just sand. It's sand and buildings. So the tax reasons, of course, you know, it's 100%. Why not? But yeah, well, I mean, Hong Kong though, it's got nature, it's got buildings. The only issue is I can't read a single thing on the walls because it's all symbols. So the missus is teaching me though, so that's something. This tax scheme is to discourage middle class from investing, hoping the state will enough to the future. Buyers trade. I like that view, man. Your views on dollar yen. Let's have a quick look at the dollar yen. I know you mentioned that a little bit earlier. Oh, in fact, actually, I need to Oh, I got dollar yen here. There we go. So, in fact, let me just... I got an EA that I was testing with some of the guys in the community, so you'll have to ignore these. Don't ask what they are. It's... I don't know. I'm pretty sure it's the session, so you're Asia, London, New York, but that wouldn't make sense because we're currently in London. I don't know. I was just testing it with some of the guys, so ignore that. But I'll tell you what, see if I can I remove it? How can I remove it? Oh, I don't know. You're just gonna have to ignore it for a minute. Dollar yen. Let's have a quick look up on the. Let's start on the hour time frame. There we go. Our time frame, we got this momentumous move down. We are trending to the downside by the looks of it. Let's actually jump up on the 4 hour. Ouch, MGN. I just saw that. My brother isn't here. Guess I'll have to unlike it. Woof. Ouch. You better. Hey, actually, I am your brother. What are you on about? You're part of the brotherhood, man. You better like it. So we got this breaker structure to the downside here. So we're continuing that shift, continuing that trend to the downside. We've got lows down here, and then we've got current highs. So let's just mark up the obvious. There we go. So we're currently in this downwards trend. Oh, there we go. Keep an eye on the bottom right-hand corner, guys. You can see the P&L for gold that I'm trading as well. Seeing the 1 hour time frame. We got this consolidation. We wicked below this low. We failed to put in a lower low. So we've wicked below it and broken and closed above. So it is technically maybe an equal low if you want to look at the candlestick closes. But we did wick, and now we are breaking structure to the upside on the hourly. If we see this area here, and then in fact, let's actually mark it up. So this is basically how I do my top down. So this is a good indication. You can actually, if you got any questions on how I do my top down, I will dive into a little bit more depth on it once I close my gold trade. But this is pretty much how I do my top down. Start from the 4 hour, move down to the 1 hour. We got this break and close above, and we're starting to consolidate. Now, bear in mind, we are still in a downwards trend. So if we were to buy this, it is technically counter trend trading. Why? Because if I just move this across, there we go. Of course, not straight anymore. If we just move this across, we can see that we've got structure shift, lower high, structure shift, lower low. Oh, there we go. Let's have a quick, in fact, I'll get straight back to that. Let's have a quick look at gold. What are we, 1158? Guys, what do you reckon? Am I holding this a little bit longer, or shall I close this close to break even? Let me know what you think. So anyway, back to the yen. So dollar yen. So where was I? So we've got this breaking close to the downside. Pull back again, another lower low. Breaking close to the downside. Now we've failed to. You know what? Screw it. That'll do. What am I up for the day? I think actually technically that's down for the day. I think I've just. Yeah, I'm down $1. Oh, I thought I'd close in the green, the blue at least. Okay. $1.30 down for the day. Guys, that's me flat in the market. Close that pending order. That's me done for the day. We've got a very high impact news coming out in half hour. I'm done. I'm flat for the day. It is a losing day by $1.30. I don't care about that. That's absolutely fine. I think I'm $101 up for the month. So technically I'm only $100 up for the month now. So now let's get into the thick of it. Let's get into the sexy stuff, which is my strategy. But first, let's finish off on the yen. We've got this break and close above, which is this structure shift to the upside, showing that trend may want to reverse and start moving to the higher side. We are consolidating slightly. If we can break and close below, there's this area down here that I'd be curious for. Now, if we break and close under this area, then we're going to continue this bearish trend. If we can break and close a little bit higher, then I think we're going to be starting to move to the upside, which is going to be really, really nice. So if we can do that, I think we can have some strength coming into the dollar. Not only, strength into the yen, I think. No, strengthen to the dollar. I always get the pairs, the direction of the pairs mixed up. I'm useless for it. So if we can have some strength coming into the dollar, not only that, when it comes to the pound, oh no, wrong one. There we go. This pound. When we come to the look at that. When we come to the pound, we've had a lot of consolidation. In my opinion, this has been waiting for today. This is purely just budget consolidation. This is waiting for high impact news. A little bit like, think about it like NFP. You know, on an NFP day, NFP Friday, we get like zero price. We get just complete flat sideways movement. Then as soon as the CPI comes out, boom, then we start moving back to normal. So I think this is just waiting to see what's happening in the next half hour or so. So this would be really interesting to see. Euro, I think, is going to be affected. So this is what I wanted to see this morning. Now that this morning is over and we're going to be coming into the afternoon session. I don't know whether this price is still valid, but I think that this is going to be affected slightly by the budget. Not directly affected, but I think it's going to be indirectly affected. I think people are going to be potentially pulling out of the pound, maybe putting into the euro, maybe trade deals as well. It all depends on what's said at from 12:30 onwards. So we'll see. We'll have to see. Euro USD and GBP USD. What would be super interesting to watch would be Euro Pound. You know, if those trading Euro Pound, seriously, Euro Pound and GU, I'd be staying well away probably for the remaining of the year, me personally anyway. Euro USD, I'll probably still trade as normal, probably from December onwards, which is actually next week. Wow, that's crazy. So probably from December onwards, we'll start looking at Euro USD, but for now, you know, gold is treating me really nicely. Yeah, look at this. Okay, so we're just starting to consolidate around a little bit. Maybe it's in preparation. Who knows? We'll have to see if gold is affected by the news coming out. But anyway, let's continue the catch up with chat. You can buy land in the city for the price of that car. Dude, probably. Yeah, no, probably, mate. Dubai weather is not so good. I mean, Dubai's hot. Dubai is hot, man. It's got a reputation of being really like blistering heat. But I don't know. Look, there's pros and cons to no matter where you go. The grass is never greener. The grass is only green where you water it. I do believe that. So, having said that, there are contributing factors. You know, you can't grow grass where there's just blistering sun and no water, you know. Hello, everybody. Hello, Andreli. Dude, I'm sorry if I butchered that name, but hello, how you doing? Good to see you, Ed. If you're a new member coming to, or if you're a new viewer today, then make sure you smash that like button and make sure you subscribe to the channel. I have uncles who regret investing in the UK and nephews and nieces who will not invest in the UK. One has shifted to Aussie, into Perth, nice, and another to Dubai. Dude, this is really interesting. So there's a lot actually, the higher ups, so the governments are actually speaking about this at the moment. So you say that there's, so the older generation who have invested in the UK, who have sown their roots in the UK, they're not going to move. However, it's the younger generation they need to keep an eye on. You know, people like us, like people like me anyway, who are potentially have the ability to leave the UK. You know, they got to remember, like, they got to think of the UK for the future, for future generations. And it worries me that they're not thinking about that at the moment, which is worrying for the future of the UK investment market. So who knows, man? You know, time will tell. But I do hope that the UK sort their act out soon. Otherwise, it's going to be a heartbreaking decision. I really don't know where I'd go, but I can't see myself living in the UK the way it's spiraling. But who knows? Rich plus are protected by companies and trust. I'm not qualified to go into that, but it's a very interesting topic. It's more pub talk that I could talk to you about that, because, you know, I'm not a financial advisor. However, I do love reading up and like investigating how there are loopholes, should we call it? But I'm not in a position to talk about them, unfortunately. Come to Australia in the wet season, Will. You'll be in for a treat. I mean, yeah, dude. I saw LJ sent us a video of what the weather was like on Monday for you guys in Australia, or certain parts of Australia, and bro, it was insane. Like, it was absolutely nuts. Requirements for getting funded: so 8% TP. Oh, I say 8% TP. 8% profit target. Phase 1, 5% profit target. Phase 2. And then you are funded, my friend. But as long as you stick to the rules, stay to a consistent reliability in trading. How do you make MT4 in dark mode? It looks cool. Dude, it does, doesn't it? So if you go up to view, and then you go down to color themes, then you can go system, light, and dark. So go to dark mode. So again, go up to view, which is right next to file. Go down to color themes. You have light mode, which I hate now. I hate light mode. It looks so ugly and it's so bright. Whereas you go to view, go to color themes, go to dark mode, and bro, it's just, I'm a dark theme guy. I love my dark theme. It's just so much easier on the eye. Hello, William. HK, what's good, my man? How you doing? Good to see you in, bro. I'm going with the Fivers competition, full margin sell on GU. Mate, you're a braver man than I am. But who knows, mate? Who knows? That may be interesting. Let's have a look. Looking at long on gold, yeah, 100%. I love the idea of long in gold, but man, I'm gonna delete this now because the consolidation zone has been broken and closed above. Same here. This has been respected, so it's no longer valid for me. Why can't I delete it? There we go. So no longer valid for me. Break and close above this. We've not really retested it, but we kind of have, but we haven't. So do I leave it on? I'm gonna leave it on. I'm gonna leave it on for a minute. But yeah, we've broken and closed above this now. So buys for me are super valid, and I'll dive in deep why in a second. So the sand is nature. I suppose. Yeah, no, that's very true. But I'm more into, I love my mountains. I love my fields, my rolling hills, my green grass and stuff. I'm a typical Welshman. I'm a typical Welsh country bumpkin. Hey guys, Master NQ, what's good, my man? How you doing? Is it the Fivers that allow to trade news? There are any rules? Oh, dude, like, I recommend you read up on the rules or chat to support. But as far as I'm aware, you can hold through news. Just don't open or close a position 2 minutes before or after. Other than that, yeah, I'm sure you can free roam trade through the news. Just be very careful. If you have anything to ask William to check out or review, drop it in chat now. 100%. Drop it in chat. Ask away. Ask any questions, and I will. I'll definitely answer them with at the best of my ability. And then once I've jumped into my trading strategy along the way, if you have any questions whatsoever, absolutely ask me anything. I'd like to tell him. I'd like him to tell us what that spike was. All about the specific on GBP JPY, because there was no news until after 30 minutes. GJ, let's have a look. It's the same with GU, mind. So maybe it was just, I don't know, maybe it was anticipation for the news. Maybe people are trying to get in early. I don't think there's any early releases. There's nothing on Forex Factory. If I haven't, I'll refresh it and have a look. Okay, hang on a minute. There was 25 minutes ago. We did have something. Yes. Okay. When was that spike? Because we did have something 25 minutes ago. The Bank of Japan. That was 10 hours ago. Sorry, ignore me. 25 minutes ago. Here we go. UK's OBR outlook. Real GDP is forecasted to grow by 1.5% on average over the forecast, 0.3% slower than March projections. So yeah, UK's Office for Budget Responsibility outlook. So there was a little bit of something out 25 minutes ago. That was breaking news. So high impact breaking news. That wasn't forecasted news. That would have been the spike on GJ and GU. So any pound pairs would have been affected by that. I hope that helped. William, what is your advice? Can you give? What is the advice you can give for those who trade at drawdown? Vinny, I will remember your question. Yeah, so this is a fantastic question, and Vinny asked the same question a couple of days ago. So basically, if you're in drawdown, my strategy to that is lowering your risk and taking profit whenever possible. So again, I will go into my strategy to this as well. It's part of my strategy. I got two types of ways of trading one strategy. One is what I call my low hanging fruit strategy. And you can use it, you can steal it and take it from me and make it yours, or you can just give it a go and back test it yourself. It's what I like to call my low hanging fruit. So what I'm going to go ahead and do now, guys, is actually I'm going to now move over from MT and I'm going to bring up my trading view. There we go. Can you guys see this okay? Let me know if you can see my my chart all right. I've moved over onto the trading view chart now. So this is going to show you all the current pairs that I trade. So you got GBP USD. Wow, look at that sell-off. Hey, Louis, if you're selling that, man, full margin sell, my friend. Euro USD. So the current pairs that I trade. Gold, XAU USD. And then I got my swing trade pairs as well. So EUROJPY, US30, NASDAQ, and S&P 500. I do also intraday NAS, but I don't need to because my intraday on gold and my dollar pairs have been pretty good at the moment. So not necessarily needed to move over onto my indices. So yes. So right, let me have a quick look. So when I'm looking at coming out of drawdown, or when I'm currently trading in drawdown, I have what's called a low hanging fruit strategy. So let's say, for example, we got a consolidation zone here and I want to be trading the breakout. Let's say, for example, here, there we go. So we got a breakout, stop loss at the low. So my stop loss is always at the low. A lot of people have, I'll have a 10 pip stop, 20 pip stop, 30, 40, 50, 100 pip stop. I don't trade like that. I have a stop loss based on the current low. And this is what Griff was talking about yesterday, where he moves his stop loss. He'll manually trail his stop loss with the swings. So every higher high, once it puts in a higher low and then creates a higher high, he will move his stop loss up to that higher low. So my stop loss is always at the previous low. So as you can see here, we've got this consolidation, we've got the breakout, potential entry criteria, and then we've got this low here. So this low now is the previous low. If I want to look at a previous low before that, so maybe I was entering here and that low's a little bit tight, and maybe I don't like the idea of that tight of a stop loss, I'll go to my previous low down here. So basically what I like to see is highs and lows. This is what 90% of my stop loss and take profit is based around, is highs and lows. So let's say, for example, here, previous low, I'll put my stop loss here. Now, when I'm in drawdown, I look for my lowest hanging fruit, because I want to get in and out of the market as soon as possible. So I'll lower my risk, usually to about 0.2%, maybe 0.5%. And that's what you see me trading now. Like, you'll see me trading at 0.2%, so $200 on a 100K account, or maybe $500 on a 100K account. But not often do you see me go much more than $500 risk, unless I'm super confident, and then my experience will take over then. But when it comes to mechanically speaking, I will only risk up to $500, which is 0.5%. Now, low hanging fruit for me would be the next available high. So I've got this area here. This is where I've entered from. Well, actually, technically, this would be where I'm entering from. So this is where I'm entering from. My low hanging fruit is my next available high, my next available liquidity point, my next available break of structure point, whatever you want to call it, which would be here. But again, that's only a couple of, how many pips is that? Not even, it's literally a couple of pips. So that isn't even worth remotely considering, especially that I've got an 8 pip stop loss. So this is on the 5-minute time frame, 8 pip stop loss. And then, I want to see if I can go for a 1-to-1, preferably. If I can't, what can I go for? My next low hanging fruit is here. That is a 2 pip stop loss. So 2 pip TP. To me, again, it's not that worth it. So therefore, if I'm in deep drawdown, I'm not going to take that trade. That's not a valid trade for me because the risk is a lot more than my reward. So again, I'll wait and I'll wait and I'll see what happens. And okay, we've got consolidation here. Is it valid? Not really. I don't like that. Okay, boom, we've got consolidation here. Very nice. Okay, there we go. We mark up the consolidation. And then I want to see a break and close above it. So what do I want to see? A break and close above consolidation. We got it here. So I'm going to enter my trade on the break and close of the consolidation. So potentially the new open. Where am I going to put my stop loss? I have two areas. I've got my previous low, which is here. Or I've got another low down here. Now, depending on how much I want to risk, depending on how much drawdown I'm in, I'll probably put it a couple of pips below or a pip or two below just to take into consideration potential spread. So I will put my stop loss just below this previous low. Then what will I do? I'll look for my low hanging fruit. What's my low hanging fruit? Potential future highs. So again, we've got nothing here, no highs. Okay, we've got a high here. Perfect. Now that we've got a high here, there we go. Have I got any other highs that I can look for? No, nothing. Okay, fine. There is my TP. Now my TP is a negative risk reward. There we go. So it's a 0.6R or minus 0.6R trade. So what I want to see now is the continuation. Boom. I take, let's say I'm risking 0.5%. I'm taking $250 or just over $250. Yes, it's negative risk reward, but that's my low hanging fruit TP. Now, yes, okay, you got to have a higher win rate. That is coming through my confidence. That's coming through my experience in trading. That's what I'm looking at for when I'm in drawdown. And you'll see me do this a lot. Once I'm out of drawdown, which isn't far off, guys, I got 1.5%. Once I'm out of drawdown, you'll see that I'll actually hold to a full 1-to-1 or 1-to-2R trade, opposed to now that I'm just taking out at my low-hanging fruit. So that's how I personally get out of drawdown. Lower risk, 0.2% to 0.5%, and take at the low-hanging fruit. I feel EU would be affected by the UK budget as they are step bros and step sis. EU I think will have a indirect effect. That's why I said I probably won't trade EU for the first week or two of December. Guys, I do apologize. It is only me today, so I do apologize if I miss you guys' comment. But I will try and get to it. So don't spam, but feel free to message me a couple of times if I do miss it and I go past your comment. Where is Rich? He's got a power cut, unfortunately, so he won't be joining us. So it's a shame, but he will be back tomorrow. Surprisingly green here in the south of Spain, mountain, sea, and sunshine, 100%. I'm seriously considering Marbella way. Like Fangarola, Marbella. You know, my brother's fluent Spanish. We love the culture, and we love the sun. Let's try and. I think the budget is released early. I don't think it is. Maybe it is. I haven't heard anything that's released early. I got the Guardian up here as well. Top stories, transformation review budget expected to include tax rises. No, it's not. It hasn't been released yet because it's expected still. Right. Okay. BBC saying budget details released early. Oh, no way. Budget 2025 live update. Rachel Reeves to outline tax, and that was only 9 minutes ago. Maybe she started talking about the budget early, but she hasn't fully, she hasn't finished talking about it. Stay with the fivers. Yes, my man. You know how it is. Stay with the fivers. Give us a big like if you like the fivers. If you don't like the fivers, then subscribe to the channel and we'll show you why you should like the fivers. OBR released by error. Oh, no way. Okay, that's what it was. The OBR was released by error. Oh, interesting. Okay. It was released by mistake. Interesting. Will Richard be sharing his strategy? No, he's not here. He's not here. I can go into Rich's strategy if you want me to, guys. I won't go too in depth in it because A, I'm not rich. B, I don't want to give his secrets away, but I will give away what he shares on stream if you want me to touch at the end on what he talks about. But enough talk. Let's fight. Butchered that one. Anyway, so guys, enough gandering and worrying and stressing over the markets. Let's check gold one more time to see what would have happened. Okay, we're still in drawdown. I'm going to leave this drawn up, even though I am technically taken out of it. We've got 10 minutes until the news. I'm going to jump straight into my strategy. Let's stay on gold for now, but I'm going to move up here. So I have three strategies, 2 intraday strategies and 1 swing trading strategy. Super simple. So what I do is I look for trend on the higher time frame. So let's say that this is anything from the 4 hour to the 1 hour is my higher time frame. So that's what I'm looking for. Is I'm wanting to identify where price is going. So I want to see, are we in an uptrend? Are we taking highs? Are we putting in higher lows? So I want to be able to identify where we are when it comes to directional bias. Once I've done that, I'll drop down to the 15-minute time frame. The 15-minute time frame is where I usually see my confirmations. And what I mean by this is I'll look for something a little bit like this. So let's assume that this is the higher time frame. I'll look for something a little bit like this. Now, if I can preferably see this on the 15-minute time frame, this is what I look for. And this, when I mean it's super simple, guys, I cannot emphasize enough how boring my strategy is because it is so simple. A monkey could trade this strategy if you taught it correctly and taught it out a backtest. So what I want to look for is some form of consolidation, just like this. I want to see it following a trend. So if we can see consolidation and we can see previous highs, then what I like to do is mark up my high, mark up my low, and then what I like to do is mark up potential future highs. So like I spoke about earlier when we were talking about in drawdown, I like to mark up my potential low-hanging fruit. So when I'm looking at my low-hanging fruit, it is potential highs and maybe even higher time frame highs, 1 hour highs, 4 hour highs. So I like to see my consolidation. On the 15-minute, I don't mind a shorter consolidation. So I don't mind the consolidation looking like this, but it's got to be, I got to be very picky on the 5-minute. So what I want to see on the 5-minute is a nice, solid consolidation level. And then I want to see a breakout. Now, it doesn't matter where. Preferably, if we're in an uptrend, I'd prefer to see a breakout to the upside than to the downside. Now, if we are seeing momentumous moves to the upside, then we see a consolidation, a break and close above. Then I'm like, yes, love it, sweet. I want to be trading a buy from the breakout at the upside. Now, if we can see our low-hanging fruit, if I'm in drawdown, it'll be my low-hanging fruit, even if it's a negative risk reward. If I'm not in drawdown, it'll be as close to 1 to 2 hours as possible. Preferably a 1 to 2 hour ratio, or 2 to 1. If not, I don't mind coming slightly under, but it has to be over a 1 hour. I refuse to take a trade that's less than 1 hour if I'm in a positive outlook. So if I'm currently floating in positive equity on the account, I don't want to be under a 1 to 1 hour. I want to be at a minimum. So let's say low hanging fruit is under a 1 to 1. Then I'll ignore that low hanging fruit. But what I will do, I'll set an alert because I want to see how price reacts to it. However, if price breaks and closes above it, then I'll be like, right, okay, yes, let's see what my next low hanging fruit is like. If it's a 1 to 1, sweet, there it is. There's my trade. If it's above a 1 to 1, I'm like, yeah, sweet. Let's see how close that 1 to 2 I can get. If it's a 1 to 7, like it is here, I will see what it would look like if I can push it to a 1 to 2. Now, what that means is I'll set an alert at my TP level, but I will set my TP at a 1 to 2 risk reward ratio. Now, however, if I see my break and retest, so the two different strategies, that's my breakout strategy, which I will open a trade on the break and close of the consolidation. If I see a pullback, I will also trade a break and retest strategy. Now, my break and retest strategy is predominantly EUGU. I don't trade a breakout strategy on my EUGU. I don't find it is as beneficial to me. However, I can always test it and see if it's a valid trade, and if it is, then boom, yeah, happy days. Now, a lot of people will say, well, that's awesome because that's like a 3, 4, that's like a 5, nearly a 6-hour trade. No, because then, do you remember earlier when I mentioned about my my low hanging fruit down here, and I said that it's just under a 1-to-1, it's a 0.8. Now, if I move my second TP down here, it's a 1.3. So with a 1.3 and a 0.8, that's 2.1. Yes, 2.1. Whoa, quick maths. So that's a 2.1 risk reward ratio. Yes, I know I've doubled my risk, but I've also potentially doubled my reward, or I've kept the same reward, but at a lower area. So now I got 2 trades, doubling my risk. Yeah, true. However, my 2-hour risk reward, instead of being all the way up here, it's now all the way down here. Now, yes, you could say, oh, but Will, you could take away a 5-hour trade instead of a 2-hour trade. True, but in my eyes, I want to get in and out of the markets as quick as possible. I want to leave it as close as possible to my entry time to my exit time, because that means if I can bag, let's say I risk a full 1% on these trades, I'd probably risk 0.5%. So if I can risk a full 1%, that would be $2,000. Yes, I'm risking 2%, but now it's a 1-to-1 risk to reward, because I'm risking 2 to reward 2. So now if I can get $2,000 and I can get that within an hour, half an hour to an hour of opening the trades, I walk away from the charts after 1 hour or 2 hours of trading or half an hour of trading with $2,000. Now, yes, I could come all the way up here, and yes, it could still work and it could still be a valid trade opportunity, but I'm okay taking away $2,000 for the day. I'm walking away. I'm more than happy for that being, and it is part of my plan. So that's something I'm comfortable with. So as far as my actual, how I will take the trade is, again, I'll open the trade on the close of the candle that broke and closed above. If we get, in fact, let's actually move this down. So let's say we wicked up, we didn't close, and then we moved down, broke and closed, and then started moving down. Because of the overall time, the overall direction, the overall directional bias on the higher time frame, I will be very cautious and very careful when entering in a break and close trade. I wouldn't take a sell here. But instead, what I would do is mark out this area here, and if we came back and wicked it, then I would open a sell position. I'd open a sell position here, stop loss at the high, and then I would target a 1 to 2, or I'd target the low hanging fruit. So for example, if it's down here, I would take into consideration these points down here, and that's where I'd want to be targeting. All depends. So I'm a little bit more picky when it comes to my counter trend trading, because I want to make sure that I'm taking the best and the highest probable setups. A plus, or an A, you'll hear me talk about A plus setups or A star setups. I'll take an A, not a B. I don't want to take a B. I'll take an A or an A star setup. So that would be, for me, if I broke and closed below here, it would be a B setup. Yes, we've broken and closed under this level here. However, it's counter trend. We're in an overall higher time frame uptrend, and we've now broken and closed and sort of shifted the direction of trend. Now, if we can pull back up into an area and wick it and show rejection, and then with maybe a bearish engulfing candle, show that we are trying our hardest to sell, then I will open a sell position when I get confirmation. Does that make sense? And again, if anyone has any questions, feel free to ask away. I'll try and catch up with chat. Which time frame do you use these strategies? So again, on the 4 hour and 1 hour, I'll do my top down, and all my top down is identifying my current high, current low, previous high, previous low, and identifying higher highs and lower lows. And all that is doing is literally just drawing like that, just to identify what my overall trend is. Super easy to do. But it's a little bit more complicated. I'll go into some live examples, but a little bit more complicated identifying higher highs and lower lows on current situation, like current lows and current previous lows and previous highs. But again, it's super straightforward when you think about it. It is literally just the high that you're at, the previous low, the previous high, and the previous low. That's all I mark out. But I'll dive into some live examples of that in just a second. Do you set break even after some profit? No, I don't. And the reason I don't do that is because of Richard Wells. I was streaming with him end of last year, and he was talking about a BEB, a break even bounce. I'd never heard of a BEB. And I thought, what's a BEB? What's a break even bounce, Rich? And he explained that break even bounce is when you're in profit and price will come back and test your entry level and continue on up. And for me, that would just be taken out at break even. I'd be like, oh, okay, yeah, I've just been taken out at break even. But the more I looked at it, the more I thought to myself, I'm not mitigating losses. I'm preventing wins. I started realizing that there were more, I was getting taken out at break even and hitting TP more often than I was getting taken out at break even and hitting a stop loss. So I started thinking to myself, wow, okay, so Richard Wells is right. There's a break-even bounce here. And maybe not on my 5-minute strategies. Usually my 5-minute strategies, it's pretty much almost straight to take profit, or it'll consolidate halfway through. Whereas on my 15-minute, on EU and GU, it happens a lot more. On gold, I don't really get a break-even bounce. On EU and GU, I get a break-even bounce quite often. So I've stopped setting at break-even. However, my swing strategy, I do trail my stop loss. So I will go into that. Any more questions? Possibly. Are you guys a good prop firm? No, we're not good. We're amazing. We are the best prop firm. I mean, all jokes aside, we are. But yeah, I mean, look, find out for yourself, man. Find out for yourself. Come check us out. Grab some accounts. Read our rules. Read our, read everything. Read the T's and C's. We got nothing to hide. We even get the CEO on here. We get him on stream sometimes, on some days and some weeks. So, we are a fantastic firm. I personally wouldn't put my name and face to a firm that I didn't believe in. And that's why I'm here with the Fivers. I love everything they do. I trade with a $100,000 funded account, live funded account with the Fivers in front of you guys every single day. So, I mean, that if that doesn't say what it needs to say, I don't know what does. But do your own research. Check us out. And if you have to check out some other firms to realize we're the best as well, you can do that. I like target 250. On what, right? Oh, in fact, we're 12:30. Let's have a look at what GU's doing. Oh, that's anticlimactic. I think it's because the news got released early. See results about budget of the United Kingdom. Yeah, I don't think she's finished talking yet, is she? Yes, it says it's live. So I think we're gonna have to wait until about 1:30 until wait for her to finish talking, and that's when the whole budget will be released. I think it's just gonna be we're gonna get information drip fed to us. But I was watching it live before jumping on stream, but I didn't quite catch enough information. Should we consider 2 timeframes or 3? That's really interesting. So it all depends on your strategy. Griff is a swing trader. He only trades 1 time frame, being the 1 hour. Me, I like the 15 minutes. So I'll jump into some live examples now, actually, on gold. Right, look at... Oh, no, come back. Look at that. We would have been wrong on gold. In fact, actually, I would have been tagged on my second entry, though, so... That would have been interesting. Let's place let's just draw this up to show you guys what my second entry would have looked like. For those of you who are newly joining, today I am breaking my entire strategy down for you, as well as showing you guys the trade that I was in on gold, but I cut. So let's have a look at some examples. So we got some consolidation zones here. Again, whenever you see a consolidation zone, it doesn't matter what, you can pick your own consolidation zone. This is on the 5 minute. You decide what a valid consolidation zone is for me, for yourself. For me, this is a perfect consolidation zone. For me, this here, where price is doing nothing for a decent amount of time. Here, this isn't really consolidation. This is more maybe Richard Butler's base rally sort of strategy. This is a nice consolidation here, but this was nearly at midnight. So again, I wouldn't have been trading this. But we had this nice breakout to the upside. We would have closed here. Stop loss, I would have put at the low. I wouldn't have put it at this low. And the reason I wouldn't have put it at this low is because we wicked it and filled this gap, and I would have been a little bit concerned that we're going to retest the wick. So I would have put it at this low down here. Just like that. And then again, where is my low-hanging fruit? So my low-hanging fruit has got to be above my entry zone. So where would that be? We got maybe a low-hanging fruit here, but it's not great. Low-hanging fruit would have probably been this high up here. So really, really nice low-hanging fruit, because low-hanging fruit to me is the easiest profit possible. It's the most probable. Think about looking at an apple tree, and then you can get the apple at the top of the tree, where you got to get a step ladder, you got to jump, you got to do all sorts of acrobats to get up to it. Or there's a branch dangling at the bottom, you just pull it off. So that to me is low-hanging fruit. So this was a 1.86 risk to reward. So again, what would we have been looking at down here? A 1-to-1. In fact, that would have been a 1-to-1. So that would have been quite nice. But we had a 1.86 up here, which was really nice. So I probably, depending on what sort of drawdown I'm in, if I was in 5% or more, I would have taken out here. However, if I was in, like I am now, I would probably have taken out up at this level here. Excuse me. So again, that would have been a breakout strategy or breakout trade. Now for my re-entry, so my break and retest trade, which I will trade on the same day, on the same moment, on the same trade idea as well, by the way, guys. So we've got this consolidation, breakout, entry, pull back. So again, it's that break and retest. We got the breakout, but we've also come back. There we go. Break, retest, continuation. So I would have also entered probably at this level here. Yeah, probably would have entered around. Oh, you're going to hear my dog bark. The postman's just come through. What are you barking at? He's come to join. I don't know if you can see him. Oh, no, you can't. You can just see my bag. My dog's joining me because it's that cold. I put the heating on in my office, so he's cuddled up on my sofa. So there we go. We've got the break-in retest entry here really nicely. Again, what do I like for confluence stacking? So I like to do what I call confluence stacking when it comes to a break-in retest. It's not just a breakout of the consolidation. It's a breakout I want to see if there's an imbalance. So let's just clear this up so I can make it a little bit clearer for you guys. There we go. So we got a break of the consolidation, break and close. We've got an imbalance, which we discussed the other day, a fair value gap. So we've got this fair value gap here. We've got a breakout, and by the looks of it, we've got a really nice fib level as well. So if I go from low to the high, we've got the perfect golden zone. So my golden zone can be anything from the 50 to the 6-1 or the 6-1 to the 7-1. Preferably, like recently, I find the 0.5 to the 6-1 level is perfect for me. So imbalance, or I call it imbalance, a fair value gap, and we've got to tap into the Fibonacci retracement, and we've got a break and retest of the consolidation zone. To me, this trade here is an A+ setup. So I saw in the chat, one of you guys were actually asking, let me have a look. Where were you? Ooh, hello, gorgeous. Don't worry, I'm chatting to Rich. In fact, let me bring him on before I have to get sent to HR. Hi, Rich.
Ah, mate.
How is that electric treating you?
Let's talk of things that are fun. Let's talk of nice things, not annoying things. Nah, the power literally just came back now. Don't know what was the problem.
Nice. Awesome stuff. I'm gonna continue this a little bit real quick because I'm looking for a specific question. But this question is here: do you use fib levels a lot? I use fib levels on the daily. You just don't see me place it because my eyes, through that much experience, are now actually able to identify fib levels without drawing them. But I identify fib levels almost every single time I take a break and retest trade. I'm looking for the question. Oh, it was a fantastic question as well. I can't.
Is it should we consider 2 time frames or 3?
Yeah. Will, how do you know if the setup is an A+ setup? This is what I love. I love this question. I'm glad someone asked it. I know it's an A+ setup due to the confluences. So what I like to call confluence stacking. A+ setup will have no less than 3 confluences. An A will have about 2. Oh, I'm getting a sore throat with the amount of talking. Yeah. So an A setup would have about 2 confluences, and that'll probably be either a fib and a break and retest, or an imbalance and or like a fair value gap and a break and retest, something like that. Whereas this would be an A+ setup because imbalance or fair value gap, whatever you want to call it. We've got imbalance, check. We've got consolidation, break and retest, check. We have also got the low to the high. We've got my golden fib zone, check. 3 confluences, A* setup. That would have been so much more easier to just go with an A+ setup. A+ setup. So A+ setup would have to have 3 or more confluences. Now that is how I identify, and that's how I decide on whether a trade is an A+ or an A, or I probably shouldn't be taking it, is through confluence stacking. Guys, I cannot recommend you do this enough. If you're going to take anything from today on my strategy, let it be confluence stacking and identifying low-hanging fruits, because they're the 2 things I'm super passionate about, because it really will help you identify whether they're high probable trades or not. Let's continue. There's a couple of other questions down here. Again, yeah, 100% I use fibs a lot. Sanji, how you doing, man? Good to see you. Really appreciate that. Good trade. Thank you very much. Yeah. Okay. Yeah, Louis. Budget details are released by mistake. Trust the UK. That's just us all over.
Is that why we had this spike?
Yes, that was the spike on. Having said that, we did have some other stuff come out, but yeah, that was the spike on GU.
At 13:30 my time.
Yes, yeah.
Yeah, 13:30.
Yeah. I like the analysis, sir. Really appreciate that, man. Make sure you smash out the like button if you're liking what I'm talking about here. Make sure you subscribe to the channel if you are new here. Like I said, 250 likes by the end of the session. And let's see how close to 100,000 followers we can get, or subscribers we can get. Good confirmation.
Have we done the draw already?
No, we haven't. Jonatan did pop in for a second, but then he popped out.
Okay.
Hi, sir. How are we doing? How are you, my friend? Welcome, Richard. Yes, my man. Welcome back, Richard. It's good to see you, bro.
So sorry for my tardiness, for being late. This is unlike me. I should have,
That's right, man. Hey, look,
woken up earlier this morning, and I should have been prepared.
Should have been prepared for that electricity cut. Where's the generator, man? Anyway, I'm gonna continue the what I was talking about. So, guys, when I was saying about this break and retest, you can choose to do a breakout trade, a break and retest trade, or both. I choose to do both. Again, this depends on whether you're in drawdown or how much you're in profit by. It all depends. This is why a lot of my trading is discretionary. We've got this area here. Now, we had a pullback. Now we've got 3 areas of low-hanging fruit. We got this current high. So we've got this area here, which is a 0.5 risk to reward. In fact, no, it's going to be higher than a 0.5. It's going to be nearly a 1, because we could have this. And again, depending on how much you want to risk, I would choose to put it a couple of pip or so below this low here, because this would be my discretionary stop loss then. Because if price comes below here and then pulls back, I will get out at break even, because I don't want to see it move below this level. Like I said, again, for me to teach my strategy, I need probably a full week, all day, to show you. So I'm trying to do it as quick and in depth as possible. So this is what I'd be seeing, is this low here, 0.8 risk to reward at this low hanging fruit here. Or we've got the second low hanging fruit, which is probably a little bit more realistic, but I'd need to see a break and close above this high for this low hanging fruit to be valid. Now, if we got a break and close above this previous high, then I'd probably be considering chasing this low hanging fruit for a 1.78. Now, if I was in good profit, I was only in this trade, I'd probably chase the highs. Now, if I chase the highs, that's a 2.76 risk to reward ratio. Now, it would need to have a confident break and close above, and then I'd probably even look at scaling in. So you can see that we got this consolidation here, which, like I said, was a little bit closer to Rich's rally-based rally strategy. Similar, not quite, but it's similar. It's like a mixture between my consolidation and Rich's rally-based rally. I probably would have looked at, taken a trade around here somewhere, and then stop loss at the low, and TP probably at a similar high for a 0.5. So that would have been 2.6 plus 0.5. That's probably what I would have looked at. But it all depends. All depends on how I'm feeling at the day and whether or not I'm in profit, whether I'm not in drawdown or not. So that's exactly how I trade my strategy on gold. Breakout needs to be trend continuation. It needs to be trend following. If it's a counter trend trade, there's a good chance I won't breakout trade it unless it's got high validation and we've already had a confirmation of the change in trend. Otherwise, it'll be break and retest. Now, break and retest needs to be 2 or more confluences. So I need to confluence stack, and then I will enter in. On GU, very similar, except I use my fibs a lot more. Very similar to my gold break and retest. But it's usually a little bit more in the 15-minute time frame. I need to try and find some opportunities because I haven't really been trading GU recently. This is why, I mean, Nothing great here going on. That's what I mean, guys. I've been struggling to find it a little bit on GU. Truth be told, actually, GU and EU have been playing out with the gold strategy a little bit more. But because gold's been doing that well, I don't need to break out strategy on EU and GU because gold's working. So actually really struggling to find some nice break and retests. But as you can tell, you know, it shows with my account history. Yeah, I took a loss there. In fact, that was a breakout trade, I'm pretty sure. But we're going miles back now. This is back in start of November. I was drawing these out. So we had the 4-hour wick, break and close under, and then I wanted to see what happens around here. If I was correct with my overall bias, mind. We pulled back a little bit. We just didn't pull back as far as I wanted to. I wanted to see a nice pullback into this, again, my fib zone here, and then a continuation downwards. We didn't get it. That's why I haven't traded much. We got a wick above. In fact, we got a wick above and you know, that continuation down. But again, we just then completely reversed back up to these highs. So yeah, I'm not really seeing much on EU, hence why I haven't traded it recently. GU, very similar. There we go. Let's have a look, see if I found anything on the 15-minute. And again, I don't really delete my trade ideas. Okay, we got a nice one here. So we got a break and retest on the 15-minute. Again, consolidation, break out to the high side, pull back, break and retest, plus fib level of this entire candle. This is probably executed on the 5-minute. Stop loss at the low, TP at the high, and then into my golden zone, into my consolidation zone, continuation up, takes the highs, and hit TP. That was my last GU trade, 13th of November. So, I don't really see much at the moment on EU and GU. Gold, for me, though, has been really nice. So again, you know, this was my trade. Oh, in fact, there we go. We would have actually probably hit stop loss. We're about to hit stop loss on that trade that I closed early for break even. That was earlier before 12. So we've got this area here. Again, breakout, trade, retest, trade, TP. That was the example I just drew out for you. Some live examples, I would have taken these on the 5-minute, I'm pretty sure. But again, I actually drew these out. Most of these were drawn out on stream. Because I'm in drawdown, I actually closed them early and I gave my reasons. I showed you why I closed them early. But had I have left them run, we would have had a 2-hour trade here, low-hanging fruit. Like I said, you know, guys, look, low-hanging fruit here. Then I would have had a second entry and a third entry, all on the same day. That was a 1-hour. That was a 1.2-hour. Again, low-hanging fruit. So that was really nice. So I would, for that day, and I entered every single one of these trades. I just closed them early. So I think I closed for what I was risking, a 1-to-1. So had I have left them, I would have had 2, 3, 4, 4.1, 4.2%. R day, depending on my risk. Let's keep looking. Keep moving back slowly. And again, these are all confluence stacking. They're breakout trades through trend continuation, but the pullbacks are all confluence stacking. They're fib levels, continuation. So there we go. There's a continuation pattern on the 5-minute. You know, you can see the reason you can see it's a continuation pattern. All I do is draw out the consolidation, follow in the trend continuation, break and close above, follow up. If I can't see, like if they're like all-time highs and I can't see a potential TP area, like a low-hanging fruit, I'll do one of two things. I'll either set no stop loss and set no TP and trail my stop loss, or I'll actually set a hard risk to reward at a 2-hour trade. Let's keep looking. In fact, let's get rid of. There we go. Keep looking, keep looking, keep looking. Again, nothing here. I saw this consolidation zone. We came down and wicked. We didn't really close. We came down and wicked into this consolidation zone, and then we pulled straight back up. And I thought, do I enter in? But I thought, no, it was all just too messy because, again, why? We saw the trend was up. It was an uptrend. And then we were wicking here. We pulled back into this area, and it was all just too messy. So that would have been probably a B setup for a sell. I didn't want to enter into it. I didn't want to sell because it wasn't a valid trade setup. It wasn't even an A. It was like a B setup at best. If I was swing trading gold on the 15-minute, this would have been a really nice setup. You know, we had this consolidation, break and close above, retest, pull back in. It wouldn't have been a fib level. Oh, no, it would have been a fib level. It would have been within my golden zone just about. We could have entered on a break and retest at the low of my fib level. Stop loss probably would have been either here or just below this wick. So that would have... I would have come into some drawdown, but nothing too major. Again, low hanging fruit, which is my previous high or my closest point. Now, I haven't spoken about potential points of reversal. If you want me to speak about potential points of reversal, I can in another session. But this is pretty much how I enter my trades and how I take out of my trades at my low-hanging fruit. So that was two confluences. We've got my fib, break and retest. It's not... I mean, there's a little bit of an imbalance, but nothing too crazy. So that wouldn't have been the best A+ setup, but it probably would have been just about an A+. I'm sure I have some losers around here somewhere. Not seeing many there. Again, in fact, this would have been stunning. Consolidation, breakout. I think I didn't enter it because of the way that this wicked to the low, but this would have been really nice. A breakout trade and a break and retest, and then a continuation to the downside. Again, we got a nice order here. In fact, have we got a scaling? No, we haven't. There we go. So we've got 2.5R. Y, consolidation. We've got this consolidation zone here. Break and close above. Pull back. And a continuation up. We could have actually scaled in with a continuation above here. So that would have actually been quite nice, but maybe I just didn't think about it at the time. So yeah, that's pretty much my strategy on gold. I don't really trade it on GU. If anyone has any questions, then it's super simple. And that's probably like my entry criteria is super simple. My strategy is super simple. My exits are a little bit more complicated. Let's have a quick catch up with chat. Let's see what you guys are thinking. For sure, it's a super simple strategy. 100% man. It's so easy to replicate. So easy to replicate. You know, and it's nothing complicated. Outrageous rich. How dare you?
Yeah.
Yes, sir. Thanks for doing this, even if I won't win. How do you enter the giveaways? This should be on...
There's a pinned comment.
Yeah, I was going to say, it should be a pinned comment on the giveaway section, or on the comment section, so you will be able to enter into the giveaways.
Yeah, it's a gleam.io hyperlink that you can click. And then you just follow the instructions.
Yes. I think the Fibers are the best prop firm. You have great thoughts, my friend. I completely agree. Break and retest, simple but powerful, good strategy. Yeah, the break and retest. The break and retest is probably the nicest strategy, if I'm honest. I like the breakout just because it gets me in. You know, it gets me in, and it's a nice strategy. EU is crazy, dude. EU is crazy.
It's consolidated.
Yeah, what moving average are you using? On this strategy, I don't use a moving average. However, before we end, Samir and Victor are going to be joining. Dude, I'm sorry, guys, but I'm going to leave you sitting and waiting because I'm going to jump up onto the 4-hour. And this is going to, again, super simple strategy. I don't trade difficult strategies at all. This is on EU and EURUSD. This is my swing strategy. We have an entry criteria here. I missed this. I was so upset. I missed this. I would have entered here on the confirmation. Oh no, come back. There we go. So we had a failure to break below this. We wicked it, and then we confirmed with this candle that we were going up. My stop loss would have been at the low, and then I don't have a TP. I wouldn't have set a TP, so I'd currently be sitting 6% up, and this I risk 1% on. So this is a 6-hour trade as we speak right now. My stop loss is trailing along with the moving average. So it's a 20 moving average. No, it's not a 20 moving average.
200.
It's a 200 moving average. Yeah. Rich knows my strategy better than I do, I swear. So yeah, it's a 200 moving average, and my stop loss follows up. So my stop loss will follow the moving average, and the minute I get a break and close under the moving average, then I take out. So, and again, just to show you some examples of this, I think I took a couple of trades. Took a nice little intraday there on Euro. There we go. Some nice trades here on EURUSD. I entered here. I think I entered here, and then pulled back. We got into some deep drawdown, and then we said, no, I didn't. I entered on this one. Because
No, I remember this one, mate. You did enter where you indicated. You were in drawdown for a few hours, like a day almost.
But I would have closed this. So maybe I re-entered. Maybe I closed and re-entered.
You initially pulled your stop loss underneath the previous swing. We discussed this one.
Oh, okay, fair. Yeah, no, that's true. Yeah, fair point. No, I did, didn't I? I pulled it under this previous swing here. Yeah, so I was in a bit of drawdown for a while, and then we moved up.
You re-entered later.
Yeah, and then we mucked around a little bit, and then I scaled in here. So I actually I took this live on stream, and then I scaled in here for 2.5. So 2.5 plus 1.3. So that was like 3-4-ish hour trade. So that was really nice. And then we had a screamer on EURUSD down here. And again, this was because this was really nice entry as well. We were consolidating around. We broke and closed above this structure level here. So we broke out in structure, and we broke and closed above the moving average. Entered in. We didn't break and close. Even though we wicked it, we didn't break and close below the moving average. And I just followed it all the way up for it came all the way up here and then pulled back, broke and closed below the moving average here, and is a 5.6 hour trade. I entered into that, would have been 10 a.m. Tuesday, the 27th of May, and I came out of it on the 30th of July. And again,
Hey
similar
guys,
here.
how are you?
How you doing? Samir, how you doing, Samir? I was going to say, who just said that?
Well,
Hi, Samir. How you doing, man? Carla, what's good? How you doing, Carla?
Guys, hello, afternoon.
People really threw me out. Someone said hello, and I was concentrating. I looked over real quick to it, and I was like, "Well, wait,
I broke your
who's hello to me
concentration.
right now?" I was like, "Who do I say hello to, Samir or Carla?" No, I'll say hello to the both of you.
Oh, how you guys been? How are you?
Yeah, good. Yeah, it feels like a long time no see.
I know.
Absolutely.
It's been a minute.
Yeah, it has been a minute. It's been a few minutes.
It has. Well, are we back on good terms now?
No.
Ah,
We have
didn't
always
have
been on good terms, Carla. You and I. We've always been on good terms. So it's only this one up here that's got a problem.
You know I love you. You know I love you, really, Carla.
yeah, you say so well. No, it's good to be back, guys. It's nice.
Oh, good. It's good to have you back. Yeah, it's good to have you back. How's things? How's life been or how's the world? How's life in the world of Carla?
Oh, it's exciting. It's exciting.
Yeah,
Do you know what's
I
really
like that.
crazy? Is that you guys were talking about all this week about not relocating, but relocating and moving to another country, and I'm literally in the process of doing that, testing
Oh,
out.
nice. That's
Yeah.
super cool. That's exciting. I was going to say, when you said exciting, I was like, ooh, we like exciting.
Yeah.
No, that's cool. That's awesome, man. Where
You're
are you? Do we get to know? Where are you relocating to?
So my
Is it
first,
say again.
I was gonna say my first stop will be Thailand. I'm gonna go Thailand.
Oh
first.
no! Oh, okay. So you like travel relocating?
Yeah, I'll need to
Oh,
get.
nice! Awesome.
Yeah, the UK for winter is not for me. No, it's not.
100%.
Yeah.
100%. Yeah. No, that's sick, Carla. I don't blame you. How are you gonna find the time zone difference?
Do you know what? It's not too bad. 7 hours ahead, Thailand 7 hours ahead. It's not too bad. I've kind of like mapped out, my trading and how it's going to work. And it's good, nice to trade towards the end of the day, which I do anyway. So
Yeah.
it kind of, I think it'll work. It'll work. It gives me the morning to just do my thing. Do you know what I mean? Like go to the gym, explore,
Love
and then
that.
come back and head to the laptop. So I'm looking
Carla,
forward
that's awesome, man. That sounds so exciting. I'm so happy for you. It's the same with me. Me and the missus are moving to Hong Kong for 5 months, and she said to me, she was like, "Babe, we're like 8 hours ahead of you guys, right?" I was like, "Yeah, no, I know." She's like, "How are you gonna cope with being 8 hours ahead?" I said, "I'm going to love it. I'm going to adore it. Not having to get up at 8 a.m. for the London session. I can just get up, go to the gym, go explore, go do whatever I want, a bit like you said, and then hit the laptop at like 4 p.m.
This
And I was
is
like 4 p.m. to like 1, 2 a.m. Dude, sick. I was like, I love that idea.
Yeah.
So yeah, no, that sounds super awesome. In fact, when are you going to be? When are you in Thailand?
So I'm leaving just after Christmas. So the 30th of December. So I'll be there for New Year's, which I can't.
Nice.
I
Yeah,
can't.
nice. I wanted to be in Hong Kong for New Year's, but I'm not now. I'm actually flying out on the 5th.
Okay.
So, but I mean, I get New Year's in the UK, so I get to spend it with family, which is nice. How long are you out there for?
One-way ticket.
Yeah, because like I may be. So I'm out in Hong Kong for 5 months. I may be spending 4.5 months there, and then I may be spending a couple of weeks in Thailand. So depending on where you are in Thailand, I'll give you a shout.
Wicked. Yeah, let's do
Yeah,
it.
that'd be sick. Yeah, that'd be awesome. Anyway, just guys, I'm gonna wrap up real quick, and that's pretty much my swing trading strategy. Again, break above on the 200 EMA, break and close, stop no TP, stop loss at the stop loss when you get a break and close under the 200 EMA, and then just 4-hour time frame only. Just follow.
When I hear 200 EMA, because I also use it, I have really confidence in your strategy because I use it. I have seen it.
Yeah,
200 EMA works like magic, man.
it does. Like I've looked at so many other EMAs. Oh, in fact, actually, hello. I hate gaps. I do hate gaps, but we have technically got an area. We've got a gap here. Just depends if we're going to fill it. Okay, well, there may be a potential that I'm going to be taking a trade on my swing strategy for... Okay, there we go. I'm going to be taking a trade on... You know what? Actually, screw it. Why don't I do it in front of you guys and then head out? Let me bring up my terminal.
Unemployment claims in 20 odd minutes.
I gotta try and remember my lot size, mind.
Is anyone else trading as well? Or
Say again.
is anyone else trading? Samir Rich?
Not during news, no. But I did, however, have a pretty good GU trade this morning and a okay EU trade. Both sells.
Nice.
So I got a nice 3R GU trade this morning just before the London session opened up, and then during the London session, I entered a sell, well, just before as well, sorry. But I closed it preemptively because I wasn't getting the reaction that I so desperately craved.
I like that. So this is NASDAQ on the 4-hour. Why does this look different? I'm on NASDAQ. Yeah, NAS 100, NAS 100, sell 24. Okay, cool. So I'm gonna let me get rid of this. I think this line's throwing me out. Go away. There you go. I'm going to be. I enter a 1 lot size and see where that leaves me.
Loving nature, long time no see. I think I saw you probably 3 weeks ago, or maybe you was seeing our stream from a different username. I don't know. I remember you, and thank you by the way.
Yeah, there's a lot of love for you in this community, mate.
Yeah,
Wow.
loving nature. Yeah,
Absolutely.
I remember you.
Right. Okay. So I'm entered into the NASDAQ now. I got my stop. In fact, I'm gonna put my. Yeah, I'm gonna leave my stop loss where it is. It's only risking $378. So, like I said, guys, I'm in drawdown. There's no TP set. In fact, shall I put the 200 EMA on? Let me find my insert indicators. I want moving average. Where's moving average?
Moving averages should be in the middle bottom.
I can't find it.
Trend.
Oh yeah, got it. Thank you. You can tell I don't use indicators. I was like, where is it? Right, let me just make it yellow. A light yellow. Come. There we go. Oh, hang on a minute. My 200 moving average is different.
It's going to be different because it's a different time frame, isn't it?
No, 4 hour.
Oh yeah, you're right. Just make sure it is a 200 because it's going to take the one that you used previously, the most recent. It's going to take the most recent.
Yeah, no, I just set it.
Oh.
200. Yeah. 200 moving average, close, bosh. Oh well, I'm in on a swing trade on the NASDAQ, so we'll see now. But yeah, they're my strategies, guys. That's how I trade it. I have my intraday strategy, which I trade two styles of that strategy, and then I have my swing trading strategy. So just before I head out, does anyone have any some quick questions on that? William, how do you sustain your funded account? Risk low and don't FOMO. Risk low, no FOMO. There you go.
Risk low, no FOMO.
Nice little rhyme for you. That's how I best sustain my trading account. I think a slow horse for a long journey, not quick. It's a marathon, not a race. Will didn't say love you and leave you. He doesn't love us anymore. Guys, I'm not leaving you yet. Don't worry. I still love you all.
Another question, I think, from She Trades Network.
Say again.
I said another question from She Trades Network.
Yeah.
I see, yes. Hi, William. With your strategy, do you do your analysis on the 4 hour and enter on a lower time frame, or execute on the 4 hour? Thanks. Great question, G-Trades. Is that on my swing trade? If it's on my swing trading, yes, I enter on the 4 hour. I do my analysis on the 4 hour. Everything is on the 4 hour. On my intraday, I do my analysis for my overall trade bias is on, or my trade identification, a trend identification is 4 hour, 1 hour, and then confirmation on the 15, and then entry on 15:05. Wow, Carla, I want to move there. Was it difficult to get a visa?
So it depends actually. There's all different types of visas. So I'm entering on the visa exemption because I've got a UK passport. And then if I love it, then I will leave the country and then apply for a visa from outside the country. So it just depends on how long you want to be there. But I've had it's pretty straightforward. Most of it is done online. So you should be fine. You should be fine.
No, that's super cool. Yeah, no, that's awesome. Someone recommended Bali to me earlier.
Oh.
Yeah. Thing is, like, I'm quite a traditional guy to the point where, like if I was single, then I'd be in Bali or Thailand by now. Like I actually said to the missus when we first met, it was like a month before I was moving to Thailand, but obviously I met her, and then life gets in the way, sort of thing, and I actually want to stay in the UK now. So I have no intention of leaving the UK. Like I fully plan on setting a life up with my partner now in the UK. The only time that I'm going to leave the UK now is if, due to unfortunate circumstances with the UK government being the great, fantastic planners that they are, I'll be forced out of the UK.
Yeah. No, I totally understand that.
Yeah.
Definitely.
Because thing is, like, I've got family business here as well. My roots are here, my family's here. I got family business here. I've got physical businesses. I'm not just a trader. I also have like ventures that are in the UK that have a base.
Yeah.
So it becomes difficult for me to emigrate. However, I'm fully willing to emigrate. It's just a matter of time.
Ding dong.
Well,
Hello.
there.
How is
Hello.
everyone doing? How is
Bye.
how is everyone watching us doing? Hi there. Thank you for watching. Don't forget to like our stream. This is a great week to do that. Guys, Carla.
Hey,
what a nice surprise. What a nice surprise to see you.
You too. I'm back.
Welcome.
Yes, Richard.
Yes,
Sam,
sir.
Will, how are you guys doing?
I am very well, thank you. I'm very well.
Much better now.
Yeah, better now.
Much better? How
Yes.
so? What happened?
I had some very unfortunate electricity issues for about an hour and a half, so but it's sorted now.
I was
sort of.
flying solo for about hour and 25-ish. And then next minute, everyone's joined me. I'm like, oh, I've got friends.
And now he doesn't want to leave.
Now I don't want to leave. Now I'm like,
Hey.
I'm just going to stay here for a bit and hang out with you guys.
Yeah, I need to make
how-
up for that I wasn't here. So
All seriousness, though, I have got to love you all and leave you. Unfortunately, I don't want to, but I got to go make myself some food. I'm back on the intermittent fasting now, so I'm doing something a little bit spicy. I'm thinking about cutting my meals to one meal a day and only having an evening meal. So I'm thinking about having like a really early evening meal. And then maybe like some berries or maybe some fruit, something like a really small healthy snack around lunchtime, and then have like a really healthy red meat, berries, white meat, like fish, that sort of meal in the evening. But have it like 4, 5, maybe 6 o'clock at the latest, so I can digest it before going to bed. So I'm going to be playing about with my diet over the next couple of probably actually when I get back from Hong Kong. I'm going to really enjoy the food out there.
Well,
So.
in that case, we want, on behalf of everyone who just listened at home and in here, we want to wish you a happy digesting.
Yeah.
Thank you very much. Well, I'm going to go enjoy digesting whatever the hell's in the fridge. So thank you very much, guys, for keeping me company whilst I was flying solo. Big welcome into each and every single one of the guests, each and every single one of the hosts coming in now. Big warm welcome to them, guys. Make sure you smashing that thumbs up button. Make sure you subscribe to the channel and stick around, because not only have we got some awesome giveaways, guys, 221 likes, which is absolutely incredible. Thank you so much for the support. I hope you took some value from my strategy. I hoped it helped. Not only that, I have now entered into a NASDAQ swing position. So you have also watched me take a swing trade. But for now, I'm out. Have a fantastic day, guys. And I shall see y'all el mañana. See you later, guys. Take care.
Bye-bye.
I'll probably
We'll see
also
you.
jump out, even though I missed my segment. I don't want to impeach on your segments, because I feel like with Carla and Samir and Victor here, everybody is in the most capable of hands. So I'm going to love and leave you and just apologize for the fact that I wasn't here, guys. So we'll see you all tomorrow. Cheers.
Take care, Richard. Enjoy your
Bye-bye.
day. All right. So, Carla, you have some you have some. You made some pretty drastic decisions. From what I was hearing in the background, you're considering long-term relocating. You're already going to take a taste of what it is to be in another time zone, another climate, another lifestyle, perhaps, and another language, culture. I mean, that must be a huge change, right?
Yeah, yeah, it's definitely gonna be a huge change. The thing is, I did live in Morocco about 2 years ago. So I
Okay.
tried that out. That's not too far from the UK. That's about 4 hours. But then something just pulled me back home. It wasn't for me. And fast forward 2 years later, I'm like, I'm in my comfort zone. I want to explore the world. I'm a traveler anyway. Why not? I could work from my laptop. Why am I not out of the country, especially during winter? Why am I in the UK suffering when I could go somewhere warm? There's culture, there's good food, there's even more expats. Just people choosing a different and maybe better life for themselves. So that's what's pushed me. And I thought, you know what? Let's do it. Let's do it. So yeah, I took the leap of faith, taking the risk because yeah, no risk, no reward.
True. I like that. I like that a lot. And that's one of the, benefits we have as traders, right? We are not bound to any physical location. We could be, technically you could be on a beach, but that doesn't really work. At least not for me, and I don't think it really works for anyone. But I mean, you could be anywhere. You could be in a climate where you're working different hours. You choose basically where you'd work from, as long as you have, some basic things depending on your strategy and your workflow. Some basic stuff. I mean, we don't need a lot.
This is it. This is it. And just, yeah, exploring new cultures. There's so much more to where you are, your hometown. Why not venture out? You know?
Nice.
Yeah.
I think you're very brave, and I wish you, the best of luck finding your way in this new culture. I'm sure you will. And let us know. Keep us posted as to how it goes, and what you've learned as a trader.
Yes.
Relocating, because that's a question that I think maybe not everyone, but a lot of traders cross their mind. Right? Maybe I could move to somewhere else where for whatever reasons, because I can, right? Other jobs, that's not an option. As a trader, it is an option, and you could be living in a place where the cost of living is just a fraction of where home from your home base, and still you're going to be earning the same, because that doesn't change. So it can be a very beneficial change of panorama, if you will.
Definitely. And one thing I got to say as well, I'm not currently a full-time trader. So my goal is for 2026 to actually become a full-time trader. When I mean full-time, still have things on the side that I'm doing, but I want the income to exceed what I'm currently having. So I'll still be doing my stuff on the side, but I'll be confident in saying, yes, I'm literally full-time. So me stepping away into a new environment will just remind me why I'm actually doing this. So sometimes you have to sit there and think, why are you actually a trader? Why are you here? Why are you doing this? And then I had that moment literally about a month ago. I was like, do you know what? I'm making this decision now for me. And that's why, yeah, I'm traveling all the way across the world.
Yeah, because in the end, you're totally making the right questions. For probably just about everyone, trading is quite important. It's what we do, you go to bed, you wake up thinking about it, you breathe it all the time. At least that's how I know trading. But in the end, it's just a job. It's a means to an end, in a large degree, for a large degree. On its own, it's a passion on its own, right? Just doing the job, not only about the results it gives you, but the adventure, the challenge of finding out, where's the edge, and when monitoring and improving it. And that's, I like that, regardless of the result, it is giving me, or separate from the results it gives me. But on another plane, it's a job which has a function, and the function is to provide, to allow you to do other stuff that are also important, right? Like taking care of your family, perhaps being more present in if you have kids, or do other things that are also, where, especially if you're in a country where one job isn't enough, and it doesn't allow you enough freedom to have, activities that will add quality of life to your life, then this, it could be so. But by focusing on, why are we trading, you're doing it for, having possibility. It's a means to an end, just like money is. It's not about the money, it's about the things you can do with the money. And that's what that you're asking, right? Why you're considering, you're making that step.
Yes, definitely. Bang on, bang on.
So, Carla, how long have you been thinking about this, and like, how long did it take you to realize this is what you wanted to do?
The thing is, it's always been at the back of my mind that I'm trading. Do you know what it is? Like I said, I've always loved travel. I love new experiences, and I would travel, and I'll do not the bare minimum. So let's say you go on like a boat tour, but then you might have an option for like a cooking class, and sometimes you think, okay, my budget doesn't extend. My budget won't allow me to do the cooking class on top of, the yacht. So I was like, trading, I want to use the money to exceed my expectations, to invest in things that will better me in the long run. So like I said, it's always been at the back of my mind. I'm a big journaler, so I love to journal, if that's a word, journaler. But yeah, I love to journal. And a couple of months ago, I went through my journals dating back to 2018. And the same recurring theme, I want to travel and trade, it just was non-stop. And then, fast forward to last month, I just sat down with myself thinking, it's 2026. You've now got the foundation, you've got work on the side, you've got trading. Now is the time. Carla. So I literally just, in that space of a moment, I just went to look at the flights and booked it straight away. I was like, there's no pushing and pulling. No, I was like, this is it.
So now you've done this great. You've proposed to do this. You're actually going already. So it's not only a proposal. You're making the first steps. You're making it real. How do you know? What are the factors that will make you depend whether you stay or not? How do you measure this is a stay, or this is great but not a stay?
Number one is the feeling. The feeling is the secret. So as soon as I step off the plane and I soak in the environment, how my body responds is going to give it away straight away. How do I feel? Is my heart open? Do I feel like I'm unwelcomed? Do I feel that my nervous system is calm? How does the food sit with me? How does go into a temple, because obviously I pray a lot. So go into a temple, if I feel like, yeah, this is for me, that's when I'll know. So the answer is going to be in the feeling, how I'm going to feel. Also as well, how my day-to-day will fit into obviously the new time zone. How is training going to work? How is my other pieces of work going to work? How's my gym? How's the rest of my lifestyle going to fit in? And I have a feeling that I will know the answers within a week.
Wow. Okay. So you're quite in tune with that part of yourself, the feeling part, perhaps even the spiritual part.
Yes.
That's great to hear. We have news coming in about 45 seconds. Let's track the news. It is the I'll switch to this tab for those who are wondering what I'm talking about. There you go. We are talking about the unemployment claims. That's a high impact news. As you can see, it's a red folder. It doesn't really look like a folder. It looks like more like a factory of an icon, but you get the point. It is a red folder, and we have, as you can see here, it's coming up in about 15 seconds. So let's rush to the chart and see what the market is doing. I just indicated here a overlap place of where the H1 and H4 are coming in, but that is, before the news, everything can change. It can gap up, it can make all kinds of things, making the structure, the area not so relevant. And so you want to, here we go, there you see the reaction right there. First reaction was, it took a while to have a reaction from the market, but let's measure what the initial reaction is. We had a movement of 10, almost 10 pips, which isn't impressive. I mean, for the expectation of a high impact news. So it's okay, bit of slow, I would say, even not a lot of fireworks, but that's great, right? We'll have to wait. Maybe the numbers are coming in late, or maybe they are waiting for multiple numbers. Let me check if it's just one or multiple things that are coming out. Actually, all of them came out. I don't typically worry too much on the if they miss or they don't, and what are the implications and the ramification of the exact number. I just want to know when the number is coming out, and I want to see the price action, because that's what I trade anyways. I don't trade my own assessment of what the numbers mean. I just trade what the market tells me through price action, what what they are doing, the market participants, and so I only need to know about the fact that the news comes out. Carla, do you trade? How do you handle when news comes out? Do you stop trading? Do you does it affect your strategy? Do you need to adopt or adapt to avoid the influx of volatility?
Okay, so with my strategy, I'm sure you guys are aware of TradeZilla, so a platform that tracks your trades, your data. So I've deep into my data, and I found that my trading is the best from 2 p.m. So right now I've marked up my charts, but I will not enter until after 2 p.m. So the
Okay.
market is going perfectly the way I've seen it. So I'm just gonna wait. Once I get my alert and confirmation, then I'll enter. So news, it depends on the time of the news. It depends on the rules as well. Obviously, different accounts have different rules. So I'll wait at least 10 minutes after the news. But for now, I've got half an hour. So I'm just hanging around until I get my alert, and then it's go time.
1 o'clock. You said 1 o'clock. That's UK time, right?
Oh, yeah, 2 p.m. is when I trade from.
2 p.m. You said,
Yeah,
yes.
UK time. UK time.
2 p.m. So for those who are wondering and are wondering, maybe that time filter also might be something you guys want to be checking out. You can do it through a premium journaling software like TradeZilla. Or you can also do it on my effects book, which is completely free as well. So one of the ways you do that, you just I'm not sure in TradeZilla how to do this, but I'm pretty sure it would be very easy to do. But I know from my effects book, you can subdivide or stratify or make into subgroups all the entries depending on the time of entry, right? The hour. And then you measure and compare what is your edge on when you enter specific times of the day, and you will see some patterns, not all the time, but in the case of Carlo, that's what you saw, and make the decision that there is a time and a place for your strategy, and it is after 2 p.m. your local time, which is UK time.
Yeah, and it has a lot of data. It has the worst trading period for yourself, and mine's now London session. So I've stayed away from London session and only trade New York session. It gives you your best pairs. It gives you, if you label certain trades, it'll tell you which one's your best strategy. So your A-star setup. So right now I'm giving myself 3 months to only stick to what I've been given from TradeZilla, and take it from there. But so far so good. Less FOMO, less revenge trading, everything. It's been incredible. Even days of the week. So Monday and Tuesday are my worst days of the week. So therefore, I don't trade Mondays and Tuesdays. I only trade Wednesdays, Thursdays, and Fridays. And
really, that's interesting.
Yeah. So
okay,
yeah.
and if we may dig a little bit deeper into those stats and those filters and analysis, how long long back does this conclusion is this conclusion based on? What I mean by that is, so Monday and Tuesday are not as profitable as the other 3 days of the week for you, and that the data set on which this is based, how far back does it go?
This is approximately over a year, about 15 months worth of data.
Okay, 15 months. Okay, that's very interesting. Because when I see this, I ask myself, yes, this is the case for the last 15 months, meaning because it's so recent, it's the right thing to do for the immediate future. But and my next question, my follow-up question is, all right, if that is the case, does certain days of the week come and go as profitable days of the weeks through time? So maybe it was on the 15 last weeks, 15 last months, but maybe 3 years ago it was a little bit different. And I want to see if there are any patterns and what is the averages of these cycles. Meaning, if maybe it has a certain type of cycle, like every year and a half to 2 years, it switches and shifts between what day it is, because market change, market are always changing. And that's interesting, because that gives me idea. I need to be checking this, because next time I need to be in time moving away from this day of the week, because it may not be profitable anymore.
Yeah, definitely. So yeah, I'm gonna revisit it in a 3 months time. But my data actually showed me. Yeah, I couldn't believe it, because in my head I'm thinking, oh yeah, I'm profitable every single day of the week. There's gonna be losses on every day of the week, and there's gonna be wins. But I didn't know these 2 days were dramatically, as in they took up majority of my losses. So yeah, it's all about refining, tweaking here and there. But yeah, data is king. Data is king.
I couldn't agree more. Carla. Yeah. So, and the other thing, and I'm probably pretty sure you have noticed this, that when you trade, I'm positive you noticed this, but when you trade based on data, it puts you on another level in terms of confidence, and a completely different level, because it's not like you're flying solo or blind. No, you actually have a map. You know what to avoid, right? Like Monday and Tuesday in your case. You know where the obstacles are. You're not flying blind. You actually have so much more control, because you decide and you can choose and pick where you want to be flying, so to speak, if I continue with that analogy. And you can choose not to fly in storms, right? Because you have a radar, and you know how things will happen if you do in certain market condition and not. So it's to me, it's the way to trade, right? You gotta be based on evidence, and in this case, observations, which are then turned into data points, and so you can choose and analyze and pick and choose the best trading conditions for your particular strategy. It's have you seen the difference in confidence?
Oh, 100%. Yeah, a massive difference. A whole massive difference. Like I said, yeah, data is king, and I trust the data. I trust the software. So it just gives me, it gave me a massive boost, and I don't feel swayed. If someone's showing me a chart and saying, these are my thoughts, I'm not swayed. I'm like, well, that trade is not for me. It's not my trade. So yeah, very, very
Perfect.
confident.
Perfect. I a lot of what you say resonates a lot of how I think about my trades as well. I feel very little FOMO nowadays in comparison to before, because of that exact thing. I know where I need to be, and I don't want to be anywhere else, because I want to be there. That's my sweet spot. That's where my edge is. I don't want to be trading with no edge or less edge. I want to be trading at my optimum market condition, and that's exactly there. And if it's missing one thing, it's not my trade. It can be anyone else's, and I don't feel FOMO is not a big factor at all anymore in my trading as well. Awesome. To Sam, I see you very concentrated. I think you're making a lot of money while we are just chatting. Yesterday you had yesterday you were making you were talking about payouts 8,000 6. I think you're making some money again here, Sam. Are you?
No, I'm not in the trade. I am waiting for my session. Yeah, I was seeing something on my email. Again, it was a payout notification only. So
Oh,
I
yeah.
knew it. I knew it. I knew it. Not for nothing that Samir has a pretty large fan base, I must say. On every stream, we have a few, and actually more than a few people coming in and saying, you're an inspiration to them, and that's the reason we do these streams, to give you, hope, to give you the good example, to give you the real stuff, right? Samir is very open about and we all try to be as open as possible to dispel that artificial image that is out there of a trader. We want to give you the real image, and that is with ups and downs, and that's the only way we think you should want to be exposed to trading.
yeah,
So
definitely.
we
Yeah,
have
as of technicals,
go
I
ahead.
have to wait. As of technicals, I have to wait for my session, which is NYSC. Yesterday was a good day, and today I'll try to do the same thing. Regardless of what outcome I am gonna get, I will try to do the same thing, follow my plan, and execute with my plan. This is all I can do. Rest, whatever market gives, I have to accept it. If it is my day, it is okay. If it is not my day, I have to shut it down. That is what my analogy is. That is what I tell you guys almost in every stream. So let's see. Let's let's do a testing thing, if it is my day or if it is not. Okay, if it is not, I have to step back. If it is, then also I have to step back. So you cannot force this thing. So this is what I have realized over these 6 years. Some days are yours, some days are not. So when it is yours, just step back, take that thing, just step back. When it is not your day, still accept that, just continue with your day. That's what I believe, which can give you good results. So I see you
Before
are seeing, yeah, yeah.
No, yeah. Before we go and you prep us for what you're going to be looking for on NAS, which I'm pretty sure everyone watching us right here are asking themselves, they want to have those thousands in payouts as well, and they want to have a little bit be contaminated with your edge. So if before we do that, there's one question here in the chat. Let's see. We have our great friend Peter asking Victor, whoever that may be. Victor, do you think pound will break the weekly bearish engulfing structure? Peter, thank you for that question. Let's take a look, and that's why I was looking into that area. We're coming from a bearish order block that has already been invalidated last week at the end of the day on Friday. I left it there to see that to show that we have a recently broken structure, and in between we created actually at the same time, that same close created a bearish weekly order block, which is based on the engulfing, and that's what Peter is talking about. At least that's my first impression. And the question is, will it break through this? Peter, let's take a look, because we never know for sure in advance. We don't predict. So let's take a look at what indications do we have that price might continue to go higher or reverse from the order block, because the order block tells us that the weekly, that's where the weekly sellers came into the market. They came in and caused this close below, and now we're retesting that area and presumably to have that kind of a reaction. But it doesn't always happen. And one of the ways you can spot it coming on is by going through different time frames and doing that multi-time frame analysis. And let's take a look on the daily. Do we have a reason for price to bounce from here? I don't have that. Right? If you look from the left, there is a nice quasi type of structure, but there is no order block. Look at that. There's that higher highs and higher low, but there is no bearish order block or structure for the price to reach. That's already one minus point. And if we go to the H4, are we already, do we have a, first of all, in this quasi, do we have a, the quasi would be from here, right? That's the H4. Do we have a structure or a reason? The last reason was this order block, and as you can see, price has been quite adamant in telling us that it did not respect that iris. That's the only structure on the H4 for that quasi, for that reversal pattern. So all of that, the lower time frames, it can still happen. We can still not break the weekly and turn around here and go south, but that's not going to happen on a dime, right? It's going to happen. It's going to be built up from the lower time frame up. So you're going to be seeing it reversals on the 5 minute, the 15, the 1 hour, and the H4, and then it will be visible on the daily and the weekly. So if it doesn't happen on the lower time frames, it means that it's likely not going to happen on the daily and the weekly either. And so far, I don't see the reversal coming in. The market is not respecting, not breaking, I mean, any of the, well, this is the, currently we have a, you could say now that we have a higher high, this would be the left shoulder. That's not completely true either. This is the left shoulder, the neckline, I mean. So the market is not breaking any structures here. That's my conclusion. This is the head. In this quasi, let me indicate it here. This is the head, and the head, from the head, you need to go back and look for the neckline, which was before already here. But now that we broke this high, this becomes the head, and that makes this low as the structural break, meaning the market is not breaking any structures on the 1 hour. And I don't want to go to the minutes because you're going to get a lot of noise there. The H4 is not telling us anything. So far, the daily doesn't give us a reason. So although we do have a weekly structure bearish, the market seems not to be setting things up for a reversal. So I don't know what will happen, but I'll just wait. In the case, I would wait for the alignment, wait for the market to start building that reversal pattern, and then I can use that weekly structure for a possible short. But if it doesn't set up, I don't want to be a part of it, because not every order block, not every structure is going to be respected. They will get, just a matter of time, they will get broken and not respected. And maybe that's going to happen. Maybe that's why the market is not setting up for the reversal, or maybe it's not doing it yet. Maybe it's something in the future. So we'll have to be patient in any case. But in any case, Peter, thank you very much for your engagement. Thank you. So, Sam, why should we be? What is the reason for trading NAS today, according to you?
All right. Can you share my
Sure.
screen?
Yes.
Okay. We have a question also that will also be covered. What I'm gonna explain here, which is from Michael. Some explanation on what you consider. So what I consider, I try to be, reactive. Whatever market is doing, I try to adapt in that particular nature. I don't pre-plan the things. What do I mean by that? Let's say I don't pre-plan. If it is gonna break out, I'll enter. I'll just wait for my time. And let's say if this price has already, broken this area, then I have to be, observing the market, what nature market is giving me. And I have a couple of scenarios. If we are slowing down here, and if we, transition into the impulsive phase, then I can look for shorts. And on the flip side, if at my session price is here and it gave me a small consolidation, I can take a breakout. So I try to be reactive. I don't pre-plan the things. I want to adapt whatever market is providing me in that particular session. In yesterday's strategy explanation, I have given you a couple of examples. So what we can look for. So right now we are in a consolidation phase. I am expecting a breakout to the upside, because look at this. This trend is really good to the upside. So definitely I don't want to short this unless we are closing below this 200 EMA. Of course, impulse can be to the downside also. I have to keep that in mind also. So if we have impulse to the downside, and if we see some structure shift, then definitely I would like to take a breakout trade. And on the 15 minute, on the 30 minute, I can target this 200 EMA. This concept also is there, when we come under the 50 EMA, then there is high chance we can come at least 50% of this area. So I have seen this happening a couple of times. So my scenarios are ready for today. What can be the scenario? Let me give you a couple of examples. So let's say price breach this area, and we get any shorting opportunity, or price price impulse to the upside, give you impulse and small consolidation, then you can take long in that NYSE session only. So you have to take this in consideration, whatever I'm explaining here. You have to execute this in NYSE only. So whatever opportunity market is providing you, so it can do certain, we have many multiple outcomes, many multiple things what market can do. As per my experience, I'm just trying to explain you multiple scenarios which market can do. Let's say we have a consolidation here, then we can take a breakout trade. Let's say market just impulse to the upside and then it came to the downside, then we can short it here. Other scenario, we have, let's say market breaks to the downside and tap this area and it tries to go to the upside, then we can take buys. But I have to see something which I am familiar with, and what I'm familiar with is some kind of impulses and some kind of pullbacks, and that pullbacks need to be in kind of a consolidation form, or it should not be that much impulsive. That will make me interested in this particular market session. So if we come US 30, yeah, it is same. So similar thing, let's go to the 2 hour. Yeah, we have plenty of fair value gaps, but I'm not really worried about this thing. I am worried about what market will do in this particular session, what patterns market is printing, or what footprints market is leaving, so that I can follow them. And how do I know? By impulses, corrections, where the buyers or sellers are stepping in. And how will I come to know about it? With some strong momentum on that particular side. If it has to be a liquidity move, then we will see a strong momentum to the upside, and then a strong momentum to the downside. That is also the case that I can consider. Again, coming to the last point, I have to be a little bit reactive. I have to observe what the market is doing in that particular session. I have to be calm. I have to think, maybe take 5, 10, 20 minutes to think what in what condition market is it in impulsive phase, it is in corrective phase, can we use this at this point as liquidity? I have to ask these questions to myself. Then I have to react what market is providing me at that particular time. Let's say, I'm just giving you an example, let's say this breakout was in NYSE, I would definitely would be taking the buy here, and my stop loss would have been here. I know it is 400 points, but I trade lower time frames. I'm just giving you an example. Let's say this same thing happened in NYSE. So right now, what my mind would have been thinking, market is giving me signs that buyers are strong. We are just giving, maybe they have secured some profits here, and here maybe some buyers can step in again. So these kind of scenarios I create in my mind on a day-to-day basis. What market is doing, I just try to follow that footsteps. I just try to follow those footprints. And let's say, I'm just gonna give you one last example. Let's say if NYSE market did this, impulse to the upside, impulse to the downside, then of course I can see, it is very easy to see, it is very easy to spot. This can maybe, this high maybe can be a liquidity point. And then for the entry criteria, I just need to some slowdown, some pullbacks, some fair value gaps, then it comes to the entry. You should worry about making the buys first. And how can you make the buys? By seeing what market is doing, where impulses are, where liquidity is, where corrections are. So these are few terms that I use on a day-to-day basis. And what helps me to enter in that market, I just wait for some pullbacks. And my stop loss placement is always above the swing point. I don't care how big my stop loss is, so I always keep room to my stop loss. So that's what I'm following nowadays. So that's, I think I have given you explanation of my plan for today. I have to see how market is behaving in that particular session. Let's see. That is
So
it for.
basically, you start with a blank canvas, and
Yeah,
you let the market paint the the view, and then you make a plan based on what you
exactly.
see This is your based on your derived from your experience, that this structure I need to do this, or maybe I need to stay out. But you let the market tell you all the time, and you don't come in with a predefined direction or
Yeah,
thing to do. You're flexible, so to speak. You let the
exactly.
market guide
One
you.
thing, one thing I will add: this EMAs give me kind of direction where we potentially can go. There is high chance we will go in that same direction, but price can close below the EMA also in that particular session. Some days can be like this also. So you have to be aware of it. You can utilize that information, and there will be some impulses which you will see, and you can, think about it. Like market is closing below the EMAs, maybe it wants to give you a small retracement, and you can trade that. That is the last concept that I wanted to share to our viewers. So this is how you can take the counter trend trades also. So market can do whatever, it can do, it have you I mean, it can do, countless things, go to the upside, impulses, corrections. I don't know what it's gonna do. So I just have to react on the information what market is giving me. I can, set up some scenarios in my mind. I don't set up some scenarios. This is just the information that I've seen over the time, over these years. So now I don't have to, think about it. I just react what market is giving me. Okay, if it is impulsively downside, market is closing below the EMA, and market is giving me signs sellers are very strong, so I don't have to take the buy. I just have to look for sells. Maybe sells can be, way below here. I don't have to be, a FOMO trader. I will just enter like this. I want some, pullbacks, I want some correction, then only I can enter. So that is it.
Thank you, Samir, for that. Carla, are you currently watching something? I know you have to wait till the 2 p.m., which is in about 3 minutes. But are you looking? You're like, is there something boiling on the setup stove, so to speak?
Yes, I am. Well, I trade GU, NAS, and S&P 500. So right now, I'm focusing on GU. I have been since the beginning of the week. But let's see if I can share my screen.
Yes, we have. Let's see. Let's take a look. Let's see if I can do that. I see we have. Yeah, I'm not sure how to do that, to be honest. Let's see. Yeah,
Oh,
I can figure it out while you talk. I will be yeah. Is that is yours? Yes.
yes, it is.
I couldn't find it. Thank you.
That's okay. So I'm just waiting. Well, I'm on a daily actually, so I do look at higher time frames. So I would just want to see how GU reacts to this previous high here for the daily candle. How it reacts around here, I was looking for a sell, but you never know, it could go bullish. So I'm just sitting on my hands, waiting. It has taken out this high here. It can react to it and drop from here, or again, it could go bullish. So mine's literally just a waiting game. Literally a waiting game. I know 2 o'clock's now, but it doesn't mean I'm going to jump straight into a trade. I could have dropped down the time frame and I could have entered for a long here at 12. But yeah, I prefer higher time frames. I prefer intraday trading. So on average, my trades range from 4 hour minimum to about 22 hours. So yeah, I'm just going to wait and see, set my alert here and see how the market reacts around this daily level.
Okay. So you're initially, because it's breaking down, the market structure is bearish. It's making lower lows on this time frame, which is the daily. You're looking, your bias is to the downside, but of course you're flexible. You're not fixed in one direction, but you're looking to see if it's going to make a reversal from some kind of levels that make sense to you, and that is a little bit above where we are. What level is it that you think we could be? Where you would be looking for a possible that line there where you have your entry, what level is that?
So that's 1.32831. Bit random.
All right, perfect. Thank you, Carla. And if and would you be only be trading one? I say only, it doesn't it's not a bad thing. It's actually a very good thing. But is this the pair that you're watching today, or are there other pairs that you're also watching and perhaps also waiting for something to tell you that it's ready for a trade?
So I'm only focused on GU today. Yeah, I haven't looked at NAS 100 or S&P. I'm mainly focused on GU, only because I set my eyes on that on Monday. So I'm just gonna see how it goes. I will wait till the open in half an hour and see how NAS and S&P react maybe to this line. So what I see here is a gap. So I want to see how this fills the gap. Does it reject, or does it break and then retest and then move upwards? So bullish. So again, it's a waiting game. Like Samir said, it's just go with the flow of the market. So I'm just gonna be observant, sit on my hands, and see where it takes me.
Lovely, good. And the list, you have the watch list there. I see 4, of which one is the Dixie, the 3, the NAS, the US 500, I think it is, right?
Yep. Spot on.
And are these the 3 that you trade mostly, or are they more for confluence?
So these are the only pairs that I trade now. Again, according to my data, these are my most profitable pairs. Starting with NAS 100 is my most profitable pair. Then it's S&P. Then it's GU. So again, I'm strictly focusing on these guys because my stats show me all my other forex pairs are my biggest losers. So why not stick to your winners? As data says, stick to the most profitable pairs.
And how would you know that? That's the power of data.
Exactly. I had no idea until I ran a report and it said these are your top pairs. I was like, oh my gosh, no way. And I love them. I love how they move. And that's me. That's me.
Yeah. And it has nothing to do with our preferences of our likes and dislikes. We may like a pair more because it's like gold. A lot of people like gold.
Yes.
But that's not relevant. What's relevant is where is your edge, and that's where you need to be. If that is, I don't know, if it's an obscure pair or asset, I don't care. You need to be there where the edge is in your strategy and nowhere else. I have a trade. As we were watching the market before the news, I indicated a level in H4, H1 order block that was overlapping, and I wanted to share with you guys the trade that I took based on that. It's a very simple analysis based on the framework that I gave you guys on Monday, right? If you're wondering what that is, check back the stream from Monday, where at the end of the last hour I explained a simple framework which I use, which my strategy is based on. My strategy has a lot more moving parts and more things that will that are added on the checklist, but I made it as simple as possible. And this trade is exactly that. There was an H4. This is on the 1 minute, so you can see actually the move. And it's a very, very simple idea. You get in the direction of those order blocks that have overlap. You wait for the market to come back, of course, to that area. I'm going to show you guys on TradingView so you know what I mean. And I got in. It was pretty, it was before the news, but I had enough time, and the difference, the distance to the stop loss was enough for me to get in, and it made a nice little profit right there. That's on that one. I'm gonna go back to Carla because I'm gonna be switching to, if that's okay with you, Carla. Okay, in that case, I'm gonna go back to Samir. No problem, Carla. I will. I'm gonna be. Let me put back the TradingView because all my analysis is based on TradingView. So that is the one we would like to. I would like to be sharing with you guys at home. We have a.
Sorry, before you continue, I've got to shoot. But thanks for having me on. It's been a pleasure, guys. And time's up.
The pleasure is completely ours, Carla.
All right, guys. Enjoy the rest of your day.
Take care. Bye bye.
Yeah, bye.
Bye. How lovely of Carla to come visit us. Thank you, Carla.
Da Vinci, you have a question. Samir, will you enter in first candle breakout or wait for a retest? I enter on the breakout only. I don't wait for a retest.
On the
So
breakout,
that is, yeah,
on the first candle breakout on
yeah.
whatever
Closed
time
above.
frame you're trading. I think
Yeah.
you are on the 5, right?
I'm just giving you an example. I wouldn't really be trading, because I don't know. Impulse can be to the downside also when the NYSE opens. So I'm just giving you an example. This breakout would have been my trade, and my stop loss placement would have been, wide stop loss. I don't care about stop loss. I would be placing below this 200 EMA. So targeting 1 to 1. This is what I'm doing, nowadays. Previously, I was trading fair value gaps. It also gave me good, results. I have secured a couple of payouts with that. So I have a couple of strategies. But the main point is when it comes in your area, just wait for 10 to 15 minutes and just wait what price do in that particular area. It doesn't matter. You can, get the entry a little bit below, but you have some confidence in your entry, you know. So that is what my thing that I would like to tell you guys. Just wait for some time when it gets in your area. No matter what areas you use, your areas can be supply demand, order blocks, fair value gaps, head and shoulders, pattern, trend lines, EMAs. I don't care what your areas are, what your areas looks like, but my point is just wait when it gets to your area. Just wait for maybe 30 minutes, just see how the price is behaving in that area. Okay, so this one advice I think you can use when you are trading in the markets. So that's what I do. I wait, when it is in my area.
That's awesome advice. Someone asking why I have a mask on. The real reason why I have a mask on is because I have no teeth, and I don't want you guys to see that, right? So I have no teeth.
That is
That was a
crazy.
good one. uh,
Hey, Jonathan.
imagine you take that off and you just have no teeth. That was funny. Hey guys,
Hey, Jonatan, how you doing? Great
I'm
to
good.
see
How
you.
are you guys?
Long time no see.
Yeah. How are
That
you guys
is
doing today?
yes, great. I had a little trade there on euro dollar. I was just going to explain the analysis behind it. Based on the same the strategy that it's not a strategy, it's a framework, it's a template to build your own strategy that I explained on Mondays for our viewers. So that's always nice.
Well, before you do that, we're gonna do a little giveaway here. As you guys know, we're doing the Black
A
Friday
little,
week special
a
and the giveaways.
little.
We're going to be giving away. No, it's pretty big actually. We're gonna be giving away 10 accounts today. 10 20K bootcamp accounts. So let me just get this over with, and then you're gonna be back to explaining what you wanted to explain, Victor. Hope you guys are all doing good in the comment section as well. I see that we had Carla on as well. I was a little bit late. I think she must have left right when I joined. Right?
Yes, just 3 minutes ago. You missed her by a hair.
All right. Well, she's maybe in the comments. So, hi, Carla. Thank you for joining. That was a really good session. Yeah, okay, let's do this. Let's do a little drum, and then we'll start this. 10 accounts.
10 accounts.
10 20K bootcamp accounts. Oh, I'm lagging a lot, aren't I?
Just a little bit.
Frozen. Yeah. Right, so we have... do we have anyone in here that I actually recognize?
No.
A few. Maybe John, maybe Jaden here. We got. Well, these are the guys. These are the everyone who has won. Maybe not only guys, maybe girls as well. Who knows? There is a chance.
It's a very male-dominated industry, this one, but maybe.
Congratulations,
Right,
everyone. We have Ayush, Dayanit, John D, Vitalik as MDF, Jaden V, Ban Talang, and Amani Deogracious and Maud. Congratulations,
you
all
did
of
such a
you
good
for
job pronouncing all of that. Because
I'm pretty sure I missed. I didn't say it as I should. A few.
I think you did perfectly. That's it's always awesome to do the giveaways when you're on, because you just go through the list and then it's just flawless, and then I try to do it and it sounds awful and people get confused. It's like that's not my name and they don't know if they have
actually
won.
won.
Yeah. All right, guys. I'm gonna leave as quickly as I came into the show because I'm working on my presentation of my strategy. I'm gonna be doing a live webinar on Friday at 12 p.m. GMT, where I will explain my strategy that got me funded and keeps me funded. So definitely tune in to that one. We're gonna be doing more giveaways in that live stream as well. So and we'll see you guys. I'll be back tomorrow as well, and. I hope you guys have enjoyed these sessions that we've had this week with the 2 strategies being broken down every day. So a very valuable stuff being shared here. Thank you, everyone. I'll see you tomorrow. And take care, Samir and Victor.
Thank you, Jonatan, for all of what you're doing. I mean, that giveaway is massive by all accounts. Thank you, Jonatan.
But thank you. See you tomorrow. Bye.
All right, so I'm gonna switch to my screen. If that is yes, okay, all right. So this is the idea, right? It's very easy. That's what we talked about. We had I'm not gonna go all. I'm not gonna do the. I'm gonna explain it again. But it is basically using just one concept over and over again, different time frames, and using and stacking these odds, because that's what it is. When you have an order block that is being created, the chances that price will come back into it, let me mark it like that. Once it's created, the chances are that if price comes back to it within a certain number of candles, that you'll have a reaction. That reaction can be just a little drop, or it can be a whole, well, not the whole chart's moving, but the whole price going much lower. But you don't know that in advance, and that's beside the point. The point is that there is a reaction, there is a chance, even though it may not be 80% or 90%, only if you have one order block. But the chances are better than not when there is no order block there. And by using multiple time frames, and either you use 2 or 3 or whatever number you think is best, by using multiple time frames and overlaying them on top of another, you can then find these areas. So you have, for example, in this case, we had an H4 order block. The reason I picked this area as well is because it is also not a fresh order block, but it is an area that was already an order block that is no longer fresh, but it's still there. So we already had reason. That's stacking, although it's not a huge point. But it is something you will see that price will react to it again. So you have one order block, that's one area on one time frame, and you go into another time frame, not a random time frame, but a one that is between 4 and 6 times smaller than you don't have to begin at the H4. And then you look for fresh order blocks there as well. And both of these order blocks need to be active for the overlap to be valid. And in this case, I'm going to be moving these candles or arrow, I should say. You can see that we created another order block right here before. Once we created it, it created an area of interest, right? And price, what does price do after such an area? So this is the move up, the move down that creates the order block. It then goes back to retest and sometimes squeeze, as it did in this case. But a lot of time you will have a reaction. This is a much bigger reaction because we had eventually news, but the price action was already before the news came out, was setting up for a move down. Whether it actually happens, you never know. But that's what we do as traders. We recognize these probabilities. We look for the window of opportunity where the odds are stacked or are in our favor in any case. In this case, the overlap is this area. This is the area where we had overlap. So this is the area that builds the setup, right? When it's invalidated, you no longer trade that area, and as long as it is valid, even if it's squeezed, that's okay. As long as it's not invalidated, you can trade from this area because you have stacked order blocks in the same direction. You have alignment, as I call it, but it's basically just high time frames. And so you take a short from here, put your stop, whatever you think is adequate given the market condition. There was high news here, so I had to add extra distance for that accommodation to accommodate the volatility, and I target the next level, either this low or that low or something structural. This is the 5 minute. My targets are not based on the 5 minute. Something either this low or some structure you see to the left, which I didn't target this order block, which has already been mitigated. But that could be a great area to be targeting when price comes back to that area. You could expect some kind of a pushback, and by then you should be out already. So that's it. That's the area. And if you go to the lower time frames, if you go back, you would see that before the news came out, I was already doing this because that's the area that I'm expecting and looking for price to be reacting bearishly from. So hopefully that explains, gives a nice example of the a variation of the template, the framework of where you can use what I shared on Monday. Let's see. Carla missed Jonatan. Indeed, Carla. Indeed. I think it was something like a half a second after you left. Jonatan came on to do that massive giveaway, 10 accounts given away for free. That's amazing. I think the audience. I mean, who doesn't love a giveaway? All right, Muhaziru. That's quite a difficult name right there. Muhaziri Unus, asking how to enter. Check in the description of the YouTube stream. This one, hit the like and subscribe if you haven't done so, by the way, in the process, and you'll find the information, the instruction how you can participate, because we still have tomorrow and Friday another 20 accounts are given away to 20,000 bootcamp account. There are 20,000, which is already great, completely free as a gift to you guys for being so loyal to our stream. But these accounts they're scalable all the way to $4 million. I know it's a long way, and it's not something easy to achieve. It requires a lot of consistency and being really good at what you do, but it is possible. It is possible. It is within the realm of possibilities if you know what you're doing. All right. Let's take a look at the chat. Anything on your side, Samir, in terms of price action that is interesting for our viewers to watch? Or perhaps I should ask the viewers to come with perhaps ask us if there's any request for you guys where you want us to be looking at, maybe gold, maybe EU, maybe Bitcoin.
Let's do some analysis on gold, maybe, because a lot of people like gold. Let's do some analysis on gold. I can share my views, and then of course you can share your views. Okay, let's go to the 4 hour now. If you remember, guys, I think we was on the daily. Yeah, I remember on the live stream we was having this level marked up, and we was looking for buys from this level, but we was not that much confident that the price will hold. And how we will come to know if this is gonna hold? If we see some structure shift on the smaller time frame, which we saw here. This structure was broken, price closed above this, and then very beautiful consolidation, as you can see, and I am looking for buys. Price definitely can tap. Is this fair value gap? Okay, price tapped that area, yeah. So this order block was not tapped, this extreme one. So definitely bullish on gold. And now it comes to the entry can be, as you know, we missed this trendline breakout, you missed this retest. Now how can you take buys on this one? Let's see. Buys can be, let's go to the 1 hour. If we have any fair value gap, or we have any demand supply area, we do have a fair value gap. If you decide to take a buy right here, you have to keep your stop loss below this 200 EMA. What if it tested this as support? You have to give extra room to your trades. That's what I tell to everyone. Just keep a little bit extra room to your stop loss, and then yeah, it's just 1 to 1.4. It is not bad, risk to reward. If you have a decent amount of win rate doing these things, I think it is not bad to target a little bit less. It is okay. So gold is looking good for buys, as we have confirmed this level is holding. Remember, I told you, once it comes to your level, just wait for some time. As it was daily level, we have to wait couple of days or couple of hours. As it is daily level, let's say 1 or 2 days we waited. So we waited 1 or 2 days. Now price is shifting. Price is showing it wants to go up. Now we will execute. Okay, this is a good area to execute. So why it is a good area? Because this is also a resistance turning into a support. You can enter here. So I believe this is a good area. Let's keep a stop loss like this, and we can target, like, yeah, this is what I believe. Gold is bullish. And if you wanna, yeah, we have this fair value gap also, which was never tapped. So price definitely can use this point as liquidity. You can extend your target if you have a very impulsive move. Okay, so yeah, looking good for buys. Now it has confirmed that that level is holding. So now it is the time to execute on your plan. Okay, let's say my plan was, I want to go for buys. I waited for a couple of days. I waited for price to show me that it wants to go to the upside. It is showing some signs that it wants to go up from here. How can I say that? Price lost its impulsiveness here, and price is shifting its behavior to the upside. That's how I came to know that maybe we can go to the upside. Of course, it is not gonna, of course, it has to happen like 100% of the time. But if you do analysis like this, if you wait for your levels to hold, and let price show you that it wants to go in that direction, I think your probability can increase maybe by 5 to 10%. And it is a lot. If you talk about in percentage, you can make a decent change in your equity curve. Let's say your equity curve is like this, then if you have even 10% win rate, then maybe these dips can be a little bit less. Okay, so that is it. The plan for gold is looking good for buys, and this is a good area, and let's go. That is it. If you want me to
Beautiful.
do any more analysis,
I
you
will
can.
I will switch. Someone asked for a gold, which is what you just did. That's great.
Yeah.
Someone asking about the giveaways, if there are more this week. Let me check who it was. I think let me check here. We had El Funias, which is the same person. Thank you for your engagement, by the way. Yes, we have 10 accounts being given away on each weekday for the whole week of Black Friday week. So you still have 2 more days to be part of it. That is tomorrow and Friday. So don't miss your chance. Be part of the, check the, grab the opportunity to win, to have a chance to win some account. And even if you don't win, I think you're still a winner because you're trying to become better. You're doing
Yeah, exactly.
things, exposing yourself to traders, other traders like myself and Samir and others that will, you'll probably catch a trick or two, or maybe it's just a revelation or an insight, a way of dealing with something that could change, could improve your trading. Let's see what else we have here. there is actually one thing I wanted to show those who are watching us today. Before we kind of let's see. Someone asked about the. Let me see right here. All right, so I'm gonna go to my screen if that's okay with you, Samir.
Yeah, yeah.
Um,
Just yeah.
let me. I will do Bitcoin while you. If there are others in the chat that perhaps want to be taking that we take a look at the structures or do the technical analysis on them, let us know in the chat, and we will try to do it. Or maybe you have some other questions. Maybe you are, I don't know, you want to
Omer,
know.
Omer wants to, NQ, as I mentioned, let's wait for the NYSE open and let's see how the price behaves. If it is showing impulses to the upside, then we will look for buys, okay? If we will get impulses to the downside, you can look for sells. If it is impulse to the upside and impulse to the downside, then maybe it is a liquidity. Then you can act accordingly. But wait for the session and wait for something that you saw in past, like thousands of time, hundreds of time, okay? Then you can react on that. Let's wait for that impulses and then we can react on that. I don't know which side impulses are gonna be, so we have to wait.
Perfect.
Oil, I'll be
Yes.
covering that. Yeah, you
Yes,
can
I
cover
will.
gold.
I'll
Yeah.
go to Bitcoin, and then perhaps we'll
Yeah.
switch back to you for WTI. Let's take a look at Bitcoin. All right, so on the higher time frames, I'm not looking at the fundamentals, right? People are, you may have your ideas, and your ideas, I'm not saying they're not good or they're very good. I'm not saying anything about these fundamental advices or biases that one might have or the market might have. I'm just looking at price action. Without to me, everything else is good to know, but price action tells us, if the market is switching, that's what I want to be following, regardless of what everyone tells me or what everyone thinks about this pair, right? So on the higher, I do the top-down analysis on the higher time frame. If we go back, there were no bearish order block being created on this time frame, meaning the door to go higher prices. Those probabilities are quite good, right? At the top, you would expect some structure being created, even on the higher time frame. That didn't happen. Then doesn't mean that we're gonna come back and break it right away. It may take some time, who knows? But that tells us something, right? The sellers did come in, but they were not able to create these bearish structures. We are currently at a very nice demand area, which is this order block, bullish order block. It is after the seventh candle. Remember, take a look on Monday to check the framework by which I see and read price action and the market's intention. But we are in a great area here. I don't know. We don't know if price will react, what way it's gonna go, right? If this is going to react from this demand area or not, or perhaps even squeeze it and then change direction. But if the market is going to reverse, if the market is going to have a continuation, this is a very nice place to do so on this time frame. So, and one way to understand when to get what will be the sign that will happen, if it is going to happen, is to look for price action on the lower time frame, because before it does it on the monthly, it will start doing it on the lower time frame. You will see it on the daily, you will see it on the H4, and so on. And conversely, you'll also see it on the lower time frames, even on the hourly. And sooner or later, if it is going to reverse, you will start seeing it. It will start louder. It will start like a little voice, maybe on the H1, which will then become by price action and the structures and the creation of these patterns. It will the signal will be louder and louder until it is visible and evident for everyone. But you want to be getting in when it first starts. So basically, when you are on the H1, H4, and perhaps on the daily, to catch these bigger moves. If it is going to happen, we don't know if it's going to happen, right? But you want to be ready, just like Samir says. You don't know what's going to happen as a trader. You're just ready to react and to ride the wave if it reverses in this case, or if there is a breakout. You want to be there so you can hop on your board and ride the wave. So that's what we see. We have a fresh order block on the monthly being retested. So we should go to the weekly and start looking for possible indication of a reversal. And that may take, each candle being a week, that could take a long time. It doesn't have to happen right here. It can happen, months in advance, in the future from now. Let's take a look. Do we have something else? This is not a quasi, and not on the weekly in any case. So it is just a monthly structure, but not a weekly. This is not fresh anymore. So this weekly order block, even though it's there, it is not a fresh order block. Not fresh and not part of a quasi either. Let me check something though before I continue. If we have a pattern here, yes, we do. Is it valid? Yes. So we have 1, 2, and 3. Actually, this is an entry order block on the quasi, so it has multiple reasons. Not only being, it's on the weekly. It's not a fresh, but it is an entry order block on the weekly quasi. That's not the right template, so let me correct that. It's this one. So we have multiple reasons for this area to be respected. Even if I say respected, it doesn't mean the market is going to react right away. It may, but it can still do all kinds of things and perhaps even squeeze it and then come back and eventually move over, right? So manage your expectations accordingly, because this is the weekly. All right, so what I see is this is the simplest version of what I'm talking about, right? That is the quasi right there coming back, and this is the 50% retracement. You have 1, 2, and 3. You don't know which of the 3 it will be, but those are the 3 structures that if price is going to reverse, these are the likely places where the order block, the price will move from, right? So this is 1, which we're currently in, 2, and eventually the last one, which is that one. So we have a monthly reason, a weekly reason. That's starting to set up quite nicely. Let's go to the daily to see if we have something as well. All right, so we have a quasi here, very nice, put here. The quasi is as following. This is the head. Let's take a look. That's the head, and that's the established downtrend, right? You can see all the lower highs, etc. That takes us that this is the neckline. So let me mark that more organized. The neckline on that daily, let's mark it as such. There we go. Daily there, daily time frame, and this has been taken out already, and this one as well. So let me take that out. Okay, so we have this is the head neckline. That's the quasi. Let's mark it like that. Right, and then it goes all the way to the top, and then comes back below the 50% retracement. We have 1 and we have 2. Now in this case, it's quite wide, so it's not very helpful, but you can still use it. And it's about this order block on the, no, that's not the one. It's about this order block, which is on the daily. So you have an overlap of a monthly, a weekly, and a daily. But this order block gets if you take the daily, you have to put your stop all the way down here, which is not great. So what you can do, the overarching, the whole structure, the whole pattern gets invalidated here if the market closes there on that daily. The entry order block on the daily quasi will be invalidated, but you can still see that the market is creating bullish structures. It may be the beginning of the reversal. We don't know that. And it may not be, right? We don't know that. You don't know that in the beginning, but you take your chances where the market tells you there is a possibility. So you have a fresh order block, not a fresh, let me correct that. we have an entry order block on the daily quasi order block, quasi pattern, which is within the weekly, which is also within the monthly. So that's a great area to be in. And price comes to this area, this order block, and let's see what it does. Comes to the order block, and let's zoom in. What does price? What is the reaction of price as soon as it reaches this area? This blue shaded, it creates another order block, which is on the daily time frame, a fresh one, right? That's the order block, and we are currently testing it. So to me, this is the first area that I want to be looking for a long. Just using this is this with no overlap yet. This is just the daily time frame. Let me mark that with a. I don't think it will show. No, it will not show. All right, so that order block will be the area that you want to be going to the lower time frame to find perhaps the reversal patterns within that order block on the lower time frame. So let's go here on the lower time frame and see if you can spot when price is already coming in, if there is a quasi, and that's not the case on the H4. So our analysis stops there. However, in terms of quasi, however, you can clearly see that we do have an outside bar, which is the strongest form of a fresh order block, where price did it touch it? Yes, it did. Look at that. Isn't that a beauty? Look at that. Look at that. I'm not making this up. Look at that. Look at that little thing. It's 86 and this is 97. So $11 on Bitcoin, which is nothing. Comes back and it reacts. So that looks very, very interesting and it creates another order block here on the H4, which is fresh, meaning that's something we can use as well. And let's go to the lower time frames. The more I see this, the more I like it. All right, so you have an H4, which was a quasi, yes. I didn't trade this, but I could have traded it perhaps, depending if it's on the lower time frame, if it had been, it had signaled, because I don't trade the H4, I trade the minutes to get in. But this is the H4, and we have a fresh order block here. I don't like when you have multiple structures and they're just overlapping, because that makes the area of interest way, way too large. But let's go to the minutes to see what we have here. Let's take a look. That would be considered the head, left shoulder. That gives us this is the top of the structure. And let's take a look at that reversal. The neckline is here on the 5 minute in any case. There, and let's take a look at the possible structures. That one would be, this one has been taken out already, so that's not there anymore. We have one here. As I'm doing this, guys, don't forget to hit the like button, subscribe to the channel. I know we keep saying it, but it's for a good reason. It's so we can reach as many as possible with those reaction. Right? Look at that reaction. This one has been invalidated already with this close. So this order block is no longer useful, but you can see how the market comes to this order block, reacts to that. You can trade that. Obviously you can. And you can see the order block. Look at that. Look at that. Isn't that a beauty? What do you guys say? Isn't that a beauty? This is the quasi. There, right? Goes all the way here. And it comes back to one, has a reaction. Comes to the last one, and there you go. That's the quasi at play. That's beauty. That's a beauty indeed. All right, so that's Bitcoin. I hope you guys like it. I did live analysis. I'm not trading Bitcoin, to be fair, but these patterns, they happen on every asset. one more than others, and there are nuances, there are different stats, they don't react exactly the same way. Some are more volatile than others. And what I do is I look for multiple time frames as I go down, get in, and I target something that makes sense on a higher time frame. So if I get on the 5 minute, I would be targeting to begin with something on the 1 hour, and the first one on the 1 hour is within that structure, which that would be my first target, or perhaps the top of this pattern, which would be this right here. As you can see, the market is going very nicely to these areas as we're speaking. Let me go to the 1 minute. There you go, price going very beautifully to that the level. We'll have to see if it actually goes there, but this is how it looks. This is exactly how I trade all the time, reacting, looking, spotting these reversal pattern happening live, and you need to be there. I wasn't trading the Bitcoin, but you need to be there, and perhaps you're gonna be, depending on your how your rules are, whether you put your stop here, you get an entry here, and you get another entry there, and you may have rules, you say 1 or 2 or 3 maximum trades into the pattern, or you may say, I'm just going to be taking the first one, depending on what their triggers are, and you're going to be putting your TP there, which is based on the pattern. And because this is a much bigger quasi, you can even leave something open for something that makes sense on the daily as well, because on the daily time frame, what is the first structure that comes to mind? That's this one, right? That's the first structure on the daily. So if the daily reverses and closes up here, it's likely that's going to go there before anything else happens. I hope that is clear to everyone what I just did there, because I know I say it myself, but that kind of understanding of the market is gold. To know when to target the higher time frame and when not to. That's a game changer, has been a game changer for me in trading. So that's it on Bitcoin. I hope that's helpful. Let's check the let me check the Nibedita Haloi. Hi there. Environment has become very serious. I'm not sure what you mean, but perhaps yes. I'm not sure. You mean in here, in the stream, or you mean on the news? What is it? Let us know. Nibidita, Haloi, thank you for watching. Don't forget to hit the like button. We have Peter saying possible shorts coming in, multiple hourly structures online, currently retesting. Thank you, Peter. Thank you, Peter, for letting us know that. Samir, I think that now is a good moment as any for you to take a look at the
Sorry, but I already took a buy and price, and moved in my favor, and I closed it.
No
I'm sorry,
problem. No need to apologize, Samir. I'm sure if you go through the reasons why you took the trade, and you show the audience what you did, and
definitely.
what made you close the trade. Did it hit target? Was it your active management that kicked in
Yeah,
and said, this is the place I need to get out because of X reason? As long as you explain what you did and why, I'm sure the audience will appreciate it, even if the trade is already closed.
definitely. You can switch to my screen, then I will love
Yes.
to explain our audience. Okay, as I mentioned, we was in a very good consolidation area, and look at this nature. What price is doing? Impulse correction, impulse, big correction. Then I was expecting an impulse to the upside. To where? Do we have any liquidity areas? Let me see. Let me show you guys. Let's go to the 1 hour. Okay, this high was a very good high in my eyes, and as I mentioned, we was having a couple of fair value gaps which was untested. So this was running behind my back, behind my mind, or in my mind, that we can target this or we can potentially go to these fair value gaps. So look how this candle closed very good, in a very kind of a bullish engulfing, remember, I always tell you guys, you have to see what price is giving you. You have to follow the footsteps what price is giving you. Now going to the 15-minute, market opens, retesting this fair value gap. As you can see, little fair value gap, not that, retesting the fair value gap. Going to the 5-minute, you can see it, EMS to the upside. I have my confirmation that buys make sense. Look at this pattern breakout, retesting this pattern. So I took my trade when price closed like this bullish, somewhere around here, and my stop loss was below these levels, and I was targeting 1 to 1. I closed it a bit early because of this level, but my 1 to 1 would have been it. Yeah.
So you're sitting on a bunch of cash again, Sam. Bunch of profit. We can see your smile there. Don't hide your smile.
Took this to the Fivers account as well. Just have to complete one more profitable day, then I'm eligible to request the payout. I would love to do that live here with our viewers. So stay tuned, and you will see me request the payout live here, and I will give you the updates also. So how it is going. Whatever update it is, I will be happy to share with you guys. So very simple analysis. I know this kind of thing. A very basic thing it is, man. Very basic thing. Just impulse correction, some patterns, some retest, some EMAs, little bit of understanding of liquidity. So where we can target, what we can, where the potential move can be. What is the win ratio for you if you're going for 1 to 1? It depends. Sometimes it is 70%, 60%, 80%. Right now we are trending very good. I'm in a very good winning streak, as I mentioned yesterday. So yeah, let's see. It depends. This question is very dynamic also. Sometimes a trader can face a losing streak. So if you want to go with the yearly win rate, then I think every trader somewhere will have 60% win rate here and there. If you want to consider the monthly wise, it really depends. 60-70% win rate if you're going with 1 to 1s.
What I've noticed that it makes a lot of sense, Amir, to when people ask me about a win rate, and of course people expect a fixed number like
Yeah.
41% or 58%, but the reality is that it fluctuates, and actually to give people a good understanding, it is a good idea to talk about in ranges. It is between, let's say in my case, it is between around 30 up to 44. That's my win rate. That's where I fluctuate, and it depends on the market condition. Depends on a lot of things. Not only not also including about my execution. Even though I want to be as perfect as possible, we're not perfect. We're gonna be missing trades, or we're gonna be not executing it the best way, and that's gonna hit our win rate as well. But giving it in ranges gives it tells everyone right away that it's not just one number. It's actually a range where it fluctuates. Sometimes in your case, sometimes it's 70%, sometimes it's lower, sometimes it's higher.
Yeah, exactly.
You're talking about, you're showing here a retest of a broken trend line, which looks
Yeah.
very, very beautiful here. Would you like to explain that to us? What is it that you're trying to show us, and how to use it, and
Okay.
what does it tell us?
So let me explain you with the step-by-step approach what I see, or how I approach the markets. First, very basic thing: what is the market direction, or where the market is going, or where the strong momentum is. Strong momentum part is a very strong thing. Okay, so strong momentum is of course to the upside. Okay, and now we are correcting. Strong momentum is to the upside. Keep that back in the back of your mind. And strong momentum is to the upside. Now you know that. Now you will give preference to buys. okay, you will look for buy setup. 70% preference should be given to buying setup, because we are, impulses are to the upside. 30% here and there, if something changes, let's say if market impulses to the downside, then you can, take benefits of that also, you know but 70% of the preference will be given to the upside move. Why? Because impulses are to the upside. Now I do like to see some corrections, and when the session is there, impulses are gonna be there. In which side, I don't know, upside, downside, impulses are gonna be there. Your job is to find where that impulse is gonna be, and how you can identify that with some corrections, with some impulsive natures that has happened in past, with some EMAs, with some fair value gaps, with some closes that is happening in your favor. So my bias was, I'm giving preference to buys. My 70% weightage is for the buys. So once we are going up, so now I have to, count my points, count my confluences, how I can enter now. So my first confluence was this fair value gap. Second confluence was this trend line break, a retest of that. Third confluence was price testing this 50 EMA. Now fourth confluence was this big bullish candle. Okay, and the anticipation was the liquidity point might be there. So this high was a very good high. Okay, look at this high. Price just dumped from here. So this maybe can be a liquidity point. I don't want to be targeting past this area. So this was my target. Very simple. Let me explain you my yesterday's trade also. If you see where the impulses are, impulse to the upside, impulse to the upside, correction. Okay, now weightage is more to the upside, so I will look for buying setups. Okay, so we broke the trend line, and I think I bought on the live. Yeah, yesterday also I took a trade here. Yeah, I took this trade, I believe, somewhere around here.
I remember you were smiling from ear to ear.
Yeah, my stop loss was, I think I was keeping it below these lows. I give extra room to my stop loss, somewhere around here, and I was targeting 1 to 1. It just hit my take profit in a couple of minutes. Once session opened, it just boomed.
It
So
didn't
that is
even
the
give it. Didn't even give you a chance to see it.
yeah. I'm like, wow. Okay,
That's
let's 100.
that's a,
I think
That's amazing. Actually, before you go, I would like to go back, show, if you don't mind, the US 30, which is
US.
US 30, where you took the trade, right? That's the trade. Okay.
Mhm.
That's what time frame are you? On the 1 minute. Okay. I'm gonna do the same. I'm gonna switch to mine, because I'm gonna show people that a lot of the times it doesn't really matter what tools you use, as long as you know how to use them. They will
Yeah.
very often will give you the same signal, slightly different.
Mhm.
It's the same move you're trying to catch. Sometimes it may be earlier, maybe later, maybe a different stop loss. All of that, there are differences, but you're actually catching the same move. And what I try to say about that is the following. I'm going to switch to mine just shortly, before you guys can continue to enjoy Samir's analysis and breakdown of how he traded. So this is the 1 hour on the same thing as Samir was. This is the same asset as US 30, and the move that Samir was talking about is, of course, this is the same same asset and
Yeah.
same time frame. This is the let me make that a line. This is on something like that, right? This is the break, trend line break, and prices came back for a retest, right? It's actually very, very precise how price came back and retested that level, right? Um, and you just mentioned a couple of things: the direction of the momentum,
Yeah,
the
exactly. It's very important.
break and retest of the trend line. You
Mhm.
mentioned the 50 EMA retest, and you
Fair value
mentioned
gap.
the and the fair value gaps. Plus, you mentioned the engulfing candle or outside bar that was visible on the 15, I think, or some other time frame. And I don't use any of those. However, I haven't used them in the past, and I could use them.
Yeah.
I don't use them, but I would have entered on the same bar or the same area roughly where you have entered with the same direction using other concepts. And I'll show you guys what I mean. If you look at this on some time frame, what you will see is a quasi, right? So you have a downtrend that is broken. If you do that on the lower time frames, let's make that without using trend lines or EMAs, which nothing wrong with that. I've used them a long time. If I'm interested in getting long here and I apply the quasis, my quasi would have me enter right here. Let me show you. This would be the neckline on this time frame. So I would be waiting for price. As price is going down, it creates that, and I would consider this the head, that the left shoulder, and this is then the, let me mark that. Yes, that would be the, the downtrend. It breaks it, and before it leaves, before it actually goes, it comes back and moves away. Now this, before the actual move happens, the impulse, there is a quasi on the lower time frames that would have triggered me getting into the trade. If I mark this before the impulse happened, before the open, what I see is that price came back to where? An order block, an entry order block on the quasi, which would be, I would be waiting there, getting in depending on other factors, but that would be the structure. If you look below, there isn't anything all the way to the head. The head is the next structure, but it never came there. I didn't trade this, right? But this is just to illustrate that it doesn't really matter. You don't have to use exactly the tools that we use or other people are using. Just have to know to use the tools that you can use the best to your ability. Have the data, train, and it's okay. It's okay if you're using different things as long as you know what to do. That's the quasi, that's the neckline. Price breaks it, that breaks the neckline, and it comes back to an area that makes sense to me, which is that 3-minute entry order block. And you can see how it does not break it, squeeze it for a tiny little bit, and then moves in the opposite direction. And that's exactly where I would be. The reaction that we get from here would be actually what I would be getting in. And I think that would probably be very close to where you entered, with the same direction, using completely different tools. And that's exactly what I wanted to show.
Yeah,
So
that
let's
is a
go.
big trading, and every strategy works, and you can use different concepts to get involved in the same move. So I think it is okay, no matter what strategy you have, just keep few things in check. That is it, and the rest is the market experience. You should have the market experience. You should trade live. Then only things will click you. You cannot backtest it, and you cannot say that, oh, I have resulted, I have made this much amount in the backtesting session. The live testing is the most important thing. Just come to the charts, see it happening with your eyes. You will do the mistakes, you will realize few things, you will know what not to do. Then only it is going to click for you. Okay, there is no cheat code. You have to spend hours or hours. You have to give that time to the market. I'm saying the live testing with the clear intention of following the plan and all the things. You are keeping everything in check. That will be counted. If you are making mistakes, if you are over risking, you're over leveraging, and you are following different strategies, I don't know, one thing you are entering buy and other moment you are entering sell, that time will not count. In my opinion, it will not put anything in your learning curve. Come with a clear intention that I want to do this, I want to follow my plan, and do that. In that plan you will make mistakes. It is okay. Some days you can maybe you forget to see anything in your plan. It is okay. That kind of mistake is okay. But if the mistake is getting out of the hand, that is not okay. So make the mistake, you're gonna make mistake, okay? So that mistake should be manageable. That's I say almost in every session, you know. I also make mistake, but I try to make a mistake that I can manage in future, that I can manage next day, that I can manage next week. So try to be that kind of trader, okay? Don't try to be, you know. And yesterday I was posting on Instagram, on my, yeah, on Instagram, that one trade or one win is not gonna, you know, set you up for life. So why are you, you know, having that FOMO or anything like that? That one trade is gonna do nothing good for you. It is just adding in your, you know, in your journey, in your learning curve, in your PNL. It is not gonna set you up for life. It is not gonna make you millions of dollars. So why you having that mindset that I need to take this trade, that price is going up, up, up? Why, you know, why you have that FOMO when that particular trade is not gonna do any good for you? It will just add little bit percent here and there in your account. Other than that, I don't think so it is gonna do any good for you. So take this thing, you know, slowly, then only it is gonna, you know, work out for you. With that being said, we almost are at the end of our live stream, and it was very awesome live stream, and thank you to you guys. You have came here, shown us support from day one, and once again, congratulations to the winners. If you didn't win, don't worry, we have a couple of more giveaways in coming future. And don't forget to, you know, buy your account if you haven't bought it yet with the fibers, because we have 15% off right now. Black Friday sale is on, so make sure you take full benefit of that.
Yes, as we are watching price, there is a quasi on the 5 minute, and it is not holding so far. We'll have to be patient. That's perfectly fine. You will not be winning every trade. That's not what trading is. Trading is just, you know, knowing where to enter and just let the market play out. Let the probabilities play out. You will win some, you will lose some, but in the process, if you did your homework well, you will end up on the winning. So we'll have to wait for this trade 3 more minutes to see if it closes above that order block. And another thing you could do is watch the lower time frame on the 1 minute and see if you can see. Remember what we talked about, if you gotta, before you see something on a higher time frame, you will see it on the lower time frame, because the market is fractal. So if the 5 minute is going to react from here and go lower, you will be able to see it or start seeing indications of that on the 1 minute, the 2 minute, and so on. So if you go to the 1 minute, do you see reaction or indication that the market wants to reverse? I don't know about you, I don't see it, right? The market is very strong, it's very impulsive, and it's going through that level on the 1 minute like nothing. Chances are the 5 minute eventually will fail as well. So switching between the time frames to help you identify when is the moment, reading price action in the moment, is to me what a trader is. And you're reacting on facts as the market is doing what it should be doing. If it is going to go down, there's no way it can go down without breaking structure. It's not going to happen. It's impossible. It needs to break these structures to go down. So if you go to the 1 minute, the 2, the 3, etc., and see it start breaking, you know there is that chance opening up. And if it doesn't, you know as well, it's likely not going to happen. So that's it. I just wanted to give you guys that. Samir, thank you for being so open about your experience. And we know that there's a huge fan base for the experience that you're sharing, and we here are very grateful for having you with us, Samir. So thank you, everyone. There is in about 41 minutes another session on the Discord community you do not want to miss. So jump on the Discord server, and to do that, it's completely free. You have to have an account with the Fivers though, and that is by go onto the dashboard if you don't know yet. Left lower corner, there will be an icon there to get into our lovely community, where you will have meet others, friends, and other people who are just wonderful. Come in and experience our community. So that's it on for today. Samir, thank you. Any last words before we go?
That is it. Thank you,
Perfect.
guys. Stay safe. Don't overtrade. That is it. I say it on every stream. With that being said, take care. Bye bye. See you in the next stream.
Bye bye.